What's up, Tasty Nation? Welcome to the show. Happy Friday. It is July 31st, almost August. Kind of crazy to say, but Amazon. Oh my God. Oh my God. Happy Friday. Hope you're awake now. Amazon and Apple reported earnings after the close yesterday. Amazon is up and Apple is down. Microsoft and Meta had a divergence as well. Meta's down, Microsoft's up. And it's been a crazy day. And now I'm awake, Jermal. How you doing?
I'm doing fantastic. We have no shortage of things to talk about. I mean, it's been a crazy week. We had the Fed. We had these earnings, as you mentioned, and seeing the divergence in them has been fascinating. We had, obviously still hot takes from the Iran war. We had a yen intervention yesterday, which I can't wait to talk to Chris Vecchio about. That was wild. Big move in the yen, if you saw that. And it's just a crazy day. Speaking of talking to Chris Vecchio, let's pull up the run of show today. It's going to be quite action-packed as usual. Let's do that.
Yeah, 100%. And join us on the YouTube channel if you haven't already. We're streaming live there.
Yes, we are.
We will have plenty of time to take your questions, trade ideas, and whatever you've got to say. So yeah, let us know.
We got Chris Vecchio starting at 7:35 a.m. Central Time with news and stuff to watch. Can't wait to, like I said, talk to him about that intervention. 8 a.m. Morning Movers with Gus. 8:15 a.m. Central Time. We got Liz Deerking coming on with all of her great insights. 8:30 we'll be doing the opening bell. I'm sure there's going to be lots to trade on the open. The last couple of days there has been. Again, we've talked so much about, like, Mike and I don't typically trade on the open, but when you got the type of market that you've had recently, yeah, you trade a little bit on the open. 9:20 Central, we got Tim Knight with his charts. We got 9:30 a.m. Central Time, a market measure from the research team. And then Chris and Liz take over with Confirm and Send, and Gus and Errol at 10:30 a.m. Central Time with Risk and Reward. And don't forget, Trade of the Day begins at 11:30 a.m. We've been hitting you guys with all kinds of trades. Myself, Mike, and Errol will bring a trade to you that you can execute immediately. So check that out.
And they've all been bangers.
They actually have.
They've been good. And these markets are chopping around. It's been crazy, but we've got an elephant in the room in this NDX put butterfly that's going to open right at the money on the long put at 28.2 probably. It feels like this market might sell off a little bit. It feels like it's a fader's day. What do you think?
Right? I feel like that. I do feel like that. It's interesting because they held this level mostly overnight, and it's only over the last 20 minutes or so. We've 20 to 30 minutes or so we've been seeing selling.
Yeah. And we were much stronger, to your point, and now we're kind of fading. Bitcoin's down 1,200, ETH down 55, E-minis up 13, NASDAQ up 200. But yeah, crazy move in Amazon. Absolutely insane move in Amazon, up 30 points. Just jumped this channel here, and now we're back up above 260 on its way to wherever it's going to go. But Apple, we kind of had this feeling that we might see a slide in Apple after this big run up. And this was one of those companies where it's like Amazon, at least and Amazon had the pre-earnings move to the upside. Even before the market opened yesterday, it was up like 10 points. So it was a sympathy move with Microsoft. So that gave us confidence in placing an upside trade in Amazon. But Apple was the opposite side of the coin. Apple was down yesterday in a day where you had the NASDAQ up almost 1,000 points. So that was telling to me. So I didn't place any trade in Apple, but I'm not surprised to see it take a little hit to the downside here.
Yeah, Apple being down, that was actually one of my trade of the days a couple of days ago. And I did a put diagonal just from the standpoint that, this thing was up here, and I think a lot of the news had already been baked in. It had nowhere to go but down on earnings. And it just so turned out that, while they did obviously well on earnings, they know how to make money. Apparently people are disappointed with the revenue from services more than anything. And so long story short, I think they're just not innovating, Mike. Like, honestly, I mean, we've been saying this for a while with them. There's no real new product. It's the same old stuff. So I think that's kind of the thing that's happening there. And then with Amazon, I tell you, Amazon is so interesting It's the first company that I can think of in this earnings cycle that had a really negative cash flow, negative cash flow, and it's up because everybody is not worried about their spending on AI. They're just like, maybe whatever they're spending on AI is going to improve AWS, which of course made a gang of money. So that's the divergence right there. I don't know if you ended up getting off calendars. I got some calendars off in here yesterday, so we'll see how this plays out.
I did a call crab trade. So I had the
you know what? I formed that. That's right. I did that with you too. I'm tripping.
Nice. Yeah, the 240, 255, 270. That was the trade that I had. So we'll be all right. I mean, it's 5 points above the short options, which is right where the sweet spot is with 0 days on the short. So I would imagine this will be a $300 winner, something like that on the open. But I'm very intrigued to see what this NDX butterfly opens at because we're up 200 points in the Nasdaq futures right now. So that'll bring us to like 28.3 in the NDX, and we're at 28.2 in this long option. This long option is going to be worth, I don't know, $7,000, $8,000. I don't even know. I don't know. It closed at 17 grand, so it's going to be trading for something crazy, and then these two shorts are going to be further out of the money. So it's really going to depend on how much value is coming out of this 0 day, two options that are going to be 400 points out of the money. And that will really determine the profitability because the long option is going to be the asset in this trade when we open up at like 28.3.
I got to ask you more about that Amazon too, but before we get too excited, let's bring Chris Vecchio in here because we're already jacked up for this day. We're about to forget this man.
Mr. Vecchio,
I'm jacked up for today.
We've been talking this morning. How could you forget about me? You're like the last person I spoke to on Teams.
I didn't forget about you. I just wanted Mike. You know, he got going. We're so excited about this split butterfly, dude. Like it's exciting. It's exciting. It could be one of our biggest trades ever.
I'm crossing my fingers the market gets pinned here.
I think
or whatever outcome that you guys are hoping for.
A little lower, but yeah. And it could play
That's
out.
what I meant to say.
Sliding, yeah.
Yeah.
That's what I meant.
It feels like a day where we'll slide into the red. I think it feels like one of those days. Because we had a mixed bag with Amazon and Apple. I think if we had Apple up 30 points and Amazon up 30 points, we would see a different open, obviously. But I think the divergence that's continuing in that space is creating some volatility. And we're sliding. We've already slid down like 20, 30 points in the E-mini. So here's to hoping.
Chris, we got so many things to talk to you about, man. But what are you seeing so far? What are you looking at this morning?
Amazon is just like Microsoft. It gave another clean read for the market on how hyperscalers can monetize demand. AWS grew 37%. So even though their CapEx guidance moved up a little bit, the market's clearly happy with how they're proving you can make money on spending on all this stuff. So that's the really good news here. You mentioned this potential for a red close here today. We do have the Iran war still going on right now. Oil is up around 2% this morning, and that's not something that we can or should forget about. So having another Friday where we de-risk and traders lighten their book going into the weekend, cognizant of and respecting the possibility of a gap come Sunday night, I don't think would be obscene given the lay of the land here. But I mean, Apple's report, it's a supply problem right now. They're saying that their input costs are just going up. So do they have the pricing power to pass on those costs to their consumers? Probably. It's Apple after all. So we'll see how this all shakes out.
It's interesting you say a red close on Friday. I just looked. We had a red close except for the 10th. We had a red close every day this month. Every Friday this month, I meant.
It felt like every day this month.
Yeah, I know, right? Apple, man, they ain't doing nothing new, man. They ain't doing nothing new.
If there's a concern here, right? Not that seasonality was any sort of good guide for the month of July, of course, but what happens when you have a red June and a red July back to back? That's actually pretty rare. Assuming we don't rally a whole ton here today, I don't see like a 6% gain coming across the board, Mike. It's probably going to be a red June and July overall. So how many times has it happened before? Going back to 1950, it's happened 12 other times. The average return for the S&P 500 for the rest of the year is minus 2.5%, with 8 of those 12 times finishing the year in the red. So Not exactly a good omen, but seasonality hasn't exactly been the thing to lean on. Pick your fighter.
Yeah,
Yeah,
I think
sure.
I think we'll see. I would be surprised if we ripped higher, like significantly higher here. I think it'll be kind of an inside day, but for our sake, down day would be just magnificent. Be crazy. But yeah, crude oil up $1.50 here, almost 2%, like you said. And as always, just looking at the curve and the slope of the curve, you can still see we got about a 4-point backwardation here between the current contract and the next month, and then another 3 points there. So that's held pretty steady for the last week or so, about 4 or 5 points in this backwardation. Hasn't really gone away, hasn't really increased at all, which just speaks to the staying power of what's going on over there.
It does. I mean, I think if you look at the volatility curve right now, it's clearly telling you that we're worried about what's coming up in the short term. But I'm looking out like the VIX 3-month spread, for example, VIX 3M minus the VIX. That's not exactly screaming any sort of concern. It's a 2.28 spread right now. That's fairly, good.
Yeah.
For lack of a better phrase, that seems normal from the way that I've been following this for a number of years.
Yeah, this the VIX volatility curve here being back to like a point contango between the Q and the U. Yesterday we were kind of flat, or the day before we were kind of flat. So obviously a massive rip in the equity market will help steepen that contango curve. But I think we're still seeing the signs of nothing to see here and a compressed VIX at 17 and a quarter.
I mean, Jermal, if we're looking at the compressed VIX, there is still part of me that says this time of the year is when the volatility tends to get a little hairy again, right? We have that window in February and March where seemingly something always bad happens. Signature Bank goes down into March. Bear Stearns goes down into March. The taper tantrum from the Fed starts with a Bernanke question that starts in March. Okay, so it feels like March is always a bad time of the year. But also then you have August, September. For volatility here for the forthcoming month, what do we have here? Show me the 10-year return. And the 10-year return for volatility is for, I don't want to quote it in percentage terms, but vol has been up by 3.7%. The VIX has been up by 3.7% in August. It's been up 7.76% in September. It's been up 13.74% in October over the past decade. So my bias is, and we saw a dip below 15 earlier this month. I think we had a low of a 1496 in the VIX right in that first trading week of July. If we see some pullbacks in vol into that 15 handle again, just given where we are in the calendar, it would seem prudent that it's not necessarily like let's just buy upside and go fishing, which is something I love to do. It's more like let's use this opportunity to get some downside protection, maybe trim some winners, and just, again, being cognizant of the fact that this is the window when people tend to go a little crazy. And there's a human reason for that, gentlemen. All the important people who are the smart folks who actually know how to trade and make decisions, they go on vacation in a few weeks' time. And I mean this so sincerely. Junior traders run the desks in the second 2 week of August across New York, London, most of the financial world. And the average trading age on a desk right now at a bank is about 6.5 years, which means we're people who haven't traded through the dot-com bubble, people who didn't trade through the global financial crisis, they're about to forget what it was like trading through COVID. So let's just be mindful of the group of people who have their hands on the steering wheels for the next few weeks.
Yeah,
those Hamptons are calling, baby. Those Hamptons are calling.
Here's the thing.
I'll be out there for the next 3 weeks.
You notice how he didn't say Chicago, right, Mike? You notice that? I'm going to let it go. I'm going to let it go this time. But that's cool. We got some great graphics. Let's pull these up. Let's start with the Big Tech earnings scorecard, because this is a good one, and it's kind of fascinating, right? I mean, I'm not sure of the last time we saw this much divergence in a couple of these Mag 7 names, but there it is, right? The M's and the A's that we had this week. That's pretty self-explanatory. Let's go to that big tech capex though. That's the one. Amazon up 200%, Microsoft up 190%, Alphabet up 180%, Meta up 135%. Capex is exploding. I mean,
and what's fascinating here is the companies that had the biggest capex guidance expansions are the ones whose stocks did the best, and that just was that was certainly not on my bingo card.
But is they also because they have cloud?
Because they have cloud and they can monetize it. right? It's not all week long. My expression has been proof of work or proof of more work. And you have proof of work from Amazon and Microsoft. They're able to monetize their spending. It's a game changer. That plus Leo and the semiconductor volume the other day. I mean, I can't get this out of my head. Like, the market was clearly hunting for Leo Aschenbrenner, right?
We're coming to that. Hold on. We're coming to that. Let's go to Chevron first. Let's look at Chevron. We're coming to that in a second. No, that's why I'm leaving that last.
I guess we can go to Chevron.
I know. Hey, I don't want to waste these, man. These are nice. I don't want to waste these. Chevron earnings, I don't even know if it's moving that much on earnings. And the one thing I did notice, both of these, go to Exxon next. They basically, I mean, they it seems like they quoted earnings with or without the straight, right? Is that what they're going to have to do going forward? It would seem so. You brought up the Iran war this morning, and nobody care about that damn war, but you brought it up. I'm going to bring up Chevron and Exxon.
Well, there's a totally different profile of the companies within the energy space that are doing well right now. TP and I were covering this yesterday, or was it the day before? But there's oil services companies, and then there are the refiners right now. Right. Yep. So you go to Halliburton, XOM, CVX. It's a different bucket than a name like PSX, Phillips 66, if you wanted to put that up on the screen, or something like Marathon Petroleum, MPC, or like a Valero VLO. Those are all refiners. Yep. So the ETFs aren't great ways to play this. The ETF for the refiner, you think of XLE, OIH, XOP, right? But the refiners are in an ETF called CRAC. CRAK, because the crack spread, if you will. And you can just see how much stronger this chart has been than like the Exxon Mobils of the world, so to speak. And this is really the important point about the supply issues in the short term. We are running down our inventories, not just of oil itself, but of refined products, jet fuel, distillates, gasoline, diesel, etc. And so, yeah, if the marginal ship is making its way through the Strait of Hormuz, maybe crude prices can be down, but the inputs are obviously waning and diminishing. So this has been the stronger pocket of the energy market right now. The refiners are the place to play. They have the stronger balance sheets. And like Schlumberger is a good example. They had to announce they can't do like 10% of their extraction right now because it's tied up in the Middle East conflict. So if you can't get the oil out of the ground, who cares if it's trading at $100 a barrel?
I was offered a job at Schlumberger. I didn't want to go. It's a story for another time. Yeah. Back when I used to be an engineer. Big tech CapEx arms race. Let's pull that one up. That's a pretty good chart. Again, kind of gets to what we were talking about earlier with the spending here.
Free cash flow.
Mm-hmm. Yeah. Mm-hmm. Yeah, man. There it is. All in one bag.
Yeah. That's not good.
If you're an equity holder, how do you get paid out through retained earnings? How do you make your money? You need free cash flow at the end of the day. So what's the equity worth for a Meta if it's not going to have any free cash flow and it's not going to have a legitimate AI offering? Google, on the other hand, or I'll go to Amazon. Amazon's free cash flow dips negative, but they're clearly showing how they can monetize it. So a temporary bump in the road. The narrative here is really strong because if the numbers themselves don't tell the full story. You couldn't pick the winners and losers off this chart. If you said, oh, who had the biggest CapEx and lowest free cash flow, they must have had the worst earnings.
Yeah, right.
That was a wrong assumption.
That's not the case. Right?
And that was my own assumption. Like I'm in a Super Bowl on Amazon, so I'm not too pissed off about this rally despite these numbers. But but like this goes to show, like, don't always update your assumptions of priors. When you get evidence in your face that your beliefs are wrong, change them, because the goal here is to make money, not soothe our little egos.
Well, we all know somebody who loved to say, "I could give you the numbers ahead of time, and you still wouldn't be wrong." You would still be wrong. All right,
forgotten.
Let's get to the star here. Let's get to the Situational Awareness Fund graphic, because obviously this is the thing that a lot of people are talking about over the last couple of days.
SALP.
Take it away, Chris.
I suppose. I mean, here's the interesting part about this rally that came yesterday. You think that it's a semiconductor rally. It's not a semiconductor rally. It's a Leo Aschenbrenner rally. Everything that was in his 13F was up 15 to 25% during yesterday's session. It's not unusual for the market to hunt for struggling names, if you will. This is what happened to long-term capital management in the late 90s when they were going down. All their positions seemingly got obliterated, and as soon as they got knocked out of the market, things started to stabilize. Look up when Sam Bankman-Fried went down in November of 22 that was. Mm-hmm. I remember that because I was listening to Bloomberg Radio while I was driving by my local fire station, and it's like, Sam Bankman, FTX down. It's like, what are you talking about? What are you talking about, FTX down? And sure enough, what day did Bitcoin bottom? The day that FTX went down.
Yep.
So earlier this week, when we had this gigantic volume candle, we had a really, I will call it prescient interview with Helene Meisler here on the network, in which she discussed what conditions are you looking for a panic low or a bottom in names. And she specifically highlighted the washout that we saw in the volumes from a name in SMH. She described it as like fence sitting, if you will. During trading, there are some people who are bulls on one side of the fence. There are some people who are bears, but there's a whole lot of market participants who just sit on the fence. And when you see that kind of volume, it's basically everyone jumping off the fence to one side. There's no longer any fence sitters. And so you get this news flow this week. Citadel picks up their book. We have now a Fed meeting in the back pocket. We have these nice earnings, and what happens? Semiconductors are bottoming, so to speak. I don't want to discount that. This is not something unusual. The market likes to do these things. I'm not to say that they were going back to all-time highs, but as someone who has been long semiconductors and semi-caps and various things through the drawdown and now back to break even on a whole bunch of them, it does give me pause when you see a whale and an over-leveraged whale taken out of the market, and also all these Koreans who are over-leveraged too. So the leverage clearly has been cleared out now. But pick a name out of this hat, guys. Iron, that was up around 20% yesterday.
Which
Hive,
shocked
that was
me.
up.
I didn't even know that until the end of the day. I was short this put. I was like, wait, what?
Right, and it wasn't just crypto. Like Coinbase was only up 2.25%. You go to Hive or Riot, which were Leo holdings, they were up 15 to 20. So there is a really interesting dynamic playing out here. And as someone who's read through all these market wizard books and all that jazz, I mean, like this feels like a story that we've heard before. But as I close out my own little spiel here, there is a takeaway, which I saw on Twitter yesterday. I was thinking it in my head, and it was just like, oh, that's exactly, I couldn't put it into words, and you did it better than I did. And I think his Twitter handle was like Deathmaker1, so I don't know who you are. But his point was, when you read through all of these books about famous traders, all of their stories about the guys who make money, they're all different. You have your Dennis Gartmans of the world, you have your turtle traders, you have the George Soroses out there, the Stan Druckenmillers, the Scott Bessents of the world. But when you read the stories of how people failed, they're all the same.
Yes.
It's too much leverage.
And they're smart. They're the valedictorian, or they went to Harvard, or whatever it may be.
Bill Huang.
Harvard, but you know what I'm saying. Yes.
Bill Huang all those years ago. Masayoshi Son back in the dot-com bubble. Talk about a cowboy, right? He's had so many blow-ups and recoveries along the way, but it's all about the leverage. All the stories of these downfalls are not because of anyone being too... John Corzine with MF Global, too levered in European bonds. Was he right? Yes, he had too much leverage on, so his position goes crap, and then a week after MF Global goes down, what happens? The bond yields go down! He was right. Yep. Too much leverage. So that is the story to tell here. Don't lever up too much. Stay within your own risk parameters. Stay within your own portfolio and capital constraints as a retail trader. That's the end of the story.
I was working at Peak 6 when that whole John Corzine thing happened, and they ended up having to buy the clearing firm, which is now Apex. Anyway, it's interesting because this dude, if we look at the week, this dude was long a lot of hardware and short software, and we saw that blow out so big this week. So big. And so it's not really a surprise what happened.
Yeah. It's been a crazy scenario, but yeah, there's a book that I read recently. It's something money, theory of money, something like that. But it's the same story. It just goes over the top 15 hedge fund managers that blew out, and it's exactly what you said. It's just too much leverage. You think you know something, and then all of a sudden you see a 10% move in a product that you think will never move that big, and that's not even a big move, and then you get blown out. So that's why we harp on all the time. Trading small enough to be able to withstand any variance puts you in a real good position, especially if you're selling premium around like MES or M&Q, like the trades that we have on, or any other trade for that matter. You have to be able to withstand the variance that you can't see. And if you can't withstand the variance that you can't see, it is a recipe for disaster, for sure.
And I do want to say, like, this guy takes $224 million and turns it into $24 billion over the course of a few years. He generates north of a 2,000% return for his investors. Even if everyone craps out this week, I still think, if you put $100 million in the back of the envelope, math was that you would have walked away with $230 million for a 2-year investment as an LP. That's not bad, right? So he clearly was right, but what do we say around here? Do you want to be right or do you want to make money? And so he made a lot of money along the way, no doubt. I didn't do this. You guys didn't do this. I'm not here to, quibble about how he's not a good trader or investor. That's certainly not the case. No. But this is the lesson learned from this, is the lesson that we hear every time one of these stories happens. There's just too much leverage. You're on tilt.
Yep. The Psychology of Money. That's the book by Morgan Housel.
Great book.
I mean, the Kylo Ren GIF, excuse me.
More.
More.
Yeah.
More.
Quite literally. Chris, great show. Love having you on. Appreciate
Talk
you.
soon.
See you soon.
Yeah, man.
E-minis up 13. NASDAQ up 250. We need this thing to just absolutely tank. Just 200 points. Nothing crazy.
Points. No.
Nothing crazy. But yeah, I gotta know what this is gonna open at. We got 34 minutes left until the market equity opens. But join us in the YouTube chat. I see some people asking questions. I don't have a Super Bowl on. Do you have a Super Bowl on?
I do not. No, I have it for Monday. I don't have one on for today.
Okay. Yeah,
The only thing I have in this cycle is our butterfly, 7450, 7400, 7350, and then I did do a just for fun. I did a $5 wide iron condor yesterday. 73.75 and 74.80 are my short strikes. $5 wide.
Nice.
That's all I have for today's cycle.
Yeah, I have I have that butterfly on that expires today in SPX, but maybe you're thinking of this Super Bowl. I had a Super Bowl on into the 100-point sell-off before the Fed announcement, and that was a 2-day expiration that's expiring today when I put it on. So I closed that the same day. I closed that 2 hours later for $100 profit. So if you're thinking about that, I've already closed it, but it's in a better spot now for sure.
Yeah, these markets have been fast and furious. We've been opening and closing a lot of things. And one thing I wanted to say too before we go to break, we can compare and contrast our Amazons because our longs are on the same strike, but I went with a August 7 for my other parts of my crab, and you did the near term, so that'll be fun to. You'll probably, I'm sure, make more money than I will.
Do you use the same strikes?
Same strikes, yep.
Nice.
So it'll be a good comparison.
Yeah. I'm interested to see it because you probably paid less, obviously, because you collected more with those 7-day shorts. But we'll see what the net P&L is. But yeah, it'll be a good compare and contrast for sure. But yeah, I see some people asking about Micron, and Micron's up a little bit, 25 points in pre-market trading here, but nothing too crazy. We're going to take a quick break here. We'll throw on a little SPX global trading hours trade here in the pre-market session. I think I might just do a little iron condor. Feels right. But join us in the YouTube chat if you haven't already. Throw in those trade ideas, and we'll get to them throughout the morning. But we'll take a quick 90-second break here. You're watching Tastylive.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, Tasty Nation? We are back. E-minis sliding a little bit. NASDAQ still holding steady at up 200 points here, almost 1%. We were just talking about maybe a little SPX zero-day iron condor here. I feel like if there's going to be a market that moves, maybe it's the NASDAQ. I feel like the E-minis might hold strong here. But what say you, Jermal?
I mean, I think it's a good idea. Let's see, we're around 7,500. I mean, I think that's a good idea. Again, I already did it. I did it yesterday towards the end of the day. And just to get my strikes again, I did the 74.80, 74.85, 73.75, 73.70.
I like it. You know what we could do?
210.
Beautiful. You know what we could do is we could do a little synergy trade here because we have the 0-day SPX butterfly on. That's going to be the 7450, 7400, 7350. So what we could do is wrap the risk around that in the 3-day instead of the 0-day and just go down to like the 73, 75, 73.65.
I like that idea. I see where you're going with it.
And just like create this window. Maybe it's a Super Bowl. Maybe we just play for a continuation to the upside over the weekend. I don't know. But yeah, you could do something like this, just like a 3-day iron condor here where the downside risk is completely offset by the 0-day butterfly if we do retreat towards this level. Yeah, feels like it could be something there. But if we did that, let me see what this would look like if we did like a super wide or like an out of the money Super Bowl here. Yeah, maybe it's the iron condor. Let's do the iron condor. Let's do that. 75.10, 75.20. Let's make this really small. I don't want to go nuts here. Okay, here you go. $2. 75.10 to the upside, 73.70 to the downside. No downside risk today because if we get a move down there, that butterfly is going to explode. Maybe I'll take a little more risk on that downside.
Where are we projected to open as of right now? I just realized, where's at the money? At the money is like 74.50, 74.60, somewhere in there. Gotcha.
Yeah, that's what I'm going to do. I'm going to take more risk on the downside here because if we do slide, like that butterfly is going to be $3,000 winner, something like that. So there's no risk to the downside here if you think of those in combination. But I'll write that up in the little comment on the follow page. But let's do that. Let's see if we can get filled at like 260. What we got to do? Global hours. And let's see if we get filled here. So the nice thing about this trade is even though I'm collecting less than that 5-point wide width here, I still have upside risk. So it's not like a Jade Lizard setup, but I do get a lot more premium on the downside than the upside. So if we do rally, it'll still be a net winner, even though I'll take heat on the upside because that put spread is really where a lot of the bulk of the value comes from. There you go, 245.
Nice.
In the 3-day. So again, 3-day, going to the 3-day because we have that butterfly that is wrapped around 7,400 to the downside with 0 days to go. So all of the risk on the downside is offset by this butterfly because if we slide, I will close it. And I have no idea what this is going to open at. I have no idea what it's going to be. The most insane P&L open P&L day. Like this is going to be up $5,000, down $1. It's just going to be like
gonna be all over the
around.
place.
It's going to be absolutely nuts. It's going to be fun. But yeah, let's look at the YouTube chat, see if we've got any trade ideas here.
Someone did ask when we're closing the SPX put butterfly. I mean, I'm just holding. I mean, if if somehow it were like, you know, worth $35 and it's like $12.30, $12.45, which I really highly doubt, I'd maybe close it. Maybe.
Yeah. I feel like we're at a loss for words because this has never happened before. So we're in a new territory here. Holding is a butterfly to 0 days and being right at the short strikes, like literally right there. But yeah, it doesn't change anything. Your max profit is your max profit. If you get close to your max profit, you're holding a lot of risk because you can lose all that value on a 50-point move in either direction and have a max loser. So this is going to be the most sensitive trade I've ever traded, this SPX butterfly and the NDX butterfly. But to Jermal's point, and really the reality is that your max profit is when the product moves towards your short strikes, regardless of time. Or like through this window of opportunity here. If we look at the curve analysis and just isolate this SPX butterfly.
The reason I will say, and I've done these like a couple of times, right? I just did it not too long ago in Micron. I've been one SPX before. It's very rare, but I will say like the times where I've done it, it's kind of just been some patience and the market dynamics were working. And I will say the market dynamics have kind of worked in our favor in this case because, again, we were much lower this week. We got towards those strikes. You guys watched the show. You saw that Liz at the time was saying, are you guys nervous that it's right there? And we were like, no, actually, we weren't because, again, we knew some moves were coming. And it just so happens that we've been staying within this range throughout the week, right? And then now we're here on a Friday where typically on Fridays you either have a big move or you just kind of chill. And so far we've moved and above it, but we're sliding back lower after a big move yesterday. So it seems to be, oddly enough, is the craziest thing. It does seem like there's sort of a magnet for 28,000 in NDX and 7,400 in SPX. So I think that's why you're seeing us hold on to this. We're attempting to see how much we can extract out of this.
100%. And P&L Theo for today is $1,200 net profit. Which is like $400 more than yesterday. If we look at this, if we open right here, which looks like we will, just up 13 points in the E-minis. But like we said, if you get that slide down, you see your Theo max profit is right where your short strikes are, which is the max profit at expiration. But yeah, if I can take 2K out of this thing, and then, in NDX, it's going to be the same story. NDX is going to be, if we look at the analysis, and we're evaluating today. Here's your Theo. We're going to open up, let's zoom out a little bit. We're going to open up at like 28.4 or 28.5, something like this. So we need a slide down. But if we get that slide down, it's going to be, again, really sensitive. I think the best case scenario, if you were following along with this trade, is to just put in a GTC order. So like put in a GTC for $5,000 in NDX and 2K in SPX. And if it slides down, even if it's just for a second, you can get filled there. So we'll see.
Yeah,
we'll see.
We'll see.
But yeah, lots to discuss. That Amazon trade will be interesting to compare and contrast for sure. But yeah.
Let's pull up that intervention graphic real quick, guys, so we can take a look at that, kind of unpack that a little bit. Big move yesterday around 12:35 Central our time. It does seem like Japan reportedly bought yen and sold dollars yesterday, and you could see the huge move to the downside in that Japanese US dollar Japanese yen pair. Or if you just look at /6J, you can see the big move to the upside. It's interesting when things like this happen. I mean, as much as I am bullish, and most of my positions dictate so. But when you see, you hear the Iran war, when you hear of a hedge fund firm blowing out, when you see this crazy moves on earnings, when you see what just happened with the Fed, and you know that we didn't hike rates, but we're probably going to have to hike rates at some point, and you see the yen intervening, that's just at least a 5 brick wall of worry that I just laid out, right? So like, Chris was earlier talking about how seasonality and you get to August and September. I mean, this is like the beginning of a wall of worry. And the more you start to hear about all of these in the media, that's when you could possibly have, VIX at 24 and markets down. So that's one of the things I think just to keep an eye on. These things, they're not in a vacuum. They're all kind of happening for a certain reason. It's just something to be aware of. I hate to be that guy. I hate to be that dude, but I mean, that was a huge move yesterday in the end.
Yeah, it's absolutely nuts. And these are the things, again, it's all about leverage. Like if you were short, if you had massive shorts on, you're just printing cash into the sell-off, and then you have a one-day move like this, this is a blowout move. So you just got to always keep size small and always plan for the thing you can't see that could really shake up the trade.
For sure.
But yeah, lots going on here. Lots going on here, and we will be here for you. If you throw in your trade ideas, questions in the YouTube chat, we can get to them. But let's take a quick break. We'll bring in Liz on the other side of it. You're watching Tastylive.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade. Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With Stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than trade like a trader? Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
What's up, everyone? Welcome back to the show. You got E-minis and NASDAQ chopping around as they were before, but we got Liz Deerking on the line. Let's bring her in and talk overnight movers. Liz, how you doing this morning?
I am on the edge of my seat. I am utterly disappointed in your lack of enthusiasm today, as you might have the world's greatest trade on.
Well, we definitely are knocking on the door. I think it's one of those things where like it's so impactful that you're just in shock and you don't know how to process it. I think that's where we're at.
Yeah. So we're gonna look at them both on the open. Now you have two, right? You have an SPX and an NDX. Kind of in similar situations.
That's the crazy part. Like that's really the crazy part. It's not even the fact that we got one. We got two that are near. I mean, that's crazy.
Yeah. So are you looking at them differently or going to close one and keep one?
That's a great question.
You both sat quietly for a second, which
I think if there's one that we would close, it'd probably be the SPX one that's closer. That's like right there.
Yeah.
And then that allows us, if we close the SPX one for a couple $1,000s, that just allows us to free roll the NASDAQ one.
Lotto ticket, Liz. Lotto ticket then for sure.
Because the NASDAQ one is going to be significantly further out of the money compared to the E-mini one. The E-minis is going to be like right there.
But it's a narrower one too, right? The SPX?
Correct. Yeah.
I
So
mean,
it'll be a hard one to hit.
No, the NDX is definitely narrower. The NDX is like 400 points round trip either way. I mean, that's a drop. I mean, it's up 300 points right now. It's a drop in the bucket for NDX.
I guess you got to put it into perspective, right, with the numbers.
So that's the thing.
Super fun. Now, I'm not going to lie to you. SPX, the 0 days, especially at the end, I will have a tendency to let some go. And I'm always watching. And it could be, a $200-$300 move in my account. And I'm watching just because I wait till the bell rings. Like everybody knows, you got to wait till the bell rings. I see where it pins. You two are going to be glued to your screen if you let it go.
Or you just
I walk away
go and let God, as they say.
Yeah. I mean, as I told, like when I had the Micron one a couple of weeks ago, I walked away a couple times. I was like, let me just walk away. I learned that.
2:30. I want you guys to pour a drink with the cocktail. It's a Friday, so it's not like you're a raging alcoholic. I need you both to pour a drink and just walk away.
And then just you could just layer on some alerts, Jermal. You could just
that's actually when you pay the most attention.
Alerts.
I feel when it's there, because you could have a situation where it gets close and you see that's when you actually pay the most attention, not like on the open or 2 hours in. You really pay probably the most. If you're going to hold it, you definitely pay the most attention with like under an hour, because you can get a situation where it slides there and then it really grows in value and you have a chance to take it off for some crazy prices, and all of a sudden it might move away and you're like, oh, trust me, I've done that too. I mean, where I haven't taken it off.
It can go poof on a dime.
Yes, I've had that happen. I've had that happen. Especially, we know about the last hour of the day, how that can go sometimes. I've had that happen where, let's just say the SPX slides down to 7,400 and it's 50 point wide, right? So all of a sudden this thing is worth like 2,600, right? Which is like, a good value, right? And it's kind of sliding slow and you're like, oh, shoot, I could probably take this out. But wow, it's sliding and the market is quiet. This is great. Let's see if we can get 3,000, right? Trying to be greedy. And then all of a sudden something happens and it moves like and it'll move like, 10 points away. And now it's only 1,700. And, then you're like, well, I just had 2,600 on the table. Maybe I should just wait till I get back. And then it's all of a sudden it's 1,000. And then it's 900. And then it's 700. And you're like, damn it. And then you're like, you know what? And so that's the psychology. I'm just telling you guys right now. That's how it goes.
Well, I think it's worse. I think the not making money on it is worse than losing money. I know that sounds terrible. But the psychology for me is worse. Like you had said, Jermal, you could have closed it for $4,000 and now you're like, great, I made $700. Like that's worse for me than losing $3,000.
So I think that's why the best case scenario is if for some reason we get a chance to close the SPX for $2,000, then I really don't care what happens with the NDX, honestly.
You keep telling yourself that.
Hey, you got to rationalize it somehow, right?
Exactly. That's the thing. You got to tell yourself these things ahead of time. It's just like we always say, when you get in a trade, have a plan ahead of time. That was always the plan. The plan was actually always to light $700 on fire, as bad as that sounds.
There you go.
That was actually always the plan.
There you go. Okay, so now what you don't want, and I'm just going to be clear to all of our newer viewers out there, what Mike and Jermal do not want right now is a rip your face off rally in the open. That's all you're not playing for is a rip your face off rally, correct? In both of these.
Correct.
In both of these, yes, but trust me, if we have a rip your face off rally, I win in the portfolio anyway.
Correct. And that's lighting your $700 on fire. This was what did he call it? Your buddy on the sacrifice.
Sacrifice. Yeah, sacrifice.
But we did do a global trading hours SPX trade here and took some more risk on the downside. So I sold a 10-point wide put spread and I sold a 5-point wide call spread above it. So kind of like a asymmetric iron condor here, playing for a chop. But I know that I've got the butterfly to the downside, so I have no risk in this put iron condor as long as I have that butterfly on.
So this is a Jade Lizard-esque type position, Mike. And I know you're not covering your width to the call spread. I totally understand that. But it isn't bad because if you meander up, you can take this off for a profit. You really won't lose too much money to the upside. I like the way this is structured.
Thank you. But yeah, that's what we got for this morning in SPX.
Okay, and what do you guys have? What do we have rolling into the open as far as earnings go? Because I did Amazon, I did Apple, I did Coin. Those are the three that I did. I didn't. The fringe players I kind of left. I figured that was enough.
What's Coin doing?
Coin was down a little bit.
Down 10.
Yeah. We had Jermal and I had a similar call crab trade. So I did the 240, 255, 270. Pushed the long option out to September, and then I did the short components in the 1 day, and he did the short components in the 7 day. So his basis was lower, but he'll have extrinsic value in the 255s. My basis was higher, but I'll have the 0-day crush. So we're going to compare and contrast the profit there. I'm thinking it's going to be a $300 winner, something like that.
Didn't it go through your crab? Didn't it go through your crab?
It did, but I think it'll still be a net winner.
But it depends on what you paid, right? Did you cover the width?
Oh yeah, it was a $9 debit on a 15-point wide. So we'll have, even right here, this is the Theo P&L based on the current valuations with no change in IV, but this is like $200-$300 winner. I think we'll capture something at least.
Good.
Yeah. So we'll see.
Yeah. In Amazon and Apple, I'm actually going to net them out because this is how my mind works. I wound up buying an at the money in the 2-day, the at the money call spread as wide as I could make it, and sold the 52-day put to cover the price of it. So both should be okay, but Apple will be a loser because I sold that put. I think I have the one. Let me see what I have on Apple. With that, but I did it in Amazon. Amazon should be a full win. I mean, you make 100% profit because it is Friday. So we all know when you buy a call spread, you really can't take full profit on it until expiration. And so I kind of like that setup on when earnings are on Thursday night going into Friday.
I like it. What was the put you sold? What was the put you sold in Apple?
So let me go to Apple first. Apple, I sold. That one's going to hurt the most. That I have the 315 put in August in Apple.
Okay.
Yeah. And I used it to buy, a 15-point wide call spread. So I don't have a lot there, but that's fine. That's something that I'm just going to keep like rolling until I'm right. Yeah. And then in Amazon, I sold the 225 put to buy the 230, 250. So that should be a $2,000 pop for me because it's $20 wide. Yeah. So I might close both of those saying if I make more on one than I do on the other and then readjust and see what I want to do in Apple and Amazon. I have a tendency to not out my earnings trades. If I do something like that, saying that this was my earnings trades for the day, I'm going to close all three or keep all three and net them out.
Yeah, I like it.
Yeah.
And yeah, to your point, Apple's going to hurt the most, but your worst case scenario is you have Apple shares at a basis significantly lower than where it was yesterday. And you can just roll the put. You can convert it to a strangle if you wanted to. You can do a lot of different stuff.
Yes, I'm planning on going out and up and making it a strangle. Or if my Amazon covers it, I'm literally going to close it and readjust all three of these trades.
Nice.
Yeah.
Very nice.
For me, my shopping list, I'm just looking at UUP. I forgot to. It was a huge move yesterday in the dollar.
UUP?
Yeah.
Okay, Jermal, this is old school. But every time Jenny and I would trade UUP, we'd be like, we're trading UUP. And she'd say, yeah, you know me. Because what's that?
Oh, man.
That sounds about right.
I like it.
Yeah. Move. That's a pretty big move from the dollar there, especially after the yen intervention. Well, actually, that was part of it, but the day before was just a different move. Anyway. What's on? I got maybe one thing on my shopping list. Actually, a couple of things. I got Reddit on the shopping list. That thing's down on earnings. Markets are wide in there, but I don't know if I can get a short put spread on there. Maybe I'm interested. We'll see how it looks. I'm not really going to force it. The other thing is banks. I do want to start to get some exposure to banks. I'm kind of looking at. I forgot about it, Mike. Remember yesterday we were talking about it, but I forgot to do something in GS. But GS and Citi look interesting to me. I just want to get some long exposure in there, short puts, or put spread in the case of GS. But and then maybe JP Morgan, a little bounce there. We'll see though.
Those are hard to trade. I mean, you have to be directional with those. There's not a lot of implied volatility and they're high. So JP Morgan's a $350 stock. It's tricky. It's hard to get in at 350 with the implied volatility isn't that much. How would you get into JP Morgan for exposure?
How? Sure. I just want to get long it actually, because I feel like this is going to be a good environment for banks.
So you're not selling premium. You're just getting long it.
Sure, I'm selling low premium. Sure, yeah. Okay. I'd sell like probably a put spread in here, maybe. Just to kind of, it's one of those just to keep an eye on, you know.
Yeah.
Yeah. I think this is one where I would just go just with a diagonal spread. Like there's 23% IV in an equity is a smash spot for a diagonal spread. And you could even
that's actually probably the better play.
You could do whatever. You could do a crab trade. You could do a diagonal, but like this, the fact that you can go October, September, do a 20-point wide diagonal for $12, like your profit here is significant relative to your risk.
Yeah.
So yeah. Some people in the YouTube chat asking about SpaceX. Are you doing anything with your SpaceX wheel, Liz?
We talked about this a little bit yesterday, and that's what I have been doing. So I'm at position limit in SpaceX. I will say that because I've been layering in puts. So I'm locked and loaded. And this is the simplest explanation I can give. I'm taking my puts out and up, or I'm sorry, out and down with puts. The reverse is with calls. You take them out and up with calls. So I've taken them. I started near term, which is helpful because you can really move them out. And as it gets to the at the monies, I take them out farther. Now, I have no problem going even into Karen the Super Trader a long time ago used to say when things get in trouble, get them the heck out of the way. Meaning you can take it and move it to the put to the 77 day, or you can take it and move it to the 52 day. I haven't gone that far yet with it. I think my SpaceX puts are in. Keep in mind, I started with the 0 days, right? So I wanted to get $2 a day. So I would then I'd move it to the 7 day. Then I needed a little bit more time, and I would move it to the 10 day. And now my SpaceX puts, I am in the. I will be totally honest with you and tell you exactly where it is. My SpaceX puts, I'm now in the 21 day. So I still have room to go out and down. My next move is going to be probably at some point today, I might move them into the 52 day or the September cycle.
I like it.
Cool. But you can take it, Mike. There's still a lot of premium in there where you can take. Yeah. I have the 118. So I'm going to give a real example. I have the SEP. I have the August 118 put. Mm-hmm. Okay, so I can take it out to SEP, and the August 18 put right now it's marking for 1640. So where can I sell a put for 1640? I can actually take it all the way down to the 115, which is the at the monies. And that's just kind of my process with these. I'm not adding any more because I am at position limit. But my next move is just managing this position out and down.
Yep. Yeah, I like it. You still pick up $1.30. So you're not only reducing your intrinsic value risk by 300 points or $300, you're picking up another $1.35, reducing your cost basis against your new strike. So you're improving your basis dramatically to the downside. And all you need now is just if you moved it to the 115, if SpaceX goes up to 117, 120, and this goes down to 21 days, like now you can really move it out and down if you wanted to give yourself more room. Yeah. Because now you've got just pure extrinsic value. Whenever you're dealing with pure extrinsic value, when you're making these maneuvers, you have so much more flexibility to just manipulate it more. But it is also 100% IV stock, so you can do a lot of different things here.
That's why you can get out and down, and I'm getting a credit for each of those moves.
Yep.
Can I tell you a super fun trade I did with my daughter? Because somebody was asking if she's trading. So she took me to Kava. Have you guys ever been to Kava?
Oh yeah, magical place.
I've eaten there.
I love it. It was really good, and so she loved it. So she loved it. She's like, "You got to see this place. You got to see this place, Mom." So I was like, "All right, whatever." And then we went. So I had her do a diagonal in her account in Kava, and she made $200 on it.
Nice.
And she's like, "Do you have any idea how many bowls I can buy with this $200?"
I know.
Get all 13 toppings.
On that real dip is when we went. It was about a week ago, and so this morning I just looked at her account, and she's up $210. She's got the 62.68 7-day August, and the 21-day 62 diagonal. So it's
I like it.
It's awesome.
Beautiful. Yeah, Kava. When I first went to Kava, I was like, I need to get involved in the stock immediately because it was just one of those things where you go there and they're like, how many toppings do you want? I'm like, how many am I allowed? And they're like, you can get them all. And I was like, what do you mean I can get them all? And they're like, you can do every single topping if you want. And I was like, okay, then do that. And then I walked out with a 10-pound bowl. It was perfect.
But I think I went too many with my toppings.
Yeah, I mean, it's easy to overdo it.
Yeah.
For sure. Would you allow assignment in SpaceX? Call premium is really high, so I'm not sure if it makes sense to allow assignment or use the short put in SpaceX.
It's the same thing. It's the same thing, right? So extrinsic value on the call or the put is the same thing, and in the money put is essentially the exact same thing as being long the stock and short that same call. So. But it actually uses less capital on a margin account. So I typically don't take assignment. I'm not opposed to it, but I typically don't take assignment. I just understand the synthetic version of the fact that even a deep in the money put is the same thing as a synthetic covered call.
Yep. Yeah. You'll usually get some decent relief if you have the short put that's in the money versus the shares. So yeah. And especially with SpaceX, there's the bell.
Okay, go right to it. Come on.
We're off and running.
Come on, open the butterflies.
Off and running. Oh, look at that. We just jumped up.
We did
go down.
That's okay.
Down.
We've noticed this. I will say, a lot of times we gap up in the morning, right?
Mhm.
And then slide at about 10:30.
Yep.
Yeah,
We
E-minis
sure
up 32.
do.
NASDAQ up 360. Catching a bid here. Yeah, the butterfly is chopping around. NDX butterfly chopping around. Losing some value from yesterday. Again, this is going to be just an absolutely insane trade because if you get,
Holy cow.
if we go from where we are now to flat, this is going to go from a $600 winner to a $7,000 winner. Like it's going to be that violent in terms of the P&L. So
Are you above you're above your your top long strike, right?
Yep.
Okay, got it.
Yep, 200 points above in NDX. So, but again, this option, the nice thing about these trades is like eventually these options are going to go closer to zero. This option is still going to hold on to some value as it's 200 points higher. So, yeah, if we get any kind of slide today, it's going to be just pure magic.
Pure magic.
Wow.
Okay, Amazon.
ZN and ZB trading same price. Bonds. Frankie just pointed that out.
ZN and ZB are trading the same price?
I mean, just about.
Is TP okay? Someone call him.
Somebody call him. Yeah, it's 108. Almost exactly the same. Kind of wild. What's your Amazon trade, Jermal?
Hold on. I'm trying to get out of this Marvell trade. I was short a put and long a call spread, and my call was in the money. I got to get out of this thing.
So Marvell is, I told you, this is my probably.
Bam. Nice play. Nice play.
Marvell has my number, but today is a good day.
Yeah, let's see if I can get...
Sorry. What else? Ooh, Micron. Somebody's asking about these Micron butterflies that we have on. I mean, that I have on. This is for, that's for next week. Do I need to close this thing?
This market is ripping.
It really is.
Market is ripping. This is exactly what we didn't want, but that doesn't mean it's going to stay ripped.
No, we do want this, actually. I got 2 Super Bowls for Monday that are working phenomenal right now.
So, I know the Greeks get kind of a little bit jumbled up on the zero DTEs, but realistically, Mike, if you wanted to show the probability of it hitting your or having that be there, look at the deltas of your butterfly options. So if you double the delta, if you double the delta, that's the probability of touch. And I know it's not 100% accurate, but it's during the cycle that you're in. So if you take a look, you've got whatever your delta. What is the delta of this?
7.
So you've got a 14% chance of it coming back down there at some point during the cycle. Yep. Oh, no, your deltas are higher.
Well, yeah, the long option is, about 32% chance that we touch that level, which would be
and if you touch
glorious.
That level and it becomes the at the money, that could be worth a ridiculous amount of money.
Yeah. So we'll see.
Microsoft up, Meta up. Let me see this Amazon. What's going on with my Amazon trade here?
So if somebody told you that you could pay $700 for a 7% chance of making, what's your max profit?
19 grand.
Okay, so if somebody said you have a 17% chance because you double the delta of the short, the actual short, would you pay $700 for a 14% chance of making 19 grand? I think I would.
Yeah.
Probably.
I think that's positive. I think that's positive expected value.
But if they told you if they told you you had like, what do we have? We had like maybe 15 days to do that. That's the caveat, but it's also, that part puts it in a vacuum. I mean, it wasn't in a vacuum. It was actually against other things that we had. Yeah. But it is an interesting question.
But even in a vacuum, those are great odds. It's a number I can live with.
Yeah.
In my Amazon trade, I'm actually slightly up, not up a whole lot because of the way it's ripped.
Yeah, I'm down now. But we missed our 1 second window where we could close it for $200 because Amazon just ripped another 7 points right on the open.
Well, and that's the problem with the crab trade, the crab versus diagonal. I like the crab trade. I love the setup, but the wild rips are you're directionally correct, and you can sometimes either scratch or not make any money.
100%.
We probably could have gone wider, I guess. I mean, in my case, I probably could have gone wider since I was using some weaker, further out options.
Yeah. But the interesting thing is, like, even with the rip, let's say I don't get filled here, what I could do is close this component here for whatever value it is. It would be, what is this? 255. Yeah, $2,400. So I could buy this back and then roll it out to like a 7-day. And I would imagine I can just do the same strikes and pick up a little bit of premium. So yeah, if I really needed to, I can move this out to the 7-day, give myself some more time, and just hope that it drops. If it drops a little bit, then the whole trade is not profitable. But you can still make this adjustment for a small credit, at least right now. So we'll see. We will see. Yeah, E-minis up 40, NASDAQ up 470. Crazy move here to the upside, but we're seeing some nice trades. Meta, what are we doing here? Oh, we did the Super Bowl in Meta.
Yes, we did.
Yesterday.
SPX. So I just closed another one of my. So I've had to close out a couple of things here, just the way that they ripped. In Marvell and in GLW, I had short puts from the day where we just tanked. And I think I eventually added some call spreads to those. So in Marvell, I was short the 165 put. I know it's high vol, but I didn't really care. I just thought this was such a crazy move to the downside. This was an order. And I ended up buying the 190, 210 call spread. I just closed that whole thing out for a nice little credit. And then same thing with GLW. I was short the 110 put. And then I also added the 140 and 160 call after this big rip. Closed both those out. Both of those are at least like $1,000 winners. So that worked out well.
Good.
And then I just closed out one of the Super Bulls that I put on from the other day in SPX. I was short the 7,300, 7,290 put spread and long the 74.75, 74.95 call spread. I just closed that out for $1,200.
Lovely.
So, like I said, we want the rips. We don't really. And then if we slide back down, that'll be even better. Even better.
Yeah, the slide would be just pure magic.
But we've gotten some two-way action almost every day.
Yeah,
we sure have.
100%. But yeah, I think we'll see what this market brings us. But yeah, this meta position, we put on this Super Bowl just to play for a rip back to the upside, but longer term. So we did the 525.10 short put spread, and then the 600, 615 call spread. So 10-point wide put spread to finance a 15-point wide call spread all the way out in October, and collected $1 in the middle. So if all these options expire worthless, you still keep the $1, but you've got that $1,500 asymmetry to the upside. That's working out nicely. Microsoft, the only thing I have left is that 500 call calendar. Closed everything else after the rip yesterday. And Intel, trying to recover here. Short put at 130, short call at 120, and we'll just keep rolling that premium. I guess this actually, we're at the 21-day mark. I think it might be time to roll this thing from August to Sep. And
do it, Mike.
See what kind of premium we can get. So if we just keep the same inversion, pick up $5. If I really wanted to, I could remove this inversion a little bit, or just remove it entirely. The more you remove the inversion, the more bullish delta you get because you don't have this 10-point wide situation here. But until Intel shows us that we can get back up to 120, I'll just keep this inversion because I can always, like to your point, Liz, I could always just buy this back in Sep, roll it to October, and then remove the inversion.
You collected over the width of your inversion, correct?
Oh yeah, I already have $2,000 in this inversion.
Then perfect. You can keep it inverted because it makes sense to keep that that rolling.
Yep.
Wow. Apple. Absolutely.
There you go. 470. Market's sliding a little bit. Oh,
I know, right?
Woo.
Oh.
Amazon.
I just got frozen. Am I working?
What are you doing, Amazon?
Okay. Nice.
Apple. Down 30 points. Crazy.
Yeah. I had to put diagonal in there. I had the long Sep 340, short 325 put diagonal. That was one of my trades of the day, a couple of days back. Just closed that out for a nice $600 profit.
Yeah, this one.
Out on that.
If you just listened to the signals yesterday, you were doing good here because like Apple was the one that was down yesterday in that 100-point SPX move to the upside. And Amazon had that pre-market rally with Microsoft's big win there. But still crazy to see it down 30 points. It's nuts.
Yeah, that's a big move. That's a big move in Apple.
Yeah.
But the down moves are easier because you keep the volatility, right? So you can defend
Yes.
it. You keep the volatility when you get a massive down move like that. So it's easier to sell premium against it. You can add calls, you can do things in a down move. The up move where the vol gets sucked out, it's a little more tricky.
Oh, you gotta love this stock market, man.
I mean, this is,
Look at the fade. You gotta love it.
I'm going to put this in for $50.
I love your optimism.
Yeah. just give me $5,000 there.
I just want $5,000. Just $5,000. That's
I just want $5,000. I mean, I'm driving to Springfield today for a wedding. We got
Not too much to ask for, right?
We got to make it rain. And then let's do $2,000 here. How about that?
Speaking of making it rain, Mike, you know it's going to rain all day today.
I know. Free car wash on my way to Springfield. There you go. But there's no better car wash person than the SIBO garage.
My guy Dave. I know. I miss Dave, man. Miss Dave. $20 for the car wash. I mean, truthfully, the car wash is like $58, but the parking was subsidized because it was a work expense.
There you go. There you go. Yeah, crazy moves here. Absolutely nuts.
So
Absolutely nuts.
you have a $50 in for the NDX. Did you put anything for the SPX in?
Yes, I put it in for $2,000, $20.
So hopefully you walk away with $7,000. Today you're looking for $7,000 in the.
Correct.
I like
yes. If we see this market go from green to red, which it seems to be moving in that direction, we just sold off half of the gains thus far. I think we'll be in business.
I think
we'll be in business. We're right there with the 74.50 at the money.
Wait, what? Treasury has informed banks it may intervene. This is Trade the News. Treasury has informed banks it may intervene in the Japanese yen market today.
Ooh.
Get out.
Ooh.
See, it's not good. It's not good.
Yeah, this is a huge move yesterday.
15 minutes ago.
And they came up 15 minutes ago wow.
Yeah.
And look at this. This is still a massive intraday range, and we've been open for 12 minutes.
Right.
Yeah.
Crazy. But I guess this encompasses the pre-market session too. But still, huge intraday range. E-mini's only up 11. This thing's sliding. This is going to happen.
It's going to happen.
Let it happen.
Yes. Yes.
It's happening.
It's going to happen. It's going to happen.
It's nuts. Why is Amazon not going down? What are we doing here, Amazon?
I know. I don't know. That's the one thing that's not going down.
Okay, so I'm gonna replace this. I'm gonna crank this up. Let's do 11.15 and just try and get that solid $200 in case there's a
$12
flash crash. Costco.
You might have to redeploy.
Costco.
Yeah, it would seem the rotation is still in effect, gang. I see Walmart down, McDonald's, T-Mobile, Lowe's, Pepsi, Costco, all down. Procter & Gamble down. And I think software, kind of hard. It's kind of hard to tell with software yet. You got Uber down. You got Palantir slightly up. What's CRM doing? I have a position in there. That's flat. So the software trade seems to be a little bit flat today. Microsoft is still booming, though.
Yeah, 100%. Well, Liz, it's been fun. We'll see you a little bit later today.
I will be thinking about you guys. Good luck.
All you need to know is if we go flat or down, we are going to be smiling.
$7,000 richer. I like it. All right.
Indeed.
Thanks. Good luck, guys.
All right. Adios. E-mini sliding down half their gains, only up 15 now. NASDAQ up 230. This is the lowest print we've seen of the day. Hopefully it continues for our butterfly's sake, but we're going to take a quick 90-second break. We'll be back on the other side of it. You're watching Tastylive.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. E-minis are sliding, only up 7. NASDAQ only up 170. We've got the one and only person on the line that might be able to save us in this NASDAQ butterfly. Whatever contacts you've got in the NASDAQ land, we need you to just whisper 28,000. 28,000.
That's all you gotta do. That's all you gotta do. Yeah.
That's where we need it.
I mean, with the volatility we've seen, what we ran from, I think Wednesday's lows over 1,000 points in like less than 12 hours. So you know what? I think the market has a range, but I don't know if you guys got some context. Let's definitely push this down a little bit lower because we put on some short delta yesterday too. So a little bit of a slide to the downside would be really nice on this Friday.
Yeah, I mean, when the market opened and it ripped higher, I was like, ugh, maybe not. But now, like, we've given up all of the gains in the E-minis and NASDAQ. I would be shocked if this didn't turn red.
Yeah,
at this point.
The first pullback, in the last 24 hours? Yesterday was crazy. I mean, we didn't have a downtick all day. That was wild. But yeah, good to be here. A lot of volatility.
Things going red. Yep, things are going red. I'm seeing CRM go red. I'm seeing Tesla go red. CoreWeave go red. EWY going red. Marvell is just up. Wow.
Yeah, Amazon still up 31 points. Kind of crazy to see it holding steady as the NASDAQ slides, but yeah, we need NASDAQ down, or we need the Amazon down a tiny bit. We need NDX down at 28,000 exactly. And we need SPX down at 7,400 exactly. But yeah, as it stands right now, like the Russell just turned red.
It did.
The Dow is on its way. The E-minis are on their way. Only 5 points now to the upside. So this could be exactly what we need here.
Yeah, seems like it'd be a nice little trending day.
Indeed.
Much needed.
I would take it.
Yeah.
Did you do any earnings trades? Did you just trade the NASDAQ?
Nah, no earnings trades. The only earnings trades that I did so far in this season, if that's what we want to call it, is Google so far. That one's been a little bit boring. We sold an Iron Condor. I know the Iron Condor is one of the most boring trades that you could put on, but we've adjusted it a little bit, collected an additional credit, rolling down that call side. But in terms of earnings, that's pretty much it. I know Apple had theirs last night. Did they say anything interesting?
I don't think they said anything interesting, but it was more of like the whole services thing, whether it's Apple Pay or all these other things. They're just kind of like blah. I think was the takeaway there. So they're not innovating. I think, and I think that's what market participants are disappointed about.
Yeah. Nah, a lot of volatility there though.
We got some people in the YouTube chat saying, look at oil, big spike there at 757, and we've chopped around. E-minis just tried to tick red. Wild day here. But yeah, oil's creeping up. NASDAQ and E-minis just gave up all their gains. E-minis about to tick red here. Just ticked red, down 50 cents now.
Yeah, we're down on the day.
Reddit. Yeah. Reddit is down 32 bones.
We dropped another 100 points in the last 60 seconds on here on NASDAQ. So
yeah,
that trend is continuing there. What did you guys put on? You guys had a butterfly to the downside. Is that what we did today?
Yes, we've had a butterfly on for about a week. We just put this on for this cycle specifically, just to play for, in case these earnings go south, let's put on this really high max value butterfly to see if we can capture some of that value or hedge that value. And that's exactly what's happened. So bought this butterfly in NDX for $700, currently trading for a $2,500 winner expiring today with a max profit of $19K. And then SPX. Yeah, it's like right there. SPX, both of these just moved in the money slightly. 74.50, 7400, 7350. This one we bought for $300 and currently trading for $1,000 winner. But I mean, the way that this market's moving right now, I think we'll see the NASDAQ tick red in a little bit here if we continue to see this.
Yeah,
possible,
it makes it a little bit more comfortable, the fact that NASDAQ spiked a little bit into the open and then just getting completely eaten up. Really a testament to how weak the market is right now. And given the rally we've seen, did you guys look into the story with, I forget his name, with the hedge fund manager, the 25-year-old hedge fund manager? That was really interesting. I mean, I don't know if that's just another headline that, gets a little bit of buzz. But I mean, at the same time, I mean, that's not to be understated. That's some pretty big pretty big money they're moving around there.
Yeah.
Leopold, that was the name. Yeah, Leopold.
Yeah. Look at this NASDAQ move. We hit 28.7.
Slide.
And then 5 minutes later, just straight down. Craziness here in this
stock
NASDAQ
market is
market.
nuts,
1 minute
man.
chart there. Yeah.
Yeah, it's a 1
I
minute.
mean, I just think you're seeing a lot of money move around right now over the last couple of days, right? And the interesting thing is that it's still, the trends are still in place in terms of the divergence between the chips, the software, the consumer staple stuff. I mean, it makes it actually, I kind of like it. It's kind of comforting because you kind of can kind of see the trend happening, and it helps you kind of determine what to trade.
Yeah, 100%.
For sure. Yeah, YouTube chat going crazy here. It is a nutty day. UPS? Did you place any trade in UPS?
I didn't do anything in there.
Yeah.
what's going on
Nothing moving around there. But
had earnings the other day, but I never did anything.
Yeah, big intraday sell-off here. Let's see if it holds. E-minis are up 450 now. NASDAQ up 150, but
Roblox is decimated, down 26%.
Wow.
Yo, I'm not
Short
sleeping
put
on
time?
Roblox. That's a company that I'm not going to sleep on in the long term. That I've been hearing a lot more people talk about Roblox, and I've seen some more things pop up, and like they could be developing a pretty solid in-game currency, and like the different types of games on there. I just wasn't putting as much respect on Roblox's name as I probably should have been. But no, they're pretty solid. They're pretty far along. Their stock price doesn't look like it's reflecting that today. I don't know what type of news came out. So
It was earnings.
Okay, was it earnings?
Yeah.
Okay, yeah, they're getting crushed right now. I don't know.
I knew Roblox had some staying power when I heard that my little 10-year-old brother stole his mom's credit card and used it to buy Robux. And she was like, "What is this charge?" And she marked it as fraud, and then found out that it wasn't fraud. So that's when you know that Roblox is doing well, when the kids are
it's
stealing credit
serious
cards out there.
business. Apparently, depending on how much Robux I think it is you have on the game. I mean, there's like status to it, and with like the other game users seeing how much Robux you have, and I'm like, there's like a legit in-game economy in there, which is interesting. It's interesting, yeah.
First of all, the fact that you weren't sure if it was Robux,
I think
shows you're such a boomer when it comes to Roblox. Look at you.
All right, look,
you're a boomer when it comes to Roblox.
Hey, look, Roblox. You're not playing Roblox. You're not sitting over there playing Roblox, Jermal.
No, I'm not. My kid is. That's why I know about it.
Okay. How old? Which
He's
one?
13. He's been playing it forever.
Okay,
He's been playing for like 5-6 years.
Okay.
But see, you're a Roblox boomer. That's what you are.
But that's why I got to keep my ears to the younger crowd. Still, I gotta see what's going on. And when I say younger, you do see a lot of these trends between the ages of like 13 and 18, especially. So it's always interesting to see what they keep an eye on. You know what I mean?
But they always say never like build a business around like kids because they change. Look at Snapchat.
They grow. Yeah. I'm not a parent. You're a parent. You know that. You know this too well, Jermal.
Well, you change, right? Like the foods that you like change. I mean, think about you 10 years ago, the foods you like and what you like now, and like just like the things that you do or whatever. Like your social media habits, it just changes, right? It changes. That's true. But then you get to the point where your age you're at now, it's gonna be like the same for the next 20 years. Watch.
No, I kind of feel like that kicked in for me a little bit early. I kind of feel the same from when I was like 17, 10 years ago. I kind of still feel But anyways, yeah.
But that's what's interesting about businesses, right? Like businesses always got to be paying attention to trends. But if you build trends, like if you build a business around 16-year-olds, like Snapchat,
adapt,
look at Snapchat stock.
Yeah, look, Snapchat's prime was when I was coming up in middle school, high school. That was its prime, and I barely check it now. The only time I open Snapchat is to look at old memories, like an old gallery. So Snapchat's even becoming a little bit more irrelevant now because, again, I was kind of the prime generation for that, and we're getting a little bit older now. So it's a good point. It's a good point.
Time keeps on ticking.
It does keep on ticking.
As they say.
NASDAQ sells off. Those SPX butterflies are going to be looking nice. Yeah.
Yeah, NASDAQ sitting near the session lows, and this market is trying to go much lower, it feels like. We started green across the board. E-minis are now red. Dow is red. Russell's red. NASDAQ's only up 80, 85 points, 90 points. This is a 1-minute chart, so you can see the pressure that we're seeing continue to the downside here. But if this NASDAQ ticks red, we're going to be in business with these butterflies.
Oh, yeah.
I've got the working order at $50 in the NASDAQ one and $20 in the SPX one. They're both in the money, slightly out of the money on the NDX one for now. But again, if the NASDAQ goes flat, we'll be 100 points in the money, and this thing will probably fill, which would be nuts.
Yeah.
It'd be wild.
The markets in Micron are so wide right now. I'm just looking at the P&L, and I'll go up positive 50 on the day, then it's like negative 50. I'm like, that's some wide markets on this spread right now. But yeah, no, these names have a ton of volatility, so we'll see what we get. Got a lot of time left.
Yeah. Are there any specific NASDAQ levels you're looking at?
I mean, if we sell off to the downside, I'd really love to see 28,190. That's going to be a level I'm looking at. I was a little bit more bearish underneath 28,470s. So anything below there would be really nice for the day, but we'll keep an eye on it.
Yeah. Crazy slide here.
Crazy
Down
nice, yeah.
500 points from the high, almost.
I am in support of
28,700.
28,190 because I feel like that would be in DX at 28,000.
Hey, if we get to 28,000, let me know where we're eating, guys. Jermal, Mike, let me, definitely allow me to tag along with you guys.
Hey, we can make it happen for sure. But yeah, I think E-minis catching a bid here now, up 7, NASDAQ up 160. But this feels like an illusion. We're basically just covering the shorts.
pullback.
These feel like short covering rallies. These little blips, and then they just come right back down. So we will see how this market. Yeah, there you go. E-minis selling off again. But yeah, we need SPX at 7,400. We need NDX at 28,000, and this portfolio is going to get a lot more juicy. That's for sure.
Oh yeah.
But E, appreciate your time, and yeah, we'll see what happens with the NASDAQ. But if you're scalping it, post those things to the follow page, and we'll follow along, see how you're doing.
Will do. Thanks, guys.
Yep.
You got it. E-minis flat. NASDAQ up 150. Dow and the Russell are flat. Completely erased the gains here today. We're waiting on NDX and SPX to sell off here, and Amazon to sell off maybe 4 or 5 points. Will probably get filled on a closing order. But we're going to take a quick 90-second break. We got Dr. Jim coming up on the other side of it. You're watching Tastylive.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
I'm Jim Schultz, and this is Inside the Trade. Happy Friday to you guys. Happy morning to you guys. Man, I hope you guys are doing well out there. Let me know in the chat what's going on in your neck of the woods. And let me know what you're doing for the weekend, man, because we got to get in there. We got to pump that algo. I know it's a little bit early for the From Theory to Practice fan, but we got to pump the algo the same as we always do. So, Ben, bring us into the market. EME S&Ps are down a few points. You got the NASDAQ risk-free instrument up about 100 on the day. You got the boomers struggling. You got the Russell 3000 struggling, heading back down to 2,000. It's only 900 points away. You got the bonds down. You got the notes down. You got a whole bunch of other stuff. But what I want to talk about today, we got to go inside the trade. So I did a couple of earnings trades last night. We did Amazon. We missed it. We did Apple. We missed it, which we're going to talk about here in a second. We did Reddit. We could not have missed it more badly. So we are going to talk about those in their entirety on From Theory to Practice later today to give you a reason to watch that show. But I will say one thing quickly before I get to the new trade that I want to do for you guys here. It is in Meta. You can see that your boy was doing a little bit of homework before the show. I was like, I think there's a little something we could do in Meta post earnings to kind of take advantage of the volatility collapse, and well, not really the volatility collapse, the continued somewhat subtly elevated volatility, I guess you would call it. But for the butterflies last night, here's something that's interesting. So Amazon, we missed it. I mean, we could not have possibly been more wrong on this trade. The fade Dr. Jim strategy, again, it gets you closer to whatever financial goal you might have. You might want to retire early. It can help with that. You might want to get a tiny house as a vacation home. It can help with that. You may want to send your kids to college. Man, that is the best thing that it can do for you today. And so Amazon, we missed it. So it's not going to work. It's going to go out of the money. That's not really going to be a problem. Reddit, we missed it. So Reddit, again, I'm as surprised as you guys, right? We know that the source of truth in the world, in the market, anywhere you might be looking is found only in the subreddits. And so the fact that Reddit's down 36, I'm as surprised as you are. But we'll talk more about that here later today. It's Apple that's the really interesting one that I think we can learn a little something from this trade. And then we'll go inside the trade. And then later on From Theory to Practice, we'll probably learn this very same thing again because the content is not going to create itself. But if you look at a butterfly, so it's a great way to play direction. It's a great way to take a shot. It's all the things that we talk about all the time. I love doing butterflies around binary events, FOMC, earnings, whatever, right? That's true. But one thing you need to remember about a butterfly, because this was a downside butterfly, right? Like if you look at Apple, I mean, it's down 31. I mean, you don't get more downside than what Apple is doing this morning. That's about as downside as it comes, with the stock now down about 9 or 10%. And so with a butterfly, this is a really good reminder and a really good thing to understand if maybe you've not done a butterfly before. It's not just a single dimension trade. It's not just one dimensional. It's actually multi-dimensional. So you need to get the direction right. That's obviously step number one. But you also need to get the magnitude of the direction right. Like if you overshoot your mark by too much, like we did on Apple this morning, then you're going to be in a max loss scenario there too. Like in the end, that's no different than what happened with Amazon. That's no different than what happened with Reddit. And so just understand, again, what you're signing up for with a butterfly. You are in a situation where you got to get the direction right, but you got to get the magnitude of that direction. So that's why I do like using the expected move to kind of anchor my strikes, because it gives me somewhat of an objective kind of, range or some objective boundary points to kind of think through what is likely going to happen with the magnitude of the move. But again, remember, the expected move is not the holy grail, right? The expected move is not foolproof. It's just telling you based on the volatility metrics today, what is likely to happen if the stock does move in this direction. Again, that's only going to happen, 68, 67% of the time based on a standard normal distribution. So I just want to bring this up because it's quite a valuable teachable moment for us here now, because as you can see, we're very, very close to maximum loss. And so again, right? I mean, you can fill in the blank with whatever reason might be relevant in that moment, but the fade Dr. Jim strategy is about to go, there we go, is about to go 3 for 3. And so, all right, so let's go ahead and let's now go to the new trade today. So what I want to do today, and I see you guys in the chat, by the way, man, you guys are doing it. You are putting in some work. Look at Point B in the house. Look at Wolf in the house. Clown Baby is here. Sam L is here. Gapper X is here. DMZ is here. Man, you guys are here early. Absolutely early. And so, all right, let's go ahead. EMI S&P is down 20 on the day. Let's go to Meta. So here's what I want to do. So for Meta, so one of the things that's really interesting about earnings is you have these stocks that get bid up into earnings. And I don't mean their price getting bid up necessarily, although that can certainly happen. I mean the volatility getting bid up. You get these volatility expansions going into earnings that almost happen like clockwork, very reliable. It's kind of what we would expect, kind of, on any given earnings day, we're going to expect volatility expansion going into these guys. Okay. When the number comes out though, because the Meta number just came out on Wednesday, right? It was just 2 days ago. A lot of times you get a really big volatility crush right out of the gates, but then the volatility still remains elevated for maybe a day or 2 or 3. So you can put yourself in a position where it's like, all right, I can actually step in after the event, right? Like I can kind of, sift through the rubble that was the earnings event and say, all right, let me see if I can't find an opportunity. Like, let me see if I can't find a little something that might be of value. And so for Meta here, you've got the IV rank at 45.5. This is still very, very doable for a new short premium position, in my opinion. I mean, the team has looked at this for so many years. I mean, anything over 30 is usually a pretty good entry point for a short premium position. Of course, 40 is better than 30, 50 is better than 40, and 75 is better than 50, and so on and so forth. But when you get to a certain point, it's like, all right, when am I going to pull the trigger? Like, when am I going to go ahead and kind of release the capital and get this new trade on? It can be difficult if you always wait for the perfect possible time. If you always wait for kind of all the stars to align and, every number in the combination lock to be set exactly where you want it before you lay out a new trade. And so I kind of think 30 is very reasonable. I mean, personally, I think 20 can work. I mean, like personally, man, I think you can make 12. I think you can make a strong case for 12. Like if you really are you have a strong hankering for short premium and you're like, man, I need some decay working for me. Like I really want to get the probabilities working for me. Like it's been a minute since I've stewed in the bathtub of filth and I miss it. Like if you find yourself in that position, then you could sell an IVR of 12. You could sell an IVR of 13. You could sell an IVR of 15. Like I don't really see a huge problem with that. Now, is it going to be as effective as if IVR were higher? No, it won't be. But keep in mind, I mean, for people that have been trading for a while, like y'all remember 2017, right? The VIX was 8. Not 18, not 28. The VIX was 8. Like you think 16, 17, 15 is bad. Trust me, it could be much, much worse. And so sometimes, depending on the context, which is not necessarily right now because the markets are moving around so much and volatility has been relatively elevated, you get into a slow season where it's like, man, the VIX has been, 10, 11, 12, 13. Like it's coming again for sure. You see an IVR of 14, you're like, whoa, like what's going on? Like what came out with the company? Because this is crazy stuff. And so when that happens, I wouldn't completely dismiss it from the old radar for a short premium opportunity. Even S&P is down 33. Well, speaking of what came out, guys, let me know in the chat, what is going on out there? What is happening in the world? I mean, that's almost a 0.5% move to the downside. That's crazy. But let's go to Meta. So here's what I want to do. I want to go ahead and let's see. So Meta got bamboozled from earnings, obviously, right? I mean, this is this a daily chart? Wow, that's a crazy looking daily chart. That is this looks like a silver daily chart or like a gold daily chart or like a lean hogs daily chart, like a black cheese daily chart. If any of the From Theory to Practice fam is watching the morning show, which I'm pretty sure that's the only people that are watching the morning show, so I appreciate y'all. Do you guys remember? I haven't brought this up on Inside the Trade, but on From Theory to Practice, I told you guys that one of my boys here in St. Pete, good guy, my man Clinton, he works for Sargento Cheese. So this is the craziest thing ever. If you've not heard the story before, this might actually be somewhat valuable to you. I mean, by somewhat, I mean it's going to be right around that C plus to B minus level of value. My man works for Sargento, the cheese company, right? Like it's in the grocery stores, it's whatever. Like he does the analysis for Sargento. Like he's in like the pricing department and like all that stuff. Well, I was chatting with him. This was like years ago now, but so it still comes up when we see each other. He actually monitors the price of cheese futures. Like, did you guys even know that you could trade cheese futures? Now, it's super thinly traded. Like, nobody trades it. Like, you can't go trade it today. Like, it's not on Tasty. I don't even know that you can trade it on really any brokers. Like, I think you need to go to Wisconsin. Like, you need to be physically in Wisconsin to trade cheese futures. But somehow, Clinton gets like a live feed to like the fields and stuff and like the factories and stuff and like, you know, the milk and the cows and whatever. So he can see the price of cheese futures. He's actually monitoring the price of cheese futures to determine the pricing strategy of what they're doing at Sargento. Like, is that not the coolest thing you've heard today? And by the coolest, I mean, it might be in the top 5. But that's pretty cool. Like, that's pretty awesome that he's monitoring cheese. And there's all kinds of cheese. There's like block cheese and like young cheese. And he's like, sometimes you got to see what they're doing in Munster before you flip on over to mozzarella. I'm like, dude, this is crazy, man. Like, you guys thought what we did was crazy? Nah, man, you get that Swiss mustard pear straight on. That is some crazy, crazy stuff. But anyway, a lot of times when you look at like these future charts, you see a bunch of gaps in the chart because, you know, the regular trading hours are catching up to the you know, the futures prices that have been trading, you know, 24/5 around the clock, whatever. You don't typically see this many gaps on an individual stock. But alas, that is what we see here with Meta. And so let's go ahead and I see you guys in the chat too, talking about sounds cheesy. Better be a Gouda trader and a cheese speculator. That's good stuff, man. That's fun. You know, I actually saw him a couple days ago and we were talking about it. And he was like, it's so volatile because the markets are so thin. I'm like, yeah, because nobody knows about it, man. You need to be on social media. You got to get more traders. Like, I got a bunch of traders. Like, just tell us the ticker. Tell us where to trade it. We got to be in Wisconsin. We'll be in Wisconsin. Just tell us where to be. We'll be there, man. We'll be trading it before you know it. And so we can thicken up that market, no problem. But anyway, I digress, most certainly off of a digression at this point. Let's go to Meta. Let's go into the September cycle with 49 days to go. And I kind of think I want to take advantage of the huge down move in Meta by being a short-term contrarian, right? Let's step in with a bullish trade in Meta. Let's get in here. Let's do something very simple, very straightforward. I'm just thinking we sell a put spread. I'm just thinking we sell, I mean, maybe a 535, 530 put spread. I mean, you know, this isn't going to blow your hair back. This isn't going to change your life, but it can be another occurrence. It can be another data point. And again, it's defined risk. And so obviously the expectations are always muted with defined risk, at least in my opinion and from my vantage point. You know, the real money to be made in trading is with undefined risk, and the consistency and everything you want to achieve as a trader is can be more, I don't want to say more easily found because that would be a bit disingenuous. But in all the conversations I've had, thousands, tens of thousands of conversations I've had, and all the live events and whatever, like the one common denominator across all the successful traders that I've connected with has been a heavy emphasis on undefined risk. Now, there may have been a couple of defined risk magicians that kind of snuck through security and had conversations with them, but they're so few and far between, I just round up to 100% for my mental records. And so undefined risk is the ticket, but from time to time, you know, you want to do something defined risk. I think that's obviously totally fine. And if you're brand new to trading, you should only be doing defined risk. Just to be very clear, you need the reps, you need the experience. You're not ready for short straddles in gold just yet, but it'll come. It'll come. Let's try 216. All right, we got improved at 219. There you go. A little short put spread in Meta. Okay, so let me go back. Now I want to see where you guys are at. I see you guys in the chat, man. Look at you guys are putting in work. And by that, I mean, you guys look a little lackadaisical today, but you guys are here. And so I appreciate the eyeballs. I appreciate the heartbeats. And yeah, let's do it. And so let's see. I see point B is here. For the trades that are being tested, here's a great question. For the trades that are being tested, can you talk about assignment risk? Again, it all comes down to extrinsic value. It all comes down to extrinsic value. I know Mike is coming back on the show in a couple of minutes, and he can back me up on this. It all comes down to extrinsic value. It always comes down to extrinsic value. And so when it comes to assignment, as long as there is some extrinsic value in the option, the likelihood that you are assigned is very, very low. It's extremely low. And so just keep that in mind as you're trying to monitor the likelihood of assignment on whatever strategy you might have on. And also remember, if you do happen to have a defined risk strategy on, whether it's a vertical spread or really any defined risk strategy, and one of the legs gets assigned, but you still have the other leg on, understand, as long as you don't break the strategy apart where you're kind of like breaking up the package and you're legging out and it becomes something that it was never intended to be, your risk parameters on the trade are unchanged. They are the same as they were before you took assignment. And so understand that it's going to look a little bit different and the buying powers can change and all that kind of stuff. That, of course, is going to come with the territory of assignment. But understand that your risk parameters don't change when you take assignment on a single leg. And man, I can't get to all you guys just because it's such a quick show. It's just such a quick turnaround. But I see Mr. Pillows is here. Now I want some cheese. I see, let's see. Ash Fan, the core position is here. Obviously, man, I appreciate you. Let's see. Who else we got? Because we got to go. We got like a couple seconds to go. Blue Wackadoo. I'm fed up with this market. That's some pretty good stuff. That is some pretty good stuff. Sam L says cottage cheese, tuna fish, no applesauce needed. So I've actually tried the tuna fish and cottage cheese combination because I tried it all, man. Before I settled on the Nash equilibrium point of tuna fish and applesauce, I tried cottage cheese and tuna fish. And let me tell you something. That is way worse. Like, if you hear tuna fish and applesauce and you think it can't get worse, it can. If you hear the VIX was 8 in 2017 and you think it can't get worse, it can. And so tuna fish and cottage cheese, that might be the bottom of the barrel. But it looks like I gotta go. I gotta run. Man, I appreciate you guys so much. I will see you guys later today for From Theory to Practice, 2:30 Eastern, 1:30 Central, and I'll see you guys later today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's up, Tasty Nation? Welcome back to the show. We've got a crazy market here. E-minis down 30, NASDAQ down 40. I just closed those hedges. $4,100 winner in NDX Butterfly, $1,400 winner in the SPX Butterfly. Who would have thought that it was possible
Who would have
Absolutely
thought?
nuts. But we got Tim Knight on the line here, and I'm sure you're loving this reversal, Tim.
I am, but I'm not. And allow me to explain. Couple of things. So I was all prepared to give a little speech this morning, which I'll give anyway, because I think it's an important concept to get across, which is that, as we look at charts, we have to consider what should happen and what will happen or what does happen. So, for example, and this isn't necessarily with charts, it's just like judging any instrument. So SpaceX, when SpaceX first came public, and it climbed for a couple of days, and it was worth the $3 trillion, I think. The sort of should happen is this should be a lot lower, because no company should be valued at like 100x sales. I sold my tiny little startup a quarter century ago, Profit.net, for $8 million, which is about 2 times sales. It would have been nice to receive $400 million from my tiny little company, but that would be silly. So I got a sensible amount. These days, with SpaceX, it's just like, this is bananas. It should go down, and it did. So those aligned. This morning, as I looked at the ES, as I looked at the NQ, because we had this like incredible rally yesterday. We had this big follow through last night, biggest jump in South Korea of all time. And my feeling was that, from a charting perspective, what should happen is that short everything with a ticker symbol. This is going to be the peak, and it's going to reverse lower. What will happen remains to be seen. What I was prepared for this morning, because I'm kind of made for days like this. I'll say it again. I am made for days like this. What I was prepared to do was systematically, diligently, symbol by symbol, short this and that and the other and so forth. I didn't have time.
It's fast.
Yeah, I thought this would be kind of a mellow morning. I'd be like, son of a bitch, everything's up, and so like, okay, you're getting better prices, and just kind of spend my day systematically going through there. Instead, it was sort of, and there's good news at the end of this, it was like the worst of both worlds. The first, ding, 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 getting stopped out of everything left and right, because I set stop losses on my short positions. And then looking at them saying, these are dynamite charts. I'm going to get back into them at worse prices and greater risk. Yay. And so things moving that fast, it stinks. But, it's not like, I don't trade to be like, well, fingers crossed, I set stop prices. Now, the good news in all this is that where I don't set stop prices, where I just have more of a long-term view, is my options portfolio, which is just like long-term directional trades. And, the fact is that, long SPY puts, long cube puts, and 6 others. And I didn't touch that. And so that was unbesmirched by my clever little stop loss prices, and it's doing just fine. Thanks for asking. But otherwise, it's been kind of as frantic, like, oh my God, I had great positions on, and now like I'll just pay more for them. So yeah, it's mixed feelings. Let's just say that.
I mean, it was a banner open. Market opened up big. I had some long deltas. I actually closed out a lot of positions, to your effect, basically getting short some things in that regard, because I closed them out with the big moves. Marvell, a couple of other names. So it's been a great morning, Tim. It's been a great morning.
Well, see you guys on Monday. Yeah, I mean, the open was basically the high on almost everything. Like I say, I mean, God bless the options portfolio. And I don't want to give people the impression that don't set stop prices. Not at all. It's very rare that I regret and resent the stops I put in. They're set based on sensible levels. And the fact is that we could have opened strong and be up twice as much right now. That's why they're there. Yesterday, I got stopped at a bunch of stuff, and I'm glad, because it kept going up. So it's okay. It happens. It's like, that's insurance.
Yeah, it's true.
So having ranted, I can show you a couple of charts a little bit, kind of to show you kind of what my rationale was for remaining bearish on stuff. The weaker of these is the ES. I'm less bearish on the likes of the S&P, basically because we got really faked out. We did on Wednesday, breached it nicely, and then undid that yesterday and then some. And then today, open strong, but as we look here, we've spent all this time going nowhere fast. Tons of smoke, no fire. We're the same price level now that we were on May 13. It's just like relentless. Up, down, up, down, up, down. It can't make up its mind. For nimble traders, day traders who are good and lucky, they've been doing great. But for any sort of swing trader like myself, it's just like, it's a mess. So I'm afraid that our breach there did mean a thing. We're above it again.
Yeah, I mean, save for the two obviously big days, it's basically kind of been a chop, right?
Ground hamburger, absolutely. The one I feel better about, a lot better, is the NQ. Now, sharp viewers may notice that this little line has gone up, and I try to be a very honest chartist. I don't move things around, so it seems like I'm always right. What I wanted to do here was to show that, as with the ES, the dip below here was nice and all that, but I think the more important level of resistance is up here, because there's a couple of good things going for the one or two surviving bears out there. Thing number one is that this is a good chunk of overhead supply. Unlike the ES, which is just a mess, this has a large, multi-month, substantial blob of overhead supply to do what we saw this morning, which is like sell into strength. The other cool thing at the moment, and we're only an hour into the trading day barely, is that we've got this cool little shooting star showing that there's been a lot of attempt to go higher, but so far has been beaten back. And so we've got a nice setup there. As I said, I already came into the day long cube puts, long SPY puts, and they're Januaries. There's lots of time on them. But I did not expect to be looking at the NQ 1 hour into the day and see anything that looked red. It's been quite a surprise, especially with what Amazon did last night.
So what are those bands? Curious.
Those are set by me. What I'm trying to do, there's nothing. They're not Fibonacci's. They're simple. They're just simple horizontal lines to try to lay down important areas of support or resistance.
Yep.
And in this case, they've been resistance the whole way. And by way of drawing these, it also helps define ranges of activity, which, as precipitous as this fall has been, there's not long ranges, but this in particular was a pretty decently sustained one. This only lasted about a week, and then for the past 6 trading days, we've been persistently below this latest one. And so, given what I was concerned about, and I alluded to this yesterday afternoon, what I was concerned about is what we experienced Wednesday and Thursday here and here would be repeated in the same way we had here, which is break, looks like it's going to really fall, nope, hard reversal, and then follow through, that kind of thing. That doesn't appear to be happening right now. Instead, we had an attempt to lift things higher, but just looking across the board, ES, NQ, RTY, YM, and BTC in particular, which I cannot seem to get right these days, by the way. Bitcoin is not my friend. Everything's red. So yeah.
So you have stops. I have alerts. I like just to kind of get alerted when certain things happen. And one alert that did not go off was 28,750, and so that's why I got my eyes on where you got that lower band, because it did not touch there. But it's interesting when we look at this week. Looking at Monday, which is the one area where it almost touched, and it did go through. It traded Monday 28,763. That was a high, and then today 28,7. What was it, 25 or something like that? So not quite above. So
right,
failure.
Now I've been so frenetic this morning, and again, not that it matters, but is there a particular reason for the selling except more sellers than buyers? But is there been some news of any kind, or is it just? How about that?
I don't think we've been kind of doing the show here. I don't think I've seen any reason.
We're all occupied.
I think it's just the week, I think it's just flows.
Yeah. Well, the one other item I wanted to show, and I keep coming back to this, is China. And I was a little early on SMH. But not terribly early. I started messing around with SMH a few weeks before it topped, and there were some losses along the way, but I finally got it right. I got out of it literally within hours of the bottom. Unfortunately, those hours were between one day of the next, so it was pretty substantial, but pretty much got the bottom. I'm feeling the same with FXI. I've been tilting at this windmill for the past couple of weeks. Has not gone well, but I look at this chart, and this is, I'll just say it clearly, FXI is my new SMH. This is my new. I've gone from South Korea to China at this point in terms of what I'm after, and I've got long dated March 2027 $37 puts on this bad boy, and China's been doing amazing lately. They've been just blasting higher, and my line in the sand. You were asking about lines earlier. There's this one here, which is just based on this important price gap. So long as we do not cross above that, I'm going to stick with these puts. But like I said, this is my new target. I think SMH is still great. I think SMH has plenty of more downside, but my focus right now has really turned toward FXI, which is not very heavily discussed or traded, but just wanted to go on record with that.
Tim has a new prey, Mike.
Yeah, that's the way to put it. Mike Quarry, China. Look out, Chairman Xi.
Yeah, I mean it's been a crazy time over the last couple of weeks here, and like the Japanese yen, what a candle you saw yesterday, and intraday move today. So, yeah, these things will always ebb and flow, and there's always going to be new opportunities and new sectors that you might not realize you're trading until you are.
Yeah, but yeah, like I said, this morning, Jermal, I just the market waits for no man, but it would have been nice to go a little more moderate. It's just like, oh well, it'll all work.
I literally made breakfast on a little 15-minute break, and we were down 40 points and 100 points in the Nasdaq. So I like scrambled over to my platform to close those butterflies. So to your point, can't even eat, can't even get nourishment in these markets.
Yeah.
I think it's a mistake. Stick to bourbon and chocolate.
Fast acting carbs. What else you got for us? Is that the final one?
You know what? I'm going to end on China, if that's all right. I think that's the message I want to get across. Everybody take a peek at FXI. We're all catching our breath right now, so nothing important to discuss, I don't think.
Awesome. Well, appreciate your time, Tim. We'll see you a little bit later today.
All right. Good luck, everybody. See you.
Thank you. Yeah, E-minis and NASDAQ split here. E-minis down 15, NASDAQ up 15. Down the Russell are down as well. But yeah, Bitcoin is pulling this whole market down 4% in ETH and Bitcoin. And crude oil continues to creep higher. So maybe something's brewing here, but we're going to take a quick 90-second break. We'll see you on the other side of it. You're watching Tastylive.
It's time to trade smart, post-PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Hello, everyone. Welcome back. We got the E-minis and NASDAQ sliding. Everything's red now. Not a green bar in sight unless it's crude oil or I guess some of these other random things chopping around. But Jermal, absolutely nuts today. We close out of those butterfly. Or I close out of my butterfly. Are you still holding yours?
I'm still holding mine. Still holding on.
This guy.
Oh, no.
This guy. Hey, like I said to Dr. Jim yesterday, bases are loaded. Grand slam opportunity. The green monster out left. You got to go down swinging.
I'm gonna try and get a little more, especially since it seems kind of weak here. So
it's funny that you already gave everyone your little devil on your shoulder, the voice with the little
yes.
Yeah, just hold on a little bit.
Yes,
more.
a little bit more. See what happens. Why not?
I love it. But yeah, I mean, the actual trade isn't gonna move too much. Like this one, 1700, still trading for 1500. Like it's just gonna be super sensitive. But you're right between that range with SPX and NDX. So yeah, the longer this day goes on, the bigger that profit tent's going to get, especially if we slide. And it feels like we will, honestly.
Yeah, I mean, being that we're hour in, I'm going to give it just a little bit of time here. We'll see, what happens over the next hour. I guess, honestly, I'll see what happens in an hour when we get to the European close. We'll see what happens.
Yeah. Well, we got a market measures for you, sponsored by SIBO, which means one thing and one thing only. Mrs. Julia.
Mrs. Julia.
How could I forget?
Both are correct,
Mrs.
right?
Julia.
Ms. Julia. Mers Julia. Man, am I still not used to that? How's it going, guys?
Yeah,
it's going great.
Right?
Going great. Market's crazy.
Does it sound like you're an old lady or something like that?
A little bit, yeah. I don't know. And I have a cat too, so that's not a good look, huh?
No, cats are great. We love cats.
I love cats. Cats are the best.
Mm-hmm.
Yeah, we're all cat people here.
Yeah.
Are we really? That's a good sign. Although we're not all wearing black this time, which I mean, we could have done a little better.
Yeah. Well,
we'll have to work on that.
To be Black Friday, so
yeah, that's right. Well, I got a market measure for you guys. You want to get into it?
Let's do it.
Let's do it. Okay, cool. So this is a piece from Sahil over on X, if you want to give him a follow, about the hidden risks of high pop strangles. We're going to be talking about the usual things about the tail risk component relative to the credit you collect. That's, a lot of what we tend to talk about when it comes to the risk reward trade-off, but also some of the other risks that, you don't always talk about. So we're going to get into it. Yeah.
Yeah.
I like it. I have a feeling where this is going.
I think you might. I think you might have a sneaking suspicion. But there's always a trade-off with different option strategies, right? And usually want this balance of risk and reward, really, capturing enough upside for the amount of risk and the type of risk that you're taking. And we usually often judge a position by its delta. Lower delta strategies tend to be higher pops. And while this looks attractive at first, it does come with some hidden risks that we wanted to talk about. So what are those downsides of high pop trades? Because, on their face, they look great. Probability of profit of 90%. That can look nice at first, but what are the hidden downsides that you don't always see right away? Make sense?
Makes sense.
Indeed.
Let's do it. Okay. So here we're just comparing some strangles going back from 2013 to present. These are 45 DTE managed at 21 DTE, so using a little bit of early management in there. And what you can see is that when you're getting down to the 10 delta, 5 delta, 2 delta strangles, you're getting pops upwards of 80%. But the credit you're collecting and then the consequential median P&L drops off pretty significantly, as you would expect. That's really the trade-off when you're going wider and wider. You're getting those high probabilities of profit, but you're collecting less, and that affects median P&L overall. And even though those can be small, steady gains, especially when you're profiting, overwhelming majority of the time, those are not necessarily enough to compensate from the inherent tail risk that you see with just all types of short premium positions. And then, these undefined risk ones as well.
Okay. With you.
Yeah. Right. So let's go to the next one. So this is just, I pulled this, this morning. I'm just looking at 21 DTE buying power for SPY strangles, comparing 50 delta, 40 delta, 30, 20, and 10. And what you see is between 50 and 10, there's a 12% reduction in buying power. So it's not a very big reduction in buying power from going wider and wider and wider and wider. Noting that these are 21 DTE, this is on SPY, and different volatility conditions are going to change what these values actually are. But buying power is really meant to be, for an undefined risk position, what the kind of estimate for worst case loss is, depending on a couple of factors. There's this calculation that goes into it. This is basically, the broker's estimate for worst case loss for an undefined risk position when you don't really know what the risk is, technically, or the potential losses going into it. So what you see is that even though these, 50, these 10 delta positions or these 20 delta positions have high probabilities of profit, one, they're capital intensive. They're, comparably capital intensive. Looking at 21 DTE as a 40 or a 30 delta position. But if we're using BPRs as proxy for worst case loss, you're also subject to tail risk, as unlikely as that might be, even though you're profiting most of the time, right?
Yeah. And just so the crowd knows, this is for margin accounts, right?
Yes.
Yep. Yeah, I think that's the big hidden risk is you have this high probability trade. Maybe you're levering up and doing multiple contracts, but you're out of the money losses. Especially the further out you go, you can realize a 2x, 3x, 4x, 5x loss and still be far out of the money. So you got to take that into account.
Yeah, that can totally happen. And yeah, that's really that's a big part of the argument. But the hidden other piece of this as well, that's specific to undefined risk positions, we'll talk about on the next slide, is that buying power is, when you put on the trade, it's not necessarily going to stay at those levels throughout the duration of the trade, right? BPR adjusts throughout time. And you can actually, right, sometimes even though you're putting, a trade on for some amount of buying power reduction, that can actually increase over time throughout the trade. So looking at this NVIDIA, for example, we saw that the buying power actually increased by 65%. Just, within a couple of days of holding the trade, which again, like brokers trying to adjust for the perceived, maximum loss of the position. So not only is it the capital that you need to start the trade initially, but also the capital to sustain the trade. That's kind of this other piece that, we don't always talk about.
Yeah. And I think this is why understanding notional value really helps out because your notional risk is where, especially if you crank up that notional risk, like if you have a $100,000 account and you're trading, a couple strangles in NVIDIA or whatever it is, if you're like 5, 6x notional, that you're running into problems with this type of stuff. But if you're at like 1.5, 2 times notional exposure, you have a lot less risk in terms of buying power expansion, stopping you out of a losing trade that might become a winner a week later.
Yeah. Yeah. Good call out.
And it's fascinating too, just watching obviously the stock slid down, saw buying power increase, but then it comes back up and then you see that kind of release in buying power, so the way that it moves around.
Yeah. And just about, this is having that buffer capital, right? Like sometimes it'll go back up. And with like this NVIDIA position we were looking at, it went up and then went right back down in terms of the buying power requirements, just looking at this one example. But it's, having a little bit of buffer capital with an undefined risk position, just in case you do get those, fluctuations, the, volatility. And then when we go to the next slide, what we actually see is that the kind of like hidden risk of those high pop positions going out super wide is that those buying power, fluctuations, I guess you should say, or that variability is actually a bit more volatile. So when we're looking at the cases when we were monitoring 5 delta, 16 and 50 delta, when we looked at the maximum recorded increase in buying power, it was actually highest with those 5 delta positions, which, just kind of that makes sense. You're collecting less credit in general. Your Greeks kind of get weird when you get very far out of the money. So that's just kind of something other point to keep in mind, which is that not only is there this tail risk exposure that's kind of inherent to strangles, even when you're going very far out of the money, is that your buying power can be more sensitive and potentially increase, relative to the amount that you're collecting more than those, tighter positions or closer to at the money.
100%. And this says it all right here. If you're selling these far out of the money options, it can be a high probability trade, but you got to make sure that if you do get that 10%, 20% sell off, you can withstand that, because otherwise you're going to be stopped out at an out of the money loss, which is no good.
It's no good. That's no good. So it's, time and a place for everything, including those very far out of the money positions, but just being mindful of the risks that aren't immediately obvious because, small credit, high pop, there's those risks in there. It's just about being mindful of that, about that. About them and when to use them. Oh boy, is it Friday.
It is. It is actually Friday, which is great.
Oh boy, am I excited it's Friday. We can get into some takeaways though. But lower delta trades, wider trades might look attractive at first, high probability of profit. But they do end up having lower credit, even though you do have that tail risk exposure. As unlikely as it might be, that's still there when you're trading a strangle, even though you're profiting, the majority of the time with these types of positions. So it's really just about collecting enough to kind of compensate for that tail risk, but then also having enough capital to sustain the trade throughout the time that you're going to be holding it. And just noting that like those very far out of the money positions can actually have larger buying power increases, especially throughout the day. But just being mindful about having that buffer capital as well. And then, making those adjustments if you're going very far out of the money, just being mindful of that, because some of those, risks, some of those nuances aren't immediately obvious just from the face value statistics.
100%.
Yeah.
Love
true.
it.
Cool. I think that's all I got.
Beautiful. Well, yeah, that is a super important segment, and that applies to really any trade you're doing. And you could see, like, even if you had a 5 delta or 16 delta or 30, 40, 50 delta, like, you still have to account for the buying power expansion that can happen and will happen if you get a big move against you, especially to the downside with volatility expanding.
Right. And then one way to kind of get around that is just by throwing a wing or two. Know what the max loss is on the trade, even if it's very far out wing and you're basically trading like a synthetic strangle or synthetic, naked position effectively. That's one way to just kind of know in an undefined risk world what the worst case scenario is.
Awesome. Love it.
Yeah.
Good stuff.
Cool.
Do you trade any of these? You trade any of these earnings announcements?
My New Year's resolution for the last 2 years has been to not trade earnings. But I'll do occasionally something, what I call like diluted earnings trades. So if, AMD's coming up trading NVIDIA or SMH, or even these days QQQ, right? So getting exposure through like a correlated asset or through like a sector ETF, or even these days, like a market index. So I do my diluted earnings trades.
I like the term.
You're so safe.
Why?
I didn't say that in that way. I'm not.
Where's all this?
Why?
On a
When is safe
Friday?
a bad word? What?
It's I don't know. It had some stink on it.
What? You're so safe.
Yeah.
Is that better?
Nobody could hurt you. These
okay.
earnings
The
trades
New Year's
can't hurt you.
resolution came up because I was not safe. So that's kind of. It came from life lesson.
I've been there. Remember when
experience.
Meta was Facebook and I sold a strangle and it went from 210 to 135 and I closed it and then went from 135 to 210 and I watched all the profits come back that I locked in for loss. I remember that. I'll never forget that.
Yeah, I had one of my largest losses ever in my personal account in FB. That was actually what I based some of what we talked about on the Bad Trader Tour. It was just like this just bullheaded trade, just trying to get long puts in there in a near term. Wasn't weeklies at the time, but it was near term, and it did not work out well. It was a lesson I had to learn.
Yeah. Sometimes you got to learn lessons, and then sometimes you get called safe because of the very well-earned lessons that you learn.
This was safe, a 4-letter bad word.
I would say
I don't understand what's happening here.
The one thing about us is we bear the scars of the markets, but we've learned from them for the most part. So you're getting the good stuff now.
God, man, you are so safe.
Okay,
I just don't know what inflection you want me to say.
I'm gonna go drink my coffee and think about unsafe things. Potentially, I'm like, I gotta mix
Oh,
it
see,
up.
that's a bad word. Unsafe. That is how could you say that? I can't.
I'm just gonna go drink my coffee. I gotta think of something to do. I gotta spice it up. I don't know. I got my diluted earnings trades, which are safe apparently.
Pour some bourbon in that coffee. That'll be a little unsafe.
Yeah,
that's a little dangerous. Yeah.
It's
almost August. Summer's like kind of behind us, so I'm like, bourbon in the coffee.
There you go.
Feels
there
right.
you go. All
Well, Julia, appreciate you. That was awesome.
You guys. Appreciate
Have a good
it.
weekend. See you
Bye.
later.
Peace.
E-minis down 3, NASDAQ up 40. Crazy day today. We just needed this little Amazon thing to just go down. I don't know what the deal is.
It's strong, bro. It's not fading with this market. It's doing its own thing today. Kind of like Microsoft yesterday.
Indeed. But yeah, join us on the YouTube chat. We've got about 10-ish minutes after this break. We can rip through some questions, trade ideas there. But yeah, join us there. We'll be back in a couple of minutes. You're watching Tastylive.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex. now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tastytrade.
We built Tastytrade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tastytrade.
What's up, everyone? We are back. We've got choppy market here, and we're looking at Amazon. I'm trying to make this adjustment here. I'm noodling on this. I mean,
what you thinking?
We've got the 240, 255, 270 call crab trade. This is the one issue with the crab trades is you can get blown out to the upside and take losses, which is what we're seeing today. But I can still buy back the 255, 270 components for today that are basically chopping around for zero extrinsic. And I can move it to August since my long option is in September. And I can keep the same strikes, the 255 shorts, pick up some value there. And then I could keep the same exact trade on and just roll it to the 255, 270, extend the duration by 20 days here and pay a small debit. Or I could take on some more risk to the upside.
Widen it out.
Move that long option 5 points out of the money and collect a credit. So what this would do is I would be taking on $500 more risk on this difference between 270 and 275, but I'd be picking up $1.80 in credit, let's call it, which means my additional $5 in risk is really $3.20. And if we get a downside move, I can make all that back. It would be a profitable trade. So I think I might lean towards this, just taking on a little bit more risk, forcing a credit by breaking this wing here and making it wider, taking on another $500 of credit spread risk, but giving myself the ability to extend the trade. And any kind of sell-off will be golden, and we'll be able to close it for a winner. Feels right.
Feel you. Makes sense.
If I can get filled, which
that's the thing.
I'll probably have to give up 5 cents. There you go, 170. All right, so now I've got the 240, 255, 275, so a little bit wider on the credit spread side of the call spread, but picked up $1.70. So I reduced my basis from $9 and change down to $7.45. And again, if we get a sell-off in Amazon, we will be golden and we'll be able to just close it for a winner.
There you go.
So there's the adjustment. E-mini's catching a bid here. NASDAQ up 100. E-mini's up 7. Let's defer to the YouTube chat, shall we? But let's review real quick before we do. Let's review these trades of today because we've done a lot.
Yeah, and I certainly you're a lot better than me than putting in explanations. I haven't. So,
I mean, I try and do it quickly, but it's not always as easy. But real quick, I just did 2 SPX Super Bowl. The downside put spread was 10 points wide. The upside, sorry, this is an Iron Condor. Downside put spread is 10 points wide. Upside call spread, credit spread is 5 points wide. So I wanted to take a little bit more risk on the downside because I knew I had my SPX Butterfly that completely eliminated all risk to the downside as long as I had it. And I closed that Butterfly for a $1,400 winner. So I have no risk to the downside if you think about it holistically. But in isolation, yes, I have $1,000 of risk to the downside here in SPX. but I like the strike point, and I think if we just chop around here and just open flat Monday, this would be a nice trade. And then NDX closed that butterfly right when it was literally at 28,000, 27,997. And at any point in time, that's going to be your max profit zone or close to it. So just booked that winner, $4,100, and that's the biggest hedge winner I've ever had, I think.
Yeah,
This account at least.
So.
Yeah.
Nice.
But yeah, what did you do today?
Let's see, where do we start? Marvell. So Marvell on the 28th, I sold. If you remember, we came in that day. We had big move to the downside. I sold a put in there early on the open. Similar deal in GLW, both of these. So similar type trades. And again, I think I did Marvell because there was no earnings, and there's earnings further out. I think I can't remember exactly why it shows August. Things are moving fast and furious here, but yes, that was the deal. So GLW might have had earnings that day. I think that's the day where I closed out those short call spreads, and as it went further, sold a put in there. And then Marvell, same deal. These stocks were down big that day. Sold a put in August because it does have earnings in September, and I didn't really want to go there yet. And as the day went on later, I was like, you know what? I'm going to buy some call spreads in these, just looking at where the names had been and the kind of pops they could potentially have. And sure enough, we have this morning. Big move, closed the whole package. Nice win on those. SPX, this was a what am I looking for? Blank. Jeez. The Super Bowl. Super Bowl that I put on Fed Day. That, again, with the big move this morning, was able to take that off for a nice win. So certainly did not expect a big bounce back today, but I figured maybe come August, we will actually see bullishness. But with this move this morning, it was just like, I got to take it off. I still have another one as well, a little further upside on the call spread. Apple, this was one of our trades of the day from a couple of days ago, and took this off for a nice win. Bought this for, I can't remember off the top of my head, maybe, I think I got $600. So I might have bought this for 8 and change. Yeah, I think it sounds about right. I think I made $600 on this. Reddit, with the stock moving down in earnings today, sold this put spread here, a little on the aggressive side, but stock is aggressively selling off, so I figured I'd get aggressive here. And Coin, moving down big on earnings today, seemed like a Super Bowl was in order. Another August play. We're starting to go out to August for some of these things now because, again, September is going to be closing in on that 45-day window, which is going to be the great selling opportunity. So if you kind of look at my book, like the way I look at this is like right now I think I have a lot of long September, some short August options with a lot of different calendars or diagonals, if you will, whether it's in tech names or whether it's in some of these consumer staples names. I got quite a bit of that. So I'm starting to push some things out to October now, because I'm trying to manage the book in that way, right? Like what is hard is when you get to a point where you get like August, say, for example, at a 21-day expiration, and you got to go through and look at what's going on and try to manage your book, right? You don't want to have every single position that's in that month. So at some point, you want to start to place other positions a little bit further out, and then you don't have to think about or manage those or worry those as much. Or when you have a day like today, the world isn't caving in on you because you got so much 0-day, 1-day, 2-day, 5-day stuff to manage. Some stuff is further out, and it's not as crucial.
Yeah. For sure. I just joined you in that Coinbase Super Bowl. Different strikes. I just went with a 120, 110, so just like slightly different. And then 190, 210 upside, collected 50 cents. And again, these are we're buying the call spread, but we're collecting a credit because we're selling a put spread that's slightly more valuable than the call spread we buy. To be exact, 50 cents more valuable than the call spread we buy. So I collected 50 cents in the middle here, but asymmetry to the upside. Big max profit if we get that move higher. But the Theo shows you with a nice range. If you get a reversal of today's move, you'll get about $350 out of this trade because you can sell out of the call spread for more than the put spread you had to buy back. So that's how these work. We've been doing them left and right, and they've been really nice trades. Like I'll do this into perpetuity now because I just think it's just one of those things where instead of selling the put spread for what is this? Instead of selling the put spread for $2, which is still a nice credit, don't get me wrong, but the max profit, if we do get a big rally to the upside, you're not paid on that huge rally to the upside because you can only make your credit received. So I think especially for defined risk trades, I really like the Super Bowl setup. Undefined risk trades, I think there's a lot more reasons to just sell the put or just do a strangle or whatever, because you have unlimited flexibility with your strike movement. But defined risk trades, you don't. So I like the asymmetry to the upside by giving up some of that credit and changing your max profit to the long call spread to the upside. And again, if you get a 20-point rally in Coinbase, this 260 goes down to like 160, maybe you make $100, but because you're giving up your credit and transferring your max profit potential to the call side, you can multiply your profit potential pretty easily here.
And it's not even a vol play. That's the great play about it too. You don't necessarily have to worry about vol expansion or contraction to some degree. And if you go to the chart, I mean, I thought it was just fascinating. Again, this stock is down big, but if you just look at that, like 5 go to 529, I think. There's that kind of spike there. You're kind of looking for it to May 29th? May 29th. Yeah, you're kind of looking for it to get back above that zone, right? Like that's really what it is. This damage that's happened in June and July, if you can get back above that zone, you can really see some interesting profits there. So give it a couple months here, and we'll see what happens.
Craziness. Well, Jermal, it was a fun morning as always.
Yeah, indeed.
Have a good trade of the day in just a little bit
buddy.
here. We've got for an hour long, we'll have 15-minute segments starting at 11:30, and we really do deep dives into those trades. So check that out. But we're going to pass it along to Chris and Liz over here in just a second. But if you want to reach out to us on Twitter, I'm at Trader Mikey B. Jamal's at Jermal Chandler. Keep those questions, trades, ideas flowing in the YouTube chat. We'll get to them as we go along the day. But what a day. What a day. We're going to take a quick break, and Chris and Liz will be right back on the other side of it. You're watching Tastylive.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We're back. You're watching Tastylive. This is Confirm and Send. I'm Chris Vecchio. She's Liz Deer King. Liz, how are you today?
It's Friday. I'm happy as a clam. We're off for a weekend. Market is moving, bouncing. Mike Butler was giddy in between the shows. So all's good. How about you?
I didn't have that NDX butterfly on, but I love seeing my friend succeed. So I'm very happy for him.
You know what, though? I always said this, and I would get on my soapbox and say this trading isn't a zero-sum game. You can make money.
No.
And that's what's great about it is you can support each other. Versus the trading floor where you're standing directly next to your competition, it's not like that here.
No. And what we're trading is a deep enough and liquid enough market where there can be multiple winners. So kudos to Mike. Excellent trade. Long-term trade. Excellent trade.
You know what's so funny is that Jermal has the same one on, and he's holding it.
Oh, Jamal's a cowboy.
We'll see what today brings.
We will see what today brings. Today has already been a day of sorts, right? We come into this market. I checked in this morning. The Nasdaq was up around 1.1%. Liz, the S&Ps were trailing behind, still up around 0.5% here. We've taken a little bit of a turn to the downside and then a slinky back up. 74.76 right now on ES. We had a high for the session of 75.17. We have a low here just a few minutes ago of 74.27, but the slinky continues. Liz, obviously everyone is focused on what's going on with Amazon and Microsoft this week because they've continued their epic runs. Amazon now on its best pace day since 2012. Haven't seen a 15% gain in Amazon in quite some time. Not bad news for me. Super Bowl and Amazon's working out a little bit better today than it was the past few sessions. I'll say that.
What cycle are you in, and did you take it off?
I did not take it off because I am perhaps revenge trading here, but that's a different problem for me. The 230, 235 short put spread, long the 285, 290. It's still at 21 days to expiration. So I could take it off right now for, flip it for a little bit of a profit. The short put spread and the long call spread side both would give me a little bit of pocket change here, but I think this still has room to run in the short term, and I'll hold it.
A quick question looking at that position. And once again, everybody's got to make their own decisions. If you go back to the trade page, am I correct in that you can buy that put spread back for 10 cents?
I can buy that put spread back for 15 cents right now. So I wanted to bring it down to 10.
Okay, so that's something that I would look at. A lot of times when I have winning trades that there's still 21 days left, take all the risk off the table, right? So I'm assuming you collected a credit for it. So you would have that call spread on for a credit, and you got zero risk. And it's pretty far away right now, but
it is.
Anything can happen. So a lot of times if I have a spread, especially a $10 wide spread, is that 5 or 10? For $10, I'm taking the risk off the table.
I'm going to keep it a little bit longer. Amazon seems to have some good juju going for it today.
No, this will not affect your price at all. This will not affect your profits at all. Right.
Oh, no. Abort, yeah.
It's just taking 10 cents away from your profits.
But I have to leave some content for other shows I'm doing today, Liz.
Okay, fine.
So if I do all my trades here right now that I'm going to talk about later today.
Fine. So. Okay, now I'm picking up what you're putting down.
We still have 5 hours to go, and I'll be on for I think another 2.5. So I got to spread it all out. I got to spread the love out here a little bit.
You get a gold star for that. I understand.
Microsoft here, it's still up by 0.04%. It's a little bit off the highs. So now that we've had these big earnings, we had what I call the Mama Group: Microsoft, Amazon, Meta, Apple. What do we? Yeah, if we can call it FANG or Mag 7, why can't we just call it something else? So
the Chris Vecchio term.
I thought of that this morning, and I'm like, well, how come no one said that before during this earnings week every year? It's Mama Week every year.
I'm running with it, and I'll give you credit. I love it.
There we go. So, how do you approach? So we've had these big moves, right, in two of the larger mega cap tech names here. We've seen a vol compression as well on the other side, right? So this is not a big move with volatility sticking around, suggesting the market's going through a major repricing of its previous expectations. How do you approach this now? Because you got the big move and you've already had your vol crush.
Hold on, let me turn this off, turn off the phone. What am I doing in these? I traded, I avoided Meta, thank God, but I was in Microsoft, Apple, and Amazon. So Apple wasn't playing according to what my directional assumption was, but I closed both Apple and Amazon together as a pair because I made more money in Amazon than I lost in Apple.
Right, and you've mentioned that before. Sometimes you don't view the earnings idiosyncratically. You view them as a basket of trades, and so it's your Thursday earnings trades.
Right.
And whatever comes out of them, you net. If you get wins, then that's what matters most. The goal is to make money. So if 2 of 5 hit by your positive dollars, that's a good day.
I need to be crystal clear on this. It wasn't like it was a great day. Amazon knocked it out of the water, but I lost in Apple. So I made a couple $100, right? So I could have made a couple thousand if everything had gone in the right direction, but I net was positive. I just don't want people to think that I'm like, talking out of both sides. Being like, I had a great day. No. Do you know what I mean? I didn't lose with the Apple and the Amazon.
Liz, any day in which I do not lose money is a good day in the market.
Okay. Fair enough.
Right. Trying to protect the capital and just keep growing the pile. All right. We're about 10 minutes in here. I think it's a good time to go over to confirm and send. Liz, what do you say?
Let's do it. I'm Chris, as my favorite macroeconomist, and I know you don't like this. What do you want me to call you? Futures expert? Macro futures expert?
Futures. Leave macro to Ilya. Futures.
Okay. Our resident futures expert. I'm going to read you, I believe, the first three. Because you, and I also, if we have time, I'd like to pick your brain about the yen.
Yes.
At the end of the show, okay? So I'm just going to put a pin in that. But let's go to question number 1, please. Amazon ripped 14% and Apple dropped 8%. The fourth Mag 7 split in a week after Microsoft up and Meta down. When these giants keep pairing off in opposite directions, is there an actual pairs trade in that? Or is it just proof that the AI is now name by name?
I don't know if there's a pairs trade in any of these. I mean, what did the Situational Awareness Fund do? They were short software and long AI. And so when that pair trade reverted hard in June and July, what happened to the fund? It blew up, right? So I wouldn't suggest doing this in a pair trade, but absolutely the AI conversation right now, it's in the earnings this week. The companies that are monetizing their spending and turning it into results for their shareholders, they're being rewarded. And the companies that are still trying to figure it out, they're not. Microsoft has Azure. Amazon has AWS. The cloud providers are doing well. It's kind of like the split between like the refiners versus the oil services providers right now in the energy sector. So cloud providers, hardware, doing a little bit better, at least on the bottom line. Meta, Apple, no. And Apple's problem is different than these other ones too, right? Theirs is a supply problem, that the cost of the chips is becoming too great, that they're going to have to pass it on to consumers. They're worried it's going to lead to a decline in volume and sales. So fundamentally different issues here. But I wouldn't approach these as pair trades. But I think the metric right now we're looking at through the market this week is, are you spending a lot on AI? And if so, are you proving that it's turning into actual dollars and cents? And that's the deciding line for me.
Yes, I agree. I mean, just to make this simple, I would go name by name. I kind of agree with that. It's not; these aren't good pairs trades. And I like the fact you brought up the account that imploded with the pairs trades that were in there. It does implode, and if it's not a true pair, meaning you're going to get some true pair, meaning the ZNZB, which I know are trading exactly the same price right now. At least they have a high correlation, right? Or if you're going to look at gold and silver, have a high correlation. These might be correlated, but they're different products. So a pairs trade, you could lose on both.
Right. I mean, when I think of pairs trades, it's like Ford and GM.
Yeah.
Right. Otherwise, you're doing something that's a little less perfect, it's indirect. It's not. It can turn against you quickly. And maybe this week is a good example of that. But so yeah, just generally though, Liz, what do we say around here? Be ticker agnostic. Treat everything on its own merits for what the math is going to pay you, what the market's going to pay you for taking that risk.
I like it. Ticker agnostic.
Ticker agnostic. Okay, we move on. Question number 2.
Number 2, let's go to the second one. When stock gaps up 14% like Amazon, is the IV gone by the next morning? Is selling into that post-earnings column smart, or are you just selling cheap volatility on a name that proves how far?
Amazon volatility really did take a cliff dive here, Liz. 58 IVR down to 25 today.
Right.
I mean, let's go. Just what are we getting paid for out here? Let's go to 49. Let's try to stick to a typical Tasty cycle right now, just to the bottom of the expected move. Just wrapped right around it.
So it's not. It's interesting because it looks like it tanked, right? Oh, you've got an IVR of 25 on yours.
Yeah, I do have an IVR of 25, but it's a 33 raw volatility in the 49-day cycle right now.
I must not be updating, and that's fine because I did have a little bit of an internet issue, so I think I have stale numbers. So I'll just look because I'm sure yours is accurate. So yeah, that's a big vol collapse.
No, it's a very big vol collapse. So if we're gonna sell premium here, one of the questions I always ask myself during these big vol crushes is now the market pricing volatility too low for the new regime, or is this the new regime here? I Either way, though, I don't think that answer really matters, because if we go out to 49 days, if you wanted to sell more volatility, are you getting compensated for it? And the answer is right now, yes. $5 wide strikes at the expected move wrapped around it. What do you see? $1.81 in credit? That's north of $1.67, Liz.
Yeah.
So it fits the criteria either way.
It does. It does. It's not it's not the end all be all, but this stock is operating exactly as we would expect a stock to operate. Even if I didn't know they have earnings, when you get a gap, this is traditionally what happens, right? So when you get a wild gap up move, unless it's in gold or silver, you're looking at Amazon, that vol will get sucked out. Now Apple is the exact opposite, right? We got the down move, so the vol got to keep its wings up. So it's easier to defend something to the downside because you have that additional premium. I like a new initial trade here, to your point, in Amazon when you were looking at that. But I wouldn't avoid it because I don't know if it's a new regime, but that's exactly what you expect volatility to see. And you're using the options to say if it makes sense or not. So I liked what you did there.
Right. And we can always go back to the mechanics. That's the important thing. You can have your opinions on things. Like, I think this sector's going really well, and you look at your charts and it's bottom left to top right. And so I want bullish exposure. Okay, but still stick with the mechanics within expressing that view. Doesn't matter what the view is.
Right.
We can go to question number 3. We're just scooching through these today.
Well,
Question number 3.
I'm trying to get to the end, so I'm just. So when I close the trade at 50% profit, sometimes I get there in 3 days, and sometimes it takes a month. My gut says these are different situations, but I treat them the same. Should how fast I get the profit change whether you take it? I'm going to answer no. No. 50% is 50%, 50%.
50% is 50% is 50%. Okay. I don't know. I would argue speed's different, right? It also relates to your expiration cycle. So if I'm in like a 50 days to, if I'm in something short dated, like a 0 DT, or we'll say they said 3 days to expiration. If it's like a weekly, we'll say I'm 7 days out, and all of a sudden it's 3 days and I'm at 50%. Yes, I'm getting there. If I'm in something that's a little bit longer term, right? Let's say I've had this happen in gold quite often last year, where I'd buy something that was just a little bit out of the money, like 25, 30 delta calls, and gold would pop then within the next day or two, and all of a sudden this option, which is still out of the money, is worth 50%.
Wait, hold
profit.
on. We got to rewind here, Chris, because we're talking about two different things. If you're talking about buying something, because buying something is not 50% close. 100% of the time, that is not. 50%.
That's what I'm trying. Right. That's what I'm trying to just separate. So if you're buying something, right, you have a different mentality than you're selling premium.
Correct.
But if you're selling premium,
50 is
just
50
take
is 50.
50 is 50 is 50. Right. So it's not. Depending upon your volatility perspective there, and that's just the only reason why I wanted to mention that.
Yes. So I agree with you. And I apologize because I always assume we're selling premium, right? So if you're putting something on, take it off at 50. I don't care how fast you get there. It is a completely different animal when you're buying something, because those are not high probability trades. You're actually, in fact, putting on a low probability trade. So you can hold on. It's a personal decision how much profit you want to take. If I'm buying something, I'm assuming it's going up, and I have a stronger assumption than it is when I sell something. And if I assume it's going up, I might want to hold it for a long time. I might be looking at tenfold, fourfold, threefold. It's a different animal than selling premium.
Yeah, and I know the question really was about selling premium, but it says 50% profit can happen in the, there wasn't anything about selling premium in the question here, Liz.
No, there wasn't. That's what I'm saying. But I agree with what you're saying, where if you're selling premium, it's 50%. If you are not selling premium, it's a personal choice. You can let it run if you want to.
Yeah, and that's why I bring up the time component of this, because if it's like, I still have 90 days to expiration, this thing is going in my direction, I'm going to be able to get 100% profit out of this. If I'm in a 90-day trade and it takes me like 87 days to get to the 50% profit, I'm not going to hold on for 3 more days to try to get any more out of it, because clearly the idea didn't work out as well as I thought it might have. It took too long. So being agnostic about the selling premium component of the question, it's really about, if you're selling premium, 50% is the rule. Just do it, move on, redeploy capital.
So, and let me ask you this, only because this was an age-old question that I've answered. If I've answered it once, it's 17,000 times, okay? Because we're options traders. If you use options and set up a stock replacement, what's your profit target? It's a stock replacement. So you actually have the exact same metrics as long stock. We'll just use long for this example. What would be your profit target?
When I'm doing things that are long stock, I really don't have profit targets.
Yes, thank you so much, because I kept saying profit target for me could be profit target different for somebody else. If I'm long Amazon, say, maybe I think it's just started and I want to keep keep going with the rip, but somebody else might look at Amazon. I'm not, but somebody else might look at it and say, I'm out. I made great profit today. I'm going to walk away. Long stock has no profit target. It's a personal out.
Yeah, I've seen some people discuss this like, well, because I'm doing it this way, I've got to get my 5% or 10%. It's like, no, if you're just doing it, if you're creating a synthetic long stock position, you're not looking for the high convexity move. Ultimately, particularly a retail trader, you can't control that many shares. And so you're looking for the thing to go up. How far up? Who knows? Who are we to say how far up is? But yeah.
That was the question. We've gotten it so many times because we use options to create stock positions. They'd be like, what's your profit target? I was like, what's your profit target?
As much money as possible. This one is decidedly for you. Question number 4 here. A Jade Lizard supposedly has no upside risk as long as the credit covers the call spread. Where is the real risk actually hiding, and when does the setup make more sense than just selling a strangle?
So the real risk is the same risk to the downside in a strangle. A Jade Lizard has one naked option, and it is a naked put. It is a naked short put. So if you understand selling a put, selling an out of the money put, that is where your risk is. You would be, if the stock drops, you would come in long 100 shares of stock, or understand that you can roll that put. So it truly is selling a put with an inflated volatility. So think about it from that perspective. So say you're selling the 100 put and you can get $2 for it. And then you're adding on maybe you're getting $4 for it. Then you're adding on a call spread for $1. It's as if you were essentially selling that put with an inflated volatility. If you can't lose to the upside, if you cover that. So when does it make more sense than just selling a strangle? I think in products, I like it better than selling a strangle 95% of the time. But when you think about it, in products that have already been beaten down, that are already at the bottom of their range, I've been hurt on a rubber band back up, right? I have been. It's happened to me time and time again. Some of my major losses were coming from rubber banding up products that I had sold strangles in, because you can't defend to the upside when the volatility gets sucked out. It's very challenging too, right? Where when something goes down, the vol pops, you can sell premium against it or roll and take additional credits. So I think it makes sense when you get yourself far enough away where you have a little bit of room so it can run up a little bit. And I think that setup makes a lot more sense than a strangle on a product that has been down. Because if it rubber bands back up, you don't lose any money.
Right, because a strangle, you're selling both tails. The Jade Lizard is, effectively saying, I don't want to be short the upside tail, but there's still rich enough put skew in this market that I want to get short that put. And so, yeah.
And the person, like literally, we created the Jade Lizard, and I know you can put it in the platform where you say Jade Lizard, and it puts it in for you. A true Jade Lizard is a third of the width of the strikes on the. I'm just going to put in dollar-wide terms. A true Jade Lizard would be 30 cents on a call spread and 70 cents on a put, right? So then you can extrapolate that out for a $5 wide or a $10 wide or a $20 wide, however you want to set it up. But you truly want to get as far away as you can and get 30 cents on a call spread or the equivalent, whatever, if you're in a larger product, and 70 cents on a put. So they had run study after study after study about that, where that truly will get your distance as far away as you want, or far away as you can. If it's a true Jade Lizard, it goes 70 cents on a put or 70% and 30%. And that's how it should be set up. So I know Jade Lizard gets thrown around because they say it's a Jade Lizard if you've covered your call spread. But you could throw a call spread. You could throw a call spread right at the money and then sell a put down there. That's a bearish trade. That's not neutral and bullish. That's a bearish trade, right? Because you need it to be down in order to go in there. So by sense of the word, the Jade Lizard was created to be a third of the width on the call spread and 70% of the call spread to the downside, as far away from the monies that you can.
One of the things I appreciate that you've always emphasized, because when people stumble along, this is a little bit more of a complex option strategy, right? It's not just simply selling a put vertical. Right. People think that they've somehow discovered, free money or risk-free trade in the market. And that's just not the case here. You're short a naked put spread on one side of it. So there's obviously going to be risk if it goes in one direction. And the market what is the Latin phrase? No pratium gratuitum. There's no free lunch. The market doesn't give you free money. Right? So
you are taking risk. The Jade Lizard takes advantage of vol skew. It takes advantage of people knowing that you're going to be neutral to bullish. It takes advantage of theta and time decay. I'm not saying that I think, but looking at Apple. If I would do a jade lizard in a product like Apple right now on a day like today, because if it rubber bands back up, you don't lose. You can take advantage of that volatility, the vol skew. But this would probably be more of a $5 wide, right? So did you just put this in?
Yeah, I'm putting it on the platform now.
Okay.
I did a long jade lizard. Here we go.
Okay. Yeah, so you see how it sets this up? I'm not a fan. So what you're trying to do, if you delete the put for 1 second, if you don't mind, and do a $5 wide, you got to get at least a third. So keep bringing it down until you get a third.
$1.67.
Right, yeah, so that was fine. You can go 310, 315. So you got to get about 350 for a put, which is going to bring you to 290. Am I looking at that right? 290, 295?
305. If 295s are trading at 460, so
and
320.
This is how it should be set up. You want to get yourself away. So in a true jade lizard, neutral to bullish, and that's okay if you have a little bit of risk to the top side, means you're getting yourself as far enough away. So it's strangle-esque from that perspective, right? It's strangle-esque from that perspective, but you're eliminating your gap up risk back to the upside. So that's usually the setup. I have a hard time putting a jade lizard on when something is at the top of its range. If it's come back a little bit is when I love a jade lizard over a strangle because I don't want to lose to the upside. Yeah, here if I lost 30 cents, this is a good setup.
Well, think about how a jade lizard would have done in a name like SanDisk back in like June through now. It'd be a freaking nightmare.
Yes. But so would a strangle, and so would a short put.
Yeah, they all would be.
So that's what I'm saying. You can't say the jade lizard would have performed worse. It would have performed identically.
Yeah. Well, even the short call spread side here, that doesn't hurt. It has helping by rather being either way though. The point is, where in the cycle? When I think of something like this, I think of top left to bottom right in my chart. Right? Where has the market come in a little bit? Where can I put this on where maybe we're going to find a little bit of a bottom and start to move to the upside here? And if we move up violently, okay, the upside is capped.
The upside is capped, correct. But this is also a slow grind up too, because both know that if it slow grinds up for the next 21 days and say it ends at you're moving up to 310, you can take this off for a profit because you will make more on your short put than you're losing on your short call in a slow grind up.
Sorry, Frank adding some Latin to the conversation, which we can discuss.
Frank, I love Frank the Great. He's the best.
Liz, we only have 3 minutes left here. Let's just take a quick jaunt around these markets. You said something elsewhere about the dollar today, in particular, our friend here, Mr. Japanese yen. What were you inquiring about?
So I just tell me exactly what happened. Why are we getting the move? Why did we get the move yesterday, and why are we getting the move today?
So a few weeks ago, we had a rates check from the U.S. Treasury when the Bank of Japan, Swiss National Bank, any of these other foreign central banks intervene in the currency markets. They usually like to do it with coordination with the Treasury and the Federal Reserve. So that way the Treasury and the Federal Reserve don't freak out like, what's happening, right? Okay. And also the Treasury and the Federal Reserve can help facilitate such efforts because we have our own reserves, we manage other people's reserves, yada, yada. So what goes on? We had a rates check this morning in dollar yen, which is basically the U.S. Treasury going out saying like, hey, if I wanted to sell some dollar yen up here at 163, what can you do for me? And when the banks hear this, they go, oh gosh, why is the Treasury going to come in and buy the yen? They find it to be a precursor to intervention. So the wheels start to turn. We had that happen. It appeared yesterday morning. BOJ, Ministry of Finance intervention, because it was confirmed by overseas newspapers. The Japanese newspapers were all over it. Today, Reuters was reporting that we got another rates check here. It does make sense. We just had a collapse in oil prices. We've had a retrenchment in Fed hike odds. And the BOJ and Ministry of Finance, you let this thing go up too far from here, then they're just going to lose control of the entire situation. The good news, though, Liz, the yen speculative positioning is not where it was in the summer of 2024. Right? When we had that yen carry trade unwind.
Oh, yeah.
What happened? The NASDAQ down 15% from the July high to the August 5th low. That yen positioning is just not there right now because yen yields, Japanese government bond yields, have been trekking higher. So it has not been the carry trade vehicle of choice. That vehicle is becoming the Swiss franc, believe it or not, because they're telling the market they're going to intervene in their currency if it gets too strong. They have no inflation, and they're going to maintain their zero rates through the end of the year. So if you're borrowing in something, safer to do it in a Swiss franc that's going nowhere as opposed to a Japanese yen where all of a sudden your yen liability may be more expensive overnight thanks to an intervention.
Oh, so are you doing anything in the end? And if you do, are you using this or do you use 6J?
I use 6J because I like the leverage. I had on an intervention long because I thought that they were going to intervene earlier. So my strike was 65, 66 on a call spread here. So not exactly working out right now. It's actually flat. I could flip it off for nothing today, and I may do that to reset and give myself a little bit more time. But they seemingly have to intervene around these levels, from my understanding of how this market works.
And you're using 6J because that's where I would land. So
It's more fun. Yeah, long 6J.
Okay.
I'm long a call spread in 6J.
I like it.
But this has been a trade that I've been holding on ever since we touched 160. I've been putting this back on with like a 30 days to expiration, just keeping it as a lotto ticket. Costs around $100 to make like 1,000. If it hits once, I'll be fine.
All it takes is once, like Johnny Dangerously once. Did you ever see that movie?
I have not. I just watched Obsession this week with my wife after watching Backrooms, and I'm not a horror person. And let me tell you, if you like horror movies, watch those movies.
I don't like them at all. I do not like them. Sam, I am.
Well, we're done here. Confirm and send. As always, send your questions. Research at tastylive.com. Research at tastylive.com. You ask, we answer to the best of our ability, of course. We have more Tasty Live programming coming up next. Gus and Errol are here for some live trading. 12 Eastern, 11 Central at the top of the hour. Jim Bianco from Bianco Research. He's coming to join me for a conversation on the show. Be sure to tune in live. We're taking a brief break here on Tasty Live. We'll see you on the other side for more live trading.
Happy weekend.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What is going on, everybody, and welcome back to Risk and Reward. Today's Friday. We got another volatile price action that we've seen today. We're going to get into all that, our positions. Let us know what you're looking at. Let us know what you're trading. Brother Gus, how we doing today? How we feeling?
Doing good. Yeah, hanging in. Interesting action to end the week here. Getting a little bit of drawdown. I'm well prepared for it, but portfolio is certainly looking a little bit more red than it did yesterday.
Yeah, no, I know we're seeing a little bit of a pullback here. We haven't given up the entire upside move that we had seen yesterday, where we rallied almost 1,200 points to the upside. As the market opened up this morning, we had a little bit of a rally to the upside, and then we've seen a little bit more aggressive selling kicking in to the downside. But before we get into things here today, guys, did you hear the story about situational awareness and his hedge fund, Leopold, I believe is his name? Did you hear any of the headlines about that? I thought that was kind of crazy.
Yeah.
I didn't get into the details of it or the weeds of it, but I get the gist of it.
Yeah, I have seen a great deal about that. I don't understand. I'm still a little bit confused by the situation. Like you said, I haven't read into it super deeply. I know he sold everything directly to Citadel in a single transaction, but then everyone was acting like Citadel fleeced somehow, or it's some kind of insider trading because every company that he sold to Citadel was up huge yesterday. That's kind of where it all
is there
becomes.
some conspiracies about that as well?
That's where, that's just where it all becomes gray to me because, it's like every single company that was in that portfolio was up double-digit percentages yesterday, like right after Citadel bought everything the prior day, and so that was kind of the whole tinfoil hat thing going on. But I don't really understand the full details of that side of things. But yeah, it is pretty crazy. With AI, it's like anybody can LARP as anything, man. You can just be whatever you want.
Yeah, that's definitely been what we've seen. I mean, we've seen it with so many different companies like Allbirds. I think that went through you for a whirlwind when you saw that headline at first. You're talking about this shoe company is going to become an AI company. I've heard a couple other people touch on that at the same time. So I don't know, this entire AI wave right now, you get some bad actors in there. I'm not saying he was a bad actor, but just saying you get a lot of, you get a lot of audacity and a lot of ambition in terms of what's being built and how people are just, riding this overall AI wave and this AI hype. And I think that's another story that kind of lands in that bucket a little bit there. But, I think he'll be able to grow something from that. I know that.
OpenAI is like the golden ticket these days. It seems it's the equivalent of being an Apple engineer 20 years ago or whatever analogy you want to draw. But you can kind of just do whatever you want jumping off of that job, and he certainly tried, didn't work out. But yeah, very interesting situation to keep up with for sure.
And lastly, Jared, big deal. Grumpy Mike. What are you guys looking at right now? What are you guys trading? I know we're seeing a little bit of volatility into this market right here. Some of these back in my best interest, at least for Micron a little bit, because that rally to the upside was so aggressive. I had just put on some short delta on in Micron after getting off the long delta. So it's nice to see a little bit more of a pullback, but we have a little bit in the portfolio today. We have the Micron not the sexiest trade out there, but we do have some volatility in TLT right now.
Trying to move my chair up here. I'm sitting a little low. It's got me all off. I'm trying to figure out
shrunk overnight,
what's
bro.
wrong. I've been messing with everything. Yeah, I gotta.
Trending down near towards those lows again. It does look a little bit more attractive now. But I mean, I'll take the price point, the cost.
Data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. Today's Thursday. We got one more day of the month starting tomorrow, so it's been a pretty exciting, I guess, trading month. It's been a little bit of a slower trading month starting the beginning of May, but things are starting to become a little bit more volatile. But before we get into everything, Brother Gus.
Month or so is just all suddenly aligned today, and everything's coming to fruition at once.
Data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools.
and place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. Today's Thursday. We got one more day of the month starting tomorrow, so it's been a pretty exciting, I guess, trading month. It's been a little bit of a slower trading month starting the beginning of May, but things are starting to become a little bit more volatile. But before we get into everything, Brother Gus, how are we doing today?
Doing good, doing great. In fact,
great.
This
good.
is everything I've been shouting from the rooftops about the last.
Welcome back, everybody. We're here. We're talking bonds. We're ready to hit the ground running right where we left off. Small technical difficulties on our end. Bonds. I'm looking at 28 DTE on TLT here.
Right.
I already have an existing position on at 14 DTE. We needed over 85 by that time. That's pretty much feeling dead in the water right now. I did trim this down. You guys may recall before the Fed meeting, I had 5 of these on. I took this position down to 2. I'm very grateful for that decision at this time, protecting myself from much stronger losses. Going to go ahead and leave that on, currently sitting down around 80%, and 80% being $22 notional per contract. So not the end of the world there in a cheap position like that. But I'm looking at this 28 DTE expiration cycle now. Expected move pretty much right at that 85 price. I don't think I'm going to go centered around that again, especially with this sell-off that we're seeing right now. I'm thinking, I don't know, what can I get for like a 83.5, 84, maybe an 83, 84? Yeah, I'm going to do this. $28 of buying power for $72 of credit on an 83, 84 short put vertical at 28 DTE. So that's a perfectly 3-to-1 risk profile. I like that. I think we'll see the bond snap back quick, even given the Fed uncertainty and the macroeconomic environment right now. Bonds this low, I'm just obligated to try to take a shot. So gonna try. I don't know, maybe I'll do 4 of these, give myself the ability to scale out again should those opportunities present themselves, and get the fill right away. So there it is, long some bonds.
Long some bonds. Jared said, we trading some James Bond now? You already know the deal. Especially after the volatile week we've gotten this week. FOMC is out of the way, kind of sitting at its lows right now, Jared. I did not mean James Bond. But yeah, trading some bonds right there. Gus, you said you got a fill, right?
Did get a fill right away. Big
Beautiful.
deal to answer your question in chat. September rate hike % chance, very, very low. Currently, we are pricing in a 90.5% chance of a 25 BPS decrease in September. So,
all right.
Yeah, still feeling like that's going to come down, but rate increase chances have pretty much gone out the window. No change being priced in at about 2%, less than 1% on 25 plus, or an increase of any sort, I should say.
I gotcha.
Oh, silly me. I was looking at December 2025. Let me try again, guys. Let me try again. Horrible out of me right there.
Was that TLT bonds?
Increase very likely. Throw everything I just said out the window. We're pricing in a 56% chance of a rate hike in September. As I was reading those numbers, I was like, this can't be right? There's a 56% chance of a rate hike in December or September right now. 41% chance of no change, no chance of a decrease, more or less. 2.3% chance of a decrease. Small tail risk of a 50-point increase. But yeah, 25-point increase in rates in September is currently the favorite at 56%. Narrow chance there. Certainly a strong outside chance of no change. I'm all over the place today, you guys. We got technical difficulties.
No, we're with you.
Can't figure out my chair height. We're pulling it together.
Rate hike, chair hike. What is it gonna be?
Can you send it to follow? Yes, I can, Ranch. I'll do that for you right now. You talk for 2 minutes so I can send this to follow.
Got you. Yeah, no, I mean, a lot of volatility in these markets. I'm really excited about these memory names, right? I think even if we have quote unquote topped out on some of these names, I think these are going to have a lot of volatility. It seems like the trend has reversed now. So I know we put on a long earlier this week in Micron, where we were getting long into the downtrend, which was a little bit of a counter trend trade, which can be difficult to manage, but it's going to be all about not overstaying your welcome. So that's kind of been our mindset here. And after getting out of Micron, I think the game plan for this one, as we go to the order chains here, you could see yesterday we sold the out of the money call spread, $5 wide, collected about $1.78. We're up on the day just a little bit on that one, but I think we're going to try to hold this one a little bit longer. I'm glad that we were able to, get a little bit of short delta on the pop of the backside of the move while we're trending downwards. So it'd be cool to see Micron make lower lows here, but in NASDAQ, it's depending on what the rest of these indices want to do, will really determine, and gauge our confidence and conviction off of these trades. But it would be nice to see some lower lows, right? I'm not saying we want to see like 500 or 400 in Micron, but if we can get back down to like 730, I think we're going to look to manage that trade, because right now that short Micron trade is helping manage some of the other positions that we have in the portfolio, outside of the out of the money call spread that we have, which Ranch, I seen you made the comment spot. The SPY call spread is finally ticking green on the day, which, yes, that's nice. Didn't expect to have such a massive rally even into market open this morning, but things quickly reversing here. But yeah, no, I think top of mind is really going to be these memory names. I think it's SanDisk that has earnings right around the corner. I think it's either SanDisk or it's Intel. And I mean, what are companies going to be paying attention to for these next earnings? Like, what is going to be? I know right now we're paying attention to CapEx spend. I know we've seen, some names like Meta really take a hit, depending on how much they're spending. But I'm curious, after we're finally seeing a pullback in some of these memory names, how earnings August 5th for SanDisk is going to play out, and how it's going to affect the rest of our positions, right, Gus? Because if you're trading Micron, I think you want to know, how SanDisk is going to perform for its earnings, because that might give us some insight on how we might want to manage the Micron trade, although it's SanDisk reporting earnings. So it still feels like we're in that situation where the earnings for these other products directly affect the others in the same industry. But no, these Micron names, a lot of volatility still in here, Gus.
Yeah, this move in the memory space today really very interesting as a whole. Opened way up, and we're only getting close to 2.5 hours into the market, and everything is just ripped back down. It's these. I mean, even intraday, these companies are just so hard for me to get a read on. I really think I'm done trading the memory space altogether myself. But yeah, I mean, I don't know. Like you said, I could see heavy downside as being a very plausible reality for these. To continue talking in Micron terms, like, am I surprised if Micron tests 500 again sometime? I don't really think that I am. But at the same time, like I've said a bunch of times, I'm equally unsurprised if Micron goes to 1500 sometime here soon. It's just it's a really hard thing to read. And often in situations like these, like take the giant run up we saw in metals at the end of last year, which again I always say it's hilarious that we often can compare metals to tech stocks, but that's kind of what we got out of metals into the end of last year. But if you look at that run up, as soon as that sell off came through, it was immediately like, we're not going to get back to those levels. There's no way. Everybody and their mom knows that those levels are too high. It's unrealistic to expect us to ever return to those levels. There might be some bounces that you could catch, but to think that, in the like a 1 month after that sell off, that there was all of a sudden some chance we were going to rip back to the highs, I never really plausibly thought that there was one. However, Here in these memory stocks, it's a whole different story. Usually when you see something take a parabolic run up like this, you feel like that top was overextended and there's no way that we could get back there. But as I've said a bunch of times, the forward PE ratios on these memory companies are not as bad as they would seem relative to the rapid growth that we've had here. I don't think that people are going to be too scared to get a little bit longer, even, especially if some confidence can return to the AI trade. And the thing to me is, all of these companies are getting penalized right now for spending and spending and spending on AI. We've seen it happen to Meta, kind of king of the castle in that regard. Huge hit because of their AI spending, the restrictions they put on their free cash flow. Where are they spending that money, you guys? It goes to these memory companies. A lot of it is going to these memory companies. That money all has to go somewhere. So, when we talk about people getting scared of the AI trade, people wanting to move off of the AI trade, people being concerned about the excessive AI spending, these companies are not the ones doing the spending. They're the ones benefiting from it. They are among the ones benefiting from it, these memory companies. So I think that there's a real chance we could see a return to those highs, as equally as I see a real chance we could, do a 500 on Micron, for instance.
Yeah. No, it's a really good point. I mean, I think the volatility, to the point you just made it, might see a little bit more in that. And I'm curious to see what these earnings are going to be. I'm curious if the earnings are going to continue to move off of that CapEx spending. Like, it is kind of interesting how the attention kind of moves to a very specific area in terms of like the earnings details and what comes out. Like, before it was AI, now it's the focus on CapEx spending. I'm curious to see how that's going to move in transition as time goes on to here. It says AMD's talking about some price increases. Okay. And it's been some time since we've given some love to AMD and NVIDIA, I feel like, Gus. I feel like it's been Micron and the memory names really taking a lot of the attention out of a lot of these names, but AMD's still consolidating at its highs. I mean, we had that pretty aggressive run up here in April, still sitting within that very defined range on AMD near the highs. NVIDIA, very similar thing here. It looks a little bit different, not as aggressive, but these haven't seen any type of significant pullbacks. They've kind of been flying under the radar, Gus. Well, it feels like, at least.
Yeah, they have. I mean, it's just been a stagnation period. I mean, very similar actually to kind of what we're seeing in the broader market, though more exaggerated on the run up. But when you look at these AMD NVIDIA charts over the last few months, I mean, look at this. That last, if you go beginning of April 2025 to the present, this might as well be the SPX chart. Again, the upside is a bit more exaggerated, but obviously these have been the market making vehicles over the past couple of years, and so very close mirroring there. We see the same drawdowns, we see the same V-shaped recoveries, and we see the same consolidation phases. And this consolidation phase that we've been in SPX and NASDAQ for a little while here, that I'm currently trading with Iron Condors, is basically the same thing we're seeing manifest in these, NVIDIA AMD charts right now. Ace Ventura, the pet detective in chat, asking, can I ask the reason you sell the TLT put credit in the money? Just to get better leverage. Ace is really the only answer. I very, very often will sell put credits in the money in similar fashion if I'm expecting a recovery. Doing the 83.84 allows me to get that $28 of buying power for $72 in credit, because the probability of profit is lower. It's, these are all sliders. But I see a recovery to over 84 as very realistic in the next 28 days. And so I'm willing to take that risk, even having to maybe go through some pain until we can get through those strikes eventually.
No, I like it.
Memory and storage comps are creaming in the cash too. Good word, nice boy. I like your vernacular. Still curious who's buying these 6K GPUs. Not me, big deal. You can cross me off the list. I mean, it's the companies that spend $1 billion like they're buying a McDouble. That's who's buying the 6K GPUs. Seems like the supply shortage isn't going to fix for years now. Yeah, I agree, nice boy. And I think that too. I mean, as it pertains to these memory companies, I'm kind of talking myself into getting long memory. I'm not going to do it. But I'm thinking about it. But yeah, these memory companies, like you said, the supply shortage isn't going anywhere. And like I said, even in a world where these AI companies are all spending too much, they're trying to price in 25 years in the future, and they're not going to be able to get a tangible return to revenue for the next decade, or return to profitability from these investments for the next decade. Even in that world, they still need memory in all these data centers, and they're still going to buy it. Even if they know that it might be an investment for the distant future and might hurt them a little bit in this current situation, nobody's going to get $3 billion deep into the construction of a $10 billion data center and then just say, this runs over, we'll just sink that $3 billion and worry about it later. No, they're going to finish these things out. And so, the supply shortage, I think, continues to manifest even if this spending is all too much.
Yeah, 100%. And we'll get a really good idea on what that's going to be looking like, especially the next 6 months of the year. Today's the last day of July, so we're heading into August. We got August, September, October, November, December. I think we're going to get a lot of clarity on where a lot of these industries are going to be at by the end of this year, especially with all the projections of a potential rate hike and those kind of things. So Warsh definitely has his work made out for him. Curious to see what he does. But with that being said, I know the market was selling off a little bit more here now. Volatility trading at about 1720 right now, which, is a little bit lower than the high from where we were trading yesterday, which again, volatility is still very interesting of how it's been responding given the sell-offs we've seen in the market. It doesn't seem like the market is reacting too much to fear right now. It doesn't seem like the market is very fearful, even given the down days we've seen this week. So we'll keep an eye on volatility. And quickly with QQQ, I know we've seen a little bit more volatility to the downs. I know we were kind of keeping an eye on this range from here and here on the Qs. And I know we started to kind of create a little bit of a funnel here where we've seen a little bit more directionality to the downside now since we've traded outside of that zone there. But it's looking like we're recovering so far. But at the same time, I'm curious to see if these relief pops in the market will hold. And if we keep chugging to all-time highs, and, because sometimes we forget that sometimes maybe it's going to be neutrality. Maybe the market doesn't want to necessarily have so much direction to it. Maybe we move sideways for a little bit. I don't know. But with that being said, keep an eye on the Qs. Keep an eye on some of these other positions as we go on here. I want to take a quick look into the watch list, see what else has been moving. I know Dell's another one I've been keeping my eye on. This is one that's been trading at the top side of this range here, but it's a really difficult one. The only internal conflicts that I have is Trump was talking about Dell being a little bit bullish there, and I don't know if I want to go against the grain whenever Trump is talking about something just based off of some of the volatility we've seen after he mentions a specific ticker.
Well, Trump is just, he's become, I mean, maybe he was before, I don't know their history, but he's become really good friends with Michael Dell over the past, I don't know, year or so. Ever since the Dell family stroked a whatever, $6, $7, $8 billion check towards the Trump accounts, they've been in close cahoots. So that's the other thing with these Trump things. I'm the first person to say, if Trump tells you it's time to buy something, buy that thing. We have found him to be pretty accurate in his predictions, shall we say, about the trajectory of the market and the trajectory of individual companies. I trust the guy when he tells us to buy something, but you do have to think about why he's saying buy that thing. And in this case, and with how much he's been shouting about Dell, I really do think that it has more to do with just his friendship with Michael Dell and Michael Dell giving him billions of dollars towards the Trump accounts. And he's just trying to, spin that around and pay the man back, basically, with some increase in share price. So this is kind of the one Trump company that I don't know how much I actually trust his judgment on. I think they might just be boys.
They might just be boys. I actually didn't know they started to grow such a relationship like that. But even after Trump had made that comment, I haven't really seen too much movement yet. But maybe one we set off to the sidelines for now. That's some interesting insight, though. I didn't know. I didn't know there were boys like that.
E-Media bringing it to my attention in chat that Jersey Mike's just IPO'd. I forgot about this. JMKE. We could have a look at that one. But they did recently IPO, trading up aggressively off the IPO in day 2 here. I forgot this was coming. I would have been all over this. I'm a big Jersey Mike's fan. I would have been bullish here.
Subway.
I'm actually shocked Jersey Mike's isn't part of some larger holdings group. They feel like they would fall right in there. And I think, private equity or venture capital or something bought them a couple years ago, right? But I guess they've kept it as a standalone, not rolling it up. But yeah, nice first couple of days out of Jersey Mike's here. However, we're kind of getting the SpaceX chart here. Maybe watch after day 3 if things decide to flip around on Jersey Mike's or whenever options open.
Subway, you better count your days. Subway. Jersey Mike's just IPO'd. We're getting a lot of volatility. We're trading at $22.86 a share now. SpaceX could be down at... No, SpaceX is probably not getting down to $20 a share. But no, we'll see what kind of volatility this has left in it. I know I think I'd seen it mentioned one time yesterday, and I meant to go back to look at it. But I didn't recognize an IPO like Jersey Mike's would get so much volatility. This looks like a pretty good product for a lot of maybe intraday traders, a lot of scalpers, a lot of movement in both directions, a lot of volume. For a Jersey Mike's, I didn't know it would consume so much trading activity.
Yeah. I don't know. Anytime there's an IPO, it's usually enough to get people at least a little bit excited. Yeah, the I saw Reddit mentioned in chat as well. Big deal. Was that you? I'm popping around here. Yeah, lots of tabs. Yeah, big deal. Reddit down 22%. Yes, Reddit down 22%, despite posting great numbers, just over mounting fears that AI is going to run Reddit out of business, more or less. And I mean, I'll tell you what. I'll tell you an interesting paradox I've been thinking about here. I don't think I've ever voiced this on the show before, but before, anytime you wanted an answer on something, a little more specific, something that wasn't quite Googleable, you're building a PC, you're fixing your car, you're having a very specific issue, Reddit was a great place to turn for those things because you could go and see if a real person has asked this question before and other real people have answered it that have experience. And if not, you could ask the question yourself, and other real people with experience would pop in and answer those questions for you. And that was why you would often put Reddit after Google searches when you were looking for something specific like that. However, now, everybody is taking those questions to AI. AI is often still using Reddit as a source. Reddit isn't seeing ad revenue when AI does that, obviously, but beyond that, AI is tapping Reddit as a source for a lot of stuff, but if everybody is taking their questions to AI now, suddenly there's going to be nobody asking and answering questions on Reddit, and we move into an information drain where like 20 years from now, there's no answers anymore. And AI can't go to Reddit to get them. It will have to do other things, and I'm sure it still can, but that's sort of the death spiral for Reddit that people are afraid of right now, and it is a scary prospect, I think.
No, yeah, I can definitely see that. I know Reddit was always one of those. I was never a Redditor. Like, I know there's some people that were more so very familiar with using Reddit and kind of using it more so on like a weekly basis. But it is one of those things that you recognize that pops up as a Google search. And it's interesting that you pointed out that a little bit of the consumer behavior is changing. You pointed out that now a lot of people are going to AI to handle a lot of their requests, and a lot of that data is still being sourced from Reddit, which they're not seeing any, again, revenue from that. But it is interesting to see that behavior change, right? Like, and I think we've even seen that with Google a little bit there now too. And I thought Google would have been heavier or a little bit more impacted by this new change in behavior by consumers, but it still seems like Google's doing really well for itself. But you would have thought Google would be like the first one to get hit pretty hard in terms of change of behavior on how people search for things, because they were like the OG search engine. So
yeah, we were just talking about this yesterday, and talking about Apple with Siri as well, just being behind the eight ball there. These companies are Mag 7 companies on the forefront of technology, and Google's managed to catch themselves here, it seems, and kind of bring things back. But there was a period there, I mean, for like north of a year, where I was like, Google's gonna die. Like, there is no like not the whole company is gonna die, but Google searches are gonna die, which are obviously a huge segment of their revenue. Now, could you ever kill Google? I don't think so. YouTube giant, Waymo going to be giant. They have these other revenue streams coming in to prop them up, but Google was late to realize the threat of LLMs and the threat that could pose to their search revenue and properly pivot. Gemini still has such a tiny market share, in the broader space. So I was shocked with how late they were to move on that. And yeah, same could be said about Apple with Siri, who is still bad, by the way. I can't believe just port ChatGPT, man. You don't even have to do anything innovative. Apple, I think they want to stroke their own ego and have their own LLM and do all this. Just plug into Claude. Who cares? I don't care. Just give me a Siri that can actually answer things instead of just doing a Google search. If I want to do a Google search, I can go to Google and ask it things. What's even the point of Siri at this point? It frustrates me.
Yeah, it doesn't seem like they've allocated much facilities to Siri, because Siri feels the same like Siri felt in 2015.
Oh, yeah. Yeah, and circling back to Reddit, I know I'm kind of doing the Alex Jones cadence here, you guys, talking about my grand conspiracies with what happens to Reddit with AI. I apologize. But here's a way, if you're crazy, if you're a Reddit executive right now and your only goal is to grow this company, keep it alive, I think Reddit could combat this back in a dystopian sort of way if they can somehow secretly, or maybe they could do it above board and give it some kind of cool name, but they need to get chatbots going in their forums, asking new questions and answering each other. And then you could do something like provide an AI to Reddit users that allow them to AI search Reddit, and perhaps you could steal some market share that way with people who actually want Reddit answers, could just go plop something into Reddit AI and have it source the right answers. But I really do think that Reddit is who ultimately winds up falling victim to that sort of, I used the word death spiral a moment ago, but the same sort of thing that I think Google could have fallen victim to and have now managed to catch themselves, where AI just functionally replaces everything that you're supposed to do as your core revenue stream.
100%.
Google recently made their search algo deliberately worse, so you saw the ads rather than the best results near the top. Oh yeah, I think that's been a thing. I mean, I feel like that's been a thing for years, getting terrible sponsored results at the top.
I almost feel like that's almost feels like a little bit of a byproduct of. I mean, I don't know what you guys think. What is the right term? Is that a byproduct of capitalism? Because I've noticed the same thing with the expansion of AI. You will get quality work go down for what's going to be a little bit cheaper to use, and then also who can pay the most. So typically you're not going to get the best results when it works off of a system like that. So I don't really know what it's a byproduct from, but that's one of the first things that comes to mind whenever I see new industries emerge. It starts off with great quality, and then it kind of dampens a little bit as it goes.
Yeah, I see. This is sort of changing topics aggressively here, but I just have to acknowledge it. Up NDN in chat, Shake Shack still overvalued after the 60% dump. He says, I agree. Let's pull up Shake Shack. SHAK Shack is the ticker here. Yeah, this company, I think so too. I think for real. I think Shake Shack dies sometime. I think 20, 30 years from now, there is no more Shake Shack. I just don't see where they fit in the market. It just doesn't make any sense. They could have existed fine. They had put a ceiling on their growth was the issue. $30 burger and fries, there's a strong ceiling on your growth, and they needed to stay a novelty. Whoever is in these boardrooms telling them that they need to do this aggressive expansion plan that they've been on, it's a bad plan. It's somebody that's never lived in suburban America, rural America, whatever it may be. There is nobody in suburban America that's choosing to take their family for $30 burgers and fries for every person when there are 101 literally different burger and fry options within a mile of that restaurant. I just don't see it as viable. It worked well when it was a novelty. It was in these big cities. It was a tourist destination. It was something that people do 1-2 times a year. Trying to build themselves into an everyday restaurant, unless they move those prices, I just don't see a way that it can work. So I agree with the bear thesis on Shake Shack for sure.
No, I mean, it's a really good point that you make there. Once you start getting into those upper price level ranges, you really have to start to consider. I could go to eat at Cheesecake Factory for the same price as Shake Shack, literally. So.
Oh yeah, I mean anything. Yeah, sit down. You know, I mean, yeah, Chili's. I mean, I could go to Chili's, eat until I'm full, and get reasonably intoxicated for $30. It's like these price points are just crazy.
Yeah. Yeah, we'll see where they are, if they even end up pivoting again. I was a big fan of Shake Shack. I think it's really great food, but for what they offer, I think some things are pretty questionable price-wise. But a pretty large gap down that they're having over the night from 95. That's a pretty big gap from 95 all the way down to about 69.
I was short through it.
Another gap down.
I'm sad I was defined risk short through the gap down.
Oh yeah, that's tough.
Wish I had some naked stuff.
Move.
But got it home for me. But yeah, I might throw on some like long-term puts in Shake Shack just because I think these earnings continue coming through bad. I think you're going to spend too much money on expansion, and there is just not the money to justify it on the other side.
100%. With that being said, is there going to be anything else top of mind before we wrap for the day? I know we've seen a lot of volatility into this market. We'll see what we end up getting. I know NASDAQ is consolidating near its lows right now, so we'll keep an eye on it. But anything else top of mind before we wrap?
Yeah, nothing crazy top of mind. Chili Spicy Rita getting some gas in the chat. I can't do spicy with my sweet. I've always kind of been that way. Keep your tahini, keep your chamoy. I don't care for it very much, but I respect it. I see the appeal. I guess the only other thing I would say is top of mind is nobody go anywhere. I'm not going anywhere. We're going to hop straight into trades of the day after this, and I have the first one. So
amazing. With that being said, guys, thanks for taking the time to hang out. We will be back with more amazing content coming up here in just a second. Be sure to stay tuned, and we'll catch you guys here in a little bit. Peace.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
What is going on, everybody? Welcome to Trades of the Day. I don't know how we usually open this thing. It's my first time ever kicking this off. I'm excited. I'm enthused to be here. Haven't even stood up from my chair from Risk Your Reward. And I am going to talk about a trade idea that I've actually been voicing for some time now. But I really wanted to dive into the weeds of this. This is still hovering right around my entry, and everybody could still get in at the same price. But I just wanted to make my case for SPX, specifically for nothing to happen in SPX. I have sold an Iron Condor there. I think we have the art card prepared, nicely displaying this. We can go ahead and throw that up now. I've talked about this a number of times. I posted this trade in the follow feed, but I am rocking a short Iron Condor on SPX. I have sold the 7400 put and the 7600 call. Additionally, I have bought the 7605 call and bought the 7395 put just to define the risk on those wings there. But we are looking for SPX, this is August 21st expiration cycle. We're looking for SPX to close in between 7,400 and 7,600 come August 21st, 21 days from right now. Tomorrow's August. Can you guys believe that? As you can see, looking at well, we were just looking at the portfolio side of things here, but I am slightly up on this position already. I have had this on for 6 or 7 days now, full disclosure. However, this price has been whipping around all day, and I'm pretty confident you can get a fill at pretty much the same price that I did. And even if not, I still think the relative strength of this trade remains. There's still a 2-to-1 risk profile on the table here, even at the current mid price. But my thesis, and I've said this a number of times, we can jump back over to the Tasty platform here. What is happening right now feels identical to me as what we saw in October through March, basically late February, early March of this year, where you guys remember, let's take a look. Let's take a look to a time long past, Liberation Day 2025. We get this huge sell-off into Liberation Day. Tariffs, uncertainty, you guys remember all of it. It was scary. This was like really the first. I started trading during COVID, so like I didn't really feel the full impacts of that crash, just the volatility, just a little bit of profitability for me. This was like the first real large scale market crash in my career as a trader. We got to sub 5K on SPX after testing a little over 6,000 off the highs. More pointedly, what did our high come in at here? 61.47 was the previous all-time high before we got this sell-off. Then panic ensues. We go ripping down to the lows. We break below 5K, this huge 20+% sell-off in a matter of weeks, and the sky is falling, and then wham, we take everything off and we go flying back to the highs. V-shaped recovery up to the highs, right? These are all still similarities. Then early October, I guess late October, more accurately, early October, we begin to enter this range, which I'm kind of referring to as the holding pattern, the range in question here, consolidation. And then, coming out of all this bullish momentum, it feels like we're going to go up forever. It's euphoria. Then all of a sudden, we hit this ceiling. And suddenly, especially starting in late October through, the beginning of March of 2026, we had this 5-month period where we just could not break 7,000. We tested it and tested it and tested it again, and we just could not get through. And this whole time, the market doesn't feel bearish. It feels there's little news catalysts here and there. There's little things shaking things up, but it doesn't feel like that bullish momentum has left the market at any point there. It feels like there's still reasons. In fact, even at the time, it was still just the AI trade. Felt like the AI trade was still relevant and keeping us propped up. That leads us all the way. Water break leads us all the way to this year, when once again, exact to the month, almost to the day, exact same setup transpires. April comes. This time it's the conflict in Iran. Looks like we're going to get into a war with Iran. It's fear. We go sliding. We come all the way down, not as aggressively this time, mind you, but we come all the way down to the mid 6,300 range. And then, wham, once again, exact same question. It's like in a day, all the risk, all the fear leaves, VIX collapses, and all of a sudden we go ripping again, V-shaped recovery in April, sound familiar, back up to these all-time highs. And now, this is where we get into the actual core thesis of my trade. I think we're seeing the same thing here. Through this whole run, it's the AI trade, it's tech companies, it's these memory companies. Oh my God, SanDisk is at 1,000. Oh my God, SanDisk is at 1,500. Oh my God, SanDisk is at 2,000. We creep up and up and up. There's all this money flowing into all these tech companies, the heavier weighted stocks in SPX, as I've talked a lot about. There, if you look at the equal weighted S&P 500, we're dealing with a very different situation than SPX in the midst of this, but obviously talking about SPX here. And all of a sudden, this top comes through. This time, the level that we're dealing with is more like 7,600 than 7,000. But this top comes through, and we go ripping back down, and we bounce, and we bounce, and we bounce, and we bounce. And there's all this uncertainty. And if you overlay these two charts on top of each other, these consolidation phases look very similar, coming out of the run-up into the consolidation phase. So my line of logic here is that I think we're hitting a similar holding pattern. When you think about the broader environment, the news environment that we were in into the end of last year, it all feels very similar. There's a lot of reasons to be bullish. There's a lot of things growing. There's some rotation into small caps. But at the same time, there's a lot of reasons to be bearish. There's still uncertainty with the Iran situation. These AI companies are spending too much. There's free cash flow issues. So we start getting this headline-driven market that just never really goes anywhere. It is volatile. It feels scary all the time, but nothing ever actually happens. We just keep hitting this ceiling, the same ceiling and the same floor. Now, the full extent of this range that we're talking about, and I'm going to use broad strokes terms here, is basically 7,200 to 7,600. So I've decided to take the slightly higher end of that range in throwing on the 7,400, 7,600 because the market has a natural tendency to drift up. And also we were right around the 7,400 range at the time that I put on this trade, as we are right now, although well into the middle of the 7,400. It's currently at 7,461. I threw this on because the whole time we were in that consolidation phase last year, I kept saying, I know we're not going to go anywhere. I know we're not going to go anywhere. 7,000, I know we're not going to hit it this month. I know we're not going to hit it this month. And I never acted on it. And so this time, I will not sit on my hands. I am going to put my money where my mouth is. And I have done so with this trade. 7,400 to 7,600, like I said, is the top end of this range. 7,400 level, you can see highlighted on the chart here. We will need to stay above that, which clearly slices this range in half. But I like that we've kind of consolidated towards the lower end of this range over the past few days. You know, it's like we're looking for the sweet spot. It's like a clementine, all right? That we got a peel going at 7,600, 7,200, and then we want this sweet spot right in the middle where we've been hanging the entire time. If Errol was here, he would love to throw a volume profile on this chart. I guarantee you, there is a lot of volume happening right in the middle here, and that's right where I want to be. So the thesis here, let me throw this trade up. Here we go. Yeah, we're currently at 310 is the mid price. I did get a fill at 350 on that, but let's just talk in mid price terms here. Just up to the 320s. You guys see this whipsawing everywhere. This is kind of what I'm talking about and why I say I think you can get a fill at my same price. But let's say you get a fill at $3. That seems to be what we're fluctuating back and forth on here. You can get $3 in credit for $150 in buying power. My public school math tells me that's a 2-to-1 risk profile. Your probability of profit is obviously going to be less than 50%, 28% in this case, which again pretty much directly translates to the 2-to-1 risk profile that we're talking about on this trade. But actually we just swung up on buying power. We got mid prices moving. 200 of buying power for 300 of credit. Still the same thing. 1.5 to 1. I'd still be very content to take this trade where it is right now. And in fact, I might add more. I think once this swings through to once the time horizon closes enough that this is getting close to a perfectly 1-to-1 risk profile, a perfectly 50% probability of profit, I might look to add another one of these. That would be enough confirmation for me to want to bite a little more off here. But because this time horizon is so long, because IV is so high right now, you're able to get very good credit given to you. The premiums are high here relative to the buying power that you're putting in, and I just don't think we eclipse 7,600. We've tested it thrice, arguably 4 times now. None of the times we've been able to break through, and it just feels like 7K felt at the end of last year. At the end of last year to me. So I'm more than content to jump in here with a neutral mindset, and this also, with the rest of my portfolio having largely a long bias, sort of acts as a neutral hedge to that. If all of my other positions just continue to grind, can't really work higher, maybe theta starts to come into the equation on a little bit of them, this is the hedge in the middle for that neutral situation. So I'm very fond of neutrality on SPX right now, and I'm not surprised if this is another 6-month consolidation that we're talking about, because remember, through the whole time horizon I'm talking about last year, the question kept being, surely SPX is going to break 7,000 this time, right? We're testing it again. We've tested it 8 times. Surely we're going to go through 7,000 here, and we just never would. And it was really frustrating if you were trying to trade directionally, which is what I was trying to do at the time. So learning from mistakes, gonna jump in on the neutral position here, and we're gonna hopefully just let theta pay us. Obviously, this is situational to your portfolio. If you have if your portfolio is directionally biased at all, neutral hedges are a good thing to keep around. Whether it's a long bias or a short bias, throwing some neutrality in there to kind of offset those things and save you the frustration should the market just continue to grind and not give you any directionality is very smart. So I just decided that after harping about this specific trade on to anyone who will listen, quite frankly, for the last week, it was high time to designate it as a trade of the day and get involved here. Just feels too similar to what we saw last year. And I don't want to be caught on the sidelines this time. So yeah, that's pretty much the gist of the thesis here. I'm not missing the neutrality this time. I see the consolidation coming. The environment feels the same. It's news driven. There's a bullish headline one day. There's a bearish headline the next. feels like we're going to bounce and bounce and bounce and bounce. And when that bouncing is happening, the IVs continue to elevate. It continues to afford you this attractive premium if you have the cojones to step in there and say, I think nothing's going to happen. And so that's what I'm doing here. I think I say often, we often talk about, oh, stocks moving up, getting short is contrarian. Oh, stocks moving down, getting long is contrarian. I think that in this volatility environment, in this news-driven market, the true contrarian move is saying, I think nothing will happen. So that's my stance on this SPX trade. I know that some people have already followed me in, and I'm going to kick it over to Jermal Chandler next to share his trade of the day with you guys right after a short break. You're watching Tasty Live.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Tasty Live fam, what is happening? What a week. What an absolute crazy week we've had. I mean, it lived up to the building. It lived up to the billing. We kind of build this as a Super Bowl type of week, complete with earnings, complete with big macro events, and it delivered that and more. And you do wonder if this was, I think I said this at the beginning of this week. I was curious to figure out how this week was going to go and what we were going to learn from it and what we were going to take from it going forward, right? I mean, up until this point, we had a week where pretty much every day we'd come in, it was all about the semis, what was going on with NASDAQ, and we'd see the moves, right? Semis down, we'd see the corresponding move in other areas of the market and money being pushed around back and forth. I've said it all week. I'm going to continue to say it as long as it keeps happening because honestly, I've been able to sort of make sense of this market and do well as a result. And so when semis were down, consumer staples, software were up. When semis were up, consumer staples, software were down. And as a matter of fact, one of the big things that played out this week is the hedge fund. If you've heard about it, situational awareness. This happens at very interesting times in the market where, it's usually pertaining to what's the dominant theme in the market, whether it's Bitcoin a few years ago with FTX and Sam Bankman-Fried or, long-term capital, and which was basically currencies and interest rates at the time and what something happened there. And so in this current situation, we were seeing that trend, right? The shift between semis and software, and it ended up playing out in a very wild way, such that that firm blew out. And so this is a fascinating time because also you throw in the Fed meeting this week, right, where there was no change. But even up heading into the Fed meeting, where most of us thought there wasn't going to be a change, there was about a 24 to 25% chance that the Fed might raise rates just because of the environment that we're in. Think about it. You're seeing crude oil go up and down like crazy, but now it's heading back up. That's very inflationary to the environment. And that's a situation where the Fed typically if you start seeing all these other measures, whether it's PCE, whether it's CPI, whatever, go up, that means inflation is higher and Fed has to act typically. Now we have just so happened to be in the beginning of a change in the Fed regime, and it seems as though Warsh in this most recent meeting and the meeting before is saying he wants the market to dictate the rate change, not so much the Fed themselves, which is very fascinating. We'll see how it all ends up playing out. But, rate changes, I mean, whether at some point in time we feel like it might happen. Right now there's a higher percentage chance of a rate hike happening in September. And rate changes, they affect all stocks in a very interesting way. They affect options in a fascinating way too. But it's not something you should think about too much, I would say, day in and day out, how it affects your option. But it's an interesting study and looking at option and potential option changes in premium a little bit. But I would say you should spend more time thinking about how interest rates affect banks more than anything, right? I mean, that's probably the one area that I've thought about a little bit more. And I wanted to grab a little bit of exposure in banks because I've seen how they've been moving more recently, and they honestly haven't been tied to any of the stuff that's going on with semis or AI or whatever it may be. They're kind of doing their own thing, which is nice. But I do wonder at what point we're going to see somewhat a change in the environment, right? So in general, banks, most of you probably know this, but I know it was something that was eye-opening for me several years ago when I really thought about it and put it together. Banks make money by borrowing at the short-term rate, right? When you think about a CD, a year-long or 2-year-long CD, or say your savings account or something like along those lines, you're usually giving them your money, and they use that money to fund other things, typically when you're talking about mortgages, right? Like housing mortgages, right? And so those are at the longer end of the curve, the 30-year rates, right? They're lending at the 30-year rates. So they're borrowing in the short term and they're lending in the long term. And so what they want is a situation where we have a steepening of the curve where basically you have 2% deposits, right? And 6% mortgages. Think about that. That's a net interest margin of 4%. But that's a situation where the long-term curve is rising faster. But if you have a situation where the short term is rising faster than the long term, which kind of what we saw in 2022, that's not necessarily so great. So we have seen them both rising at a very enormous rate more recently. I mean, just not that long ago, we saw the 10-year yield rise to the highest level since 2004, which is about 4.7%. And we saw the 30-year yield rise to a level of about, I think, 5.3%, which was the highest that we've seen since 2007. So there's been some rising of yields here. And as long as we don't have the 2022 situation where the 2-year yield exceeds a 30, then that's actually pretty good for banks because they're still making pretty good net interest margin, right? So going to the chart here, I'll take you through it. What I initially did was I looked at all of the banks, right? I actually did a sort for all the different banks, and I looked at by market cap, which I really like to do quite often. At least a lot of the banks that I look at, and J.P. Morgan is when you look at diversified banks, J.P. Morgan is usually like one of the highest. Goldman has a higher market cap, but I'm excluding Goldman for this case. While they're a bank, I mean they're a whole nother different beast sometimes. J.P. Morgan Bank, HSBC. Wells Fargo, Citi, all those type of deals. And I wanted to get a long position here, right? I was looking at different charts, and JP Morgan is still kind of fairly at its highs, even when I kind of scroll out here. Looking over the past 2 years, stock is kind of on its highs. And, I don't mind buying something at its highs, but and I may eventually get a position in J.P. Morgan, but it's just kind of up there, right? So I looked at Wells Fargo. Wells Fargo has a tendency sometimes to often be the laggard of the group. They're I don't know. I don't want to get into the specifics of it, but I as much as I thought about doing something in here based on the chart pattern and possibly this thing has a chance to go higher, and maybe I do one in here as well. But I wanted to find the best in class, at least for right now, and something that not only is it a strong bank, strong balance sheet, but also something that was kind of maybe on off of its highs, if you will. And so I eventually settled in on Citibank. Looking at the chart here, it's sitting around 133 and change. The high was 147 back in June. And just looking at this chart, it's been fairly clean. It's had some dips, and eventually, you could argue that maybe we're in another situation like we are right here, where stock was 125 was high, dipped down to 106. You can do a little long play here, and next thing you know, you're at 130, right? And so I'm feeling the same way here. I'm looking at this stock. It's sitting at 133, trying to see if I can reclaim highs. So I decided to look at go to the options here. Sorry. Look at I want to go further out. Want to give a little bit of time on this. I also wanted to get past, I think, the next Fed meeting, which I got to double check. I think that's in September sometime. Let's take a look here. I think the next Fed meeting is on September 16th. And so I went out to get my long in October. I decided diagonal would be a nice play here. Going to the 130 strike, stocks trading 133. I got a little aggressive. You could go to the 135 strike, and I'll take a look at this different examples. But I went with the 130, buying that October 130, and selling. I like to go $15 wide most times. I mean, it'd be great if you can get $20 wide, but in this case, actually, what did I do? I did go $20 wide. I forgot. I went 130. Yeah, 150. Sorry. That's what I ended up doing. I'll make sure I'm moving in a fast market here. Hopefully I did the right thing, provided with the right one I was looking at. Yeah, I ended up going with the 130, 150, $20 wide. I ended up paying $8.70 for that position, right? And again, it was enough premium in the 150 that I was comfortable selling. Like if this were like 20 cents, I don't think I would have loved selling that, right? And so that gets to how different ways you can do this. You could have gone through the 135, 150 as well. I always say you at least want a little bit less than half the width of the strike. So say you did the 135, 150, that's 616, that would qualify, and you're still selling at least like 90 plus cents of premium, right? What I don't love is if you go to, say, you want to try and, again, that say you want to go with the 145 because you feel like, stock might get back to those highs at some point in time. And say you wanted to go 145, anything less than, anything greater than 155 probably doesn't work in this situation. Now, if you did the 145, 155, that's $10 wide spread. This is $2.90. The most you can make is $710. But again, you would need Citi to be trading around 155 prior to September, which is possible, right? But that's kind of a little bit more of a gamble than I'm just paying this premium up front. It's 77 days. I'm paying $8.60. It's $20, $8.70. It's $20 wide. I have a chance of making $1,270 max profit if for some reason we get not only back to those highs, but above like 150, then I have a chance of possible full appreciation. To be truthfully honest, I think if, say this were to happen in the next, let's say in the next, 30 days here, and this is a 19-day option at this point, and say the stock is trading at 150, I would imagine I'm not making the full $1,270. I might be making maybe $900, maybe $1,000 on this, if that, which is more than enough. I'll take that win. I'll move on. But this is just one of those plays for the banks right now. Now, you could also, like I said, you could have done this in another name. You could also go out, whatever one floats your boat. Say you're looking at Wells Fargo. Say you want to make this similar play in here. Again, it's a lower dollar name, so the diagonal should be a lot cheaper. You might not be able to get as wide, but say you go with the 85 and say you go to September and you decide you want to sell the 95. I mean, that's a $10 wide spread right there. You could also do that. And this one is not too bad too. I actually might put this one on. I like that as well. It's another way to start getting some exposure to the bank. So now we got the Wells Fargo, $10 wide. The most we can make on this one is $5.15. Again, difference between those strikes is $10. So I'm gonna publish that as well. And you could also, and let's see if I'm, right now, like I said, I don't necessarily love the idea of doing JP Morgan with it so much on highs, but let's just say we were looking at it. It's kind of hard to get aggressive in this one because it's such a big dollar name. But say we did the 350, say we went to September and we want to do $20 wide. See, this is why I don't necessarily love this one, because it's $13.18. Let's just call it $13.20 to make it simple. The most I can make on this is $6.80. So I'm basically risking 2 to make 1. I don't necessarily love that. We were doing them kind of the other way around, right? Risking 1 possibly to make 1, or risking, 1 to make 1.5 or something like that. I don't necessarily love this on the diagonal, and that's one of the other reasons why I'm kind of staying away from JP on this one. I could go, let's see, maybe even a little bit less aggressive, just a tad. Let's say we went to the 355, and say we went to SEP, and say we went to $20 wide there. It's getting closer to better, but not really, right? Say 15, even this is $15 wide. You're paying $10 and change. Sometimes in some of these names, it just doesn't work. And instead of forcing it, you just look for a better situation. Luckily, in my case, when you're talking about banks, we have quite a few to choose from. I would imagine if you tried to do this in Goldman, $1,000 stock is going to be really hard to do in that situation as well. So settled in on Citi. JP Morgan was not necessarily the play, but we settled in on Citi to do the diagonal. We also did one in Wells Fargo. We find those interesting. And we're just trying to get some exposure to the bank, something that's not semis, that's not consumer staples, and that's not software for the time being, because that's really been the big trades over the past month, if you will, of July. That's really been the play, and that's where a lot of people have lived. So that's the trade of the day. We went with the Citi diagonal spread, buying Oct 30 to sell the September 150 call. We'll see if it plays out. Hopefully, short-term rates don't exceed long-term rates. That's going to be bad for banks. But I think rates rising overall, you're going to see some volatility in banks, which we saw a little bit this week in the wake of the Fed meeting. We'll see how it ends up playing out. That's my trade of the day. Now we're going to take a quick little break, and on the other side of that, Mike Butler's going to give you his trade of the day.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than Trade like a trader. Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
What's up, everyone? Mike here, and we're coming at you with another trade of the day. This one is in Apple. I feel fortunate that I wasn't involved in the bullish trade in Apple, which I more than likely would have done. Although yesterday we did see a little bit of weakness. Apple was one of the only products that was red on the day, while the rest of the market just ripped higher in an insane rally. But after earnings, we're seeing it down 10% right now, trading around $300 per share, down 32 points from yesterday's close. And I think that brings an interesting opportunity, especially for a longer term trade. So Apple and Amazon reporting earnings yesterday. Amazon is up big, Apple's down big, which gives us this net result of basically nothing. NASDAQ's up 100 points, E-minis up 24. But my trade of the day here, just looking at this Apple chart, I was like, okay, I want to buy this dip somehow, some way. The Super Bowl obviously is the thing that came to mind, just because it's been such a nice trade for us, both to the upside and downside. And it really is a trade that allows us to take advantage of these big directional shots or big directional bets, do it in a risk-defined way, do it in a high probability way, but also give us much more profit potential if we get that directional move right, instead of just the credit received with like a put spread or something like that. I said this earlier today. If you wanted to sell a put in here into the sell-off, an undefined risk put, I think that is totally okay and great. But with defined risk trades, especially with these mid to higher price products, it's just harder to get, it's harder to utilize the options in a way where you can manipulate them endlessly. If you have a short put in Apple, you can buy it back if it gets tested, move it down 10 points and move it out a month. Like, you can totally manipulate the trade. And anytime you roll a short put out in time, you're going to keep picking up credits along the way. Not necessarily the case for defined risk trades. If it goes in the money, if you have a put spread and it goes in the money, there's not much you can do. If you're just rolling the same risk out in time, you'd be paying a debit. So my thought is, why not give myself a good shot at a big upside profit potential with Super Bowl? And that's exactly what I did. My short strikes on this trade are the 290, 280, and I was filled in October. I went to October for a couple of reasons, but really these trades aren't necessarily theta decay trades. Liz said this earlier, and I couldn't agree more. I mean, you can do any expiration cycle with these sorts of trades because you're not banking on volatility crushing and theta decay working to give you your max profit. Of course, it's going to be the case since I collected 35 cents for this trade, but this put spread, I would have picked up $300, which is a great credit received for such a big move to the downside, but max profit of $300, if Apple reverses this move and goes up 30 points, I would make maybe 150 bucks, something like that. The second you add on a long call spread here, it's currently trading for 45 cents. So this same exact trade is trading a little bit better than what I was filled. But this 15-point wide call spread immediately increases your max profit from just the short put spread of $300 if it expires out of the money 77 days from now, to a $1,500 credit, $1,535 exactly, because I was filled at a 35-cent credit. So all of a sudden, you've multiplied your max profit potential by 5x, 500%, and you give yourself the ability to make a lot more money on a move up sooner than just the put spread. 77 days out is a long time, so even if you got a 10, 20, 30-point rally in Apple, if you just had the put spread, you're still going to have value in these options. You can see it here. These further out of the money options are still trading for $200, $300, $400. So all that said, this is really a delta trade. It's not really an implied volatility crush trade because I'm only collecting 35 cents. It's not really a theta decay trade because I'm only collecting 35 cents. So this truly is a delta trade where you're playing for a big reversal in the other direction with a Super Bowl setup, and that's exactly what I would want to be doing anyways in a Mag 7 stock in Apple that was just at all-time highs and is now down 10% after earnings. I'm playing for, over the next couple months, this thing to reverse. And again, I don't even need it to go back to 345, 350 just up to like 310, 315, 320, it's going to be a nice trade. I have some other trades on that are similarly structured in Meta. So this is one where I collected $100 in the middle, 525.10, 600, 615, same exact style, October, 10-point wide put spread to finance a 15-point wide call spread. And we're seeing a little bit of reversal here, and it's up $100. So these are the types of things you can expect if you get the direction right. And the timing doesn't matter on these trades because, again, you are selling a put spread that is worth a little bit more than the call spread that you're buying. And as the market moves up, if it's going to move up, your put spread loses value and your call spread gains value. So that's how you can get into this trade for a credit and also exit this trade for credit if you get that directional move right. So let's take a look at the analysis tab. We can pull up the curve mode and look at the theoretical P&L. And I can actually just throw on, I can just look at this trade I have here. So this will give you the nice trade medallions here, the put spread and the call spread combined. So we've got the 290, 280 put spread. And again, I went with the 290, 280 put spread. I was going to do the 300 and just go right at the money. But I looked at this chart and I was like, okay, we're at 300 right now. But if you look at 290, we kind of had a little bit of a bounce from there a couple of times earlier in June. And then we bounced up from there. And then we had this quick liquidation event below it, but we recovered really quickly. So I kind of like that as just like a psychological point in time where I still have 10 points downside of wiggle room before I'm tested on the put spread. And we've seen this thing bounce a couple times from 290. We did drop below it slightly, but we recovered in just a few days. So I like that. If you go with the 300, 290, that's just more aggressive on the put side. You're going to pick up a bigger credit. And or you can move up your call spread or make it wider and give yourself more upside profit potential. So I went with this trade. And again, I was filled at 35 cents. So max profit here in the middle is 35 cents. But that's your expiration P&L. If you see this Theo graph, which we can switch over to right now, if we don't change anything and we don't change time, we don't change implied volatility, this is basically what we're looking at. So on Monday, we'll say, and we could even do that. We can kick this to Monday. So we'll go to August 3rd, which is Monday, and we'll evaluate at that point in time. If we get a reversal back to 330, this is the real big difference here. You can kind of see it in my upper right corner here on the information flag, but my P&L Theo is $530 if you don't account for any change in implied volatility or time passing in a big way. So that is ultimately the situation that we've got here. And looking at this trade all the way out in October, you can see I'm not really going to have too much premium in the middle. It's really got to just rally like that. It's a purely directional trade. And you can see that on the analysis mode. So that's the big difference. If you just sell the put spread, and we can look at this, like let's say we get a reversal to 330, my Theo max profit is $550. That's a great return on this risk. It's a great return in general. But if you just look at the put spread, this is where the difference lies. If you get a move back to 330, my P&L Theo is $160. That's still great, but that's the difference. That's the trade-off here is you're not just collecting the put spread and keeping this P&L graph in the middle totally flat. You have that asymmetry to where if you are right, you're going to make a lot more on that Super Bowl setup versus just the put spread. So it's just been something we've been using a lot more, especially in the SPX 1 days and 0 days. SPX is a $7,500 product, so it's a really interesting way to get directional and get that delta working in your favor if you have that move that works in your favor, as opposed to, again, just the put spread or just the call spread if you're bullish or bearish, respectively. So that's kind of what we're thinking here with this Apple Super Bowl. And again, if we pull up the trade that I've got on, the one I was already filled on, we can see here if we go to the Theo and continue to kick this down the road. So let's evaluate this at the middle of August. We're going to see more profit potential. So August 17th, if we get a rally back to 330, you can see here we've got a little bit more profit potential, $550, somewhere around there. So again, it's not really a theta trade. It's much more of a directional trade, but you can make a lot more relative to just the put spread. As you can see, the P&L Theo is 3 times more than the short put spread by itself if you get that directional move, but you're giving up the neutral premium in the middle if we just chop around in Apple. But the more something falls, especially in something like Apple, the more this product falls, the more directional I want to get anyways. So I like the setup here. Let me know what you think in the YouTube chat. I've got it pulled up here if you've got any questions. But yeah, Jared, looks like you like the Apple Play. Love to see it. But yeah, I think this is a trade that we'll continue to utilize. It will be something we'll keep in our playbook, especially for directional price extremes. I think that's really it. When you see a product tank after earnings and you want to be bullish, these are the types of strategies that you can utilize. And again, you don't have to be in a near-term cycle. You can go as far out as you want. I have a SpaceX one that's taken a lot of heat right now. SpaceX almost below 100, crazy. But this one, I went all the way out to Jan 2028. Just to exemplify, you can utilize any time frame you want. I sold this put for $3,000 and I bought this 300 strike call for $3,000 or just under it. So I collected a $300 credit in the middle. Again, taking heat right now, but if SpaceX gets back above 125 over the next couple of years, it'll be a $300 winner. But if it really rallies, this is where you get that asymmetry, very similar to what we just looked at in Apple. So I really like these trades. I think they set up well for those big directional assumptions and those big directional bets you want to make. But again, you've got the high probability trade because if you route it for a credit, that's the biggest key here. Route the whole thing for a credit, and your probability of profit in the middle is where you get that neutral premium that you keep. And that's how you compile that high probability risk graph. But that's it for me. Again, let me know what you think in the YouTube comments and the YouTube chat. But we're going to take a quick break. We're going to pass it over to E for his trade of the day right after this.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
What is going on, guys? Welcome back to another trade of the day. I know we've been getting a little bit of a mixed bag with all this volatility into the market. And I gotta say, I actually really like Mike's trade. I think Apple looks really attractive right now. I'm not doing Apple, but I actually thought that was really an attractive trade just because we're getting the gap down. We're getting a continued sell-off to the downside. So I almost tailed that one too. I was getting kind of close, but I got something a little bit different for us today. I know MIDDAY just had earnings. We had a pretty large gap down over the last couple of days. We've seen a little bit of a rally from the bottom at around 526. Now we're trading about 20 points higher now. So again, a lot of volatility in some of these names. But I'm looking to get on a little bit of short delta here in Meta just for the time being. And I mean, I'm going to zoom out a little bit. I know Meta's been trading near its highs, kind of just consolidating on the daily chart over here. But if I go to the weekly chart and we zoom out a little bit more, you can kind of still see how overextended, Meta has kind of been on this overall rally we've seen in the market. I know on a weekly basis, we're still kind of sitting, near those lows, but given the pop we've seen over the last couple of days, I want to see if we can catch a little bit of downside here. So again, not, I would say, extremely typical for myself. I usually like getting on those counter trend trades whenever we have a little bit more of an extended move in one direction of the market. So this one's a little bit different, but I was looking at the 49 days till expiration to give ourselves a little bit more time. I do like Meta. I really love everything that they've been about. Maybe they've been spending a little bit more than they should, but they're also in a position to where they can do that. So going to be looking at Meta over here. I was looking at the 49 days till expiration. I was debating on going to 21 days. This also isn't something that I want to get too aggressively directional on. So that's why I'm looking to go out in time a little bit more, maybe collect an additional credit than we would on a shorter time frame. And then also because we want to give this one a little bit more time, I didn't want to pay a debit for this one either because I didn't want time working against us. So I'm personally going to be looking at the Meta 49 days left to expiration, looking at getting on a little bit of short delta here. The implied move for this month is going to be around 44% right now, just shy of $60 range over the next 49 days. And I'm really excited for this just because, again, 49 days till expiration, that's going to expire about what? That's going to expire just into September. And I'm excited for these holiday months and the potential volatility we might see into the end of the year. And then again, with us potentially getting another rate hike during this cycle, those kind of things, I'm excited for it. I'm excited for the volatility to come. But I'm looking at selling this 570, maybe buying the 575. That's going to give us about $1.70 worth of credit. This one is a little bit close to the strikes, not too close. We're still getting about a 62% pop. This one is one of those trades that is more so like more so going with the tasty mechanics. Like I've known in the portfolio, I put on so many different trades that kind of veer outside of the tasty mechanics we typically tend to. But this one's going to be like an OG tasty trade. So looking at selling the 570s, buying the 575s, markets are a little bit wide here. I can kind of see that mid price was going for about $1.70. Now this one's going for $1.55. So again, this one's not going to be too directional. I don't want to get too directional on these trades. And on top of that, we have on some other pretty aggressive directional trades on bonds right now. We have a zebra on in TLT if you missed that one from yesterday. And then we have some more short delta on in Micron. So would still love to see a continued sell-off on some of these memory names. And with those trades having a little bit less time, what I'm doing here is I'm really trying to consider everything else that I have on the portfolio for the new trade that I'm putting on. So when I consider everything else, I really like the Meta trade and the fact that it's giving us a little bit more time. And since it's giving us a little bit more time, we start off with a little bit more flexibility than we otherwise would have had. So going to look to send this one through. Again, it is 49 days till expiration, just a little bit of short delta, negative 2.35. So it's not very aggressive, but it's a little bit more delta neutral, skewed to the downside, I guess you could say. The P50 is going to be 72% right now. That's pretty attractive, and I like that the pop is above 60. So just based off of how the numbers are lining up so far, it's a pretty basic trade. It's a pretty tasty mechanic followed trade there. It's going to use about $317 worth of buying power. Our max loss is going to be that exact $317, and our max profit is going to be the full credit that we receive on the trade. We're probably not going to hold this one and milk the full thing, right? Because I'm going to be getting a message from Dr. Jim if we start to do that, trying to milk these products to the last penny. But again, just looking to get on a little bit of short delta, take advantage of some of that post-earnings volatility that we've seen in the market. So we're going to go over there with Meta. Maybe we adjust this just a little bit. I'll adjust this one down. You know what? Let's give this a couple minutes. Let's see if we get filled. We'll give it a couple minutes. I know we still got about 10 minutes on here with each other, so we'll see if we can get filled while we go through some of these other charts and some of these other products that we're looking at. So far, the NASDAQ has been pretty slow. Not as much opportunity on the day. I wish I would have pulled the trigger to get short earlier this morning, given the sell-off that we've had. But I'm going to be patient for that. I know we still have a few hours left into the day. I know one of the levels we're going to be paying attention to, and we can mark this one off together. Let me see if I can go to a larger time frame here. And let's see if we can clean this up a little bit. So I'm going to delete this, clean this up a little bit, and adjust some of these ranges. But let me see. We're going to be marking off 28,186 and 28,000 flat. So if the market can get to any of these levels throughout the duration of the day, we'll see if we can take some trades off of it. Right now, we are down on the micro NASDAQ about $116. There was just a few trades that we were looking at in the overnight session. So we kind of came into today starting off in a little bit of a drawdown, which has made me a little bit more cautious with some of the trades that we pulled the trigger on coming into the day. So with that being said, I just want to mark these levels off so we know exactly what we're going to be looking for. 21,187, 28,187. There we go here. I just got to shout out the product team too, because the software feels really good to use. Even using all these tools, I know we were so used to using, TradingView, and using some of their trading tools, but a lot of these charting tools have definitely been upgraded. 28,015 is the next value area low we're going to be looking at. 28,015. There we go, a little bit lower. There we go. This looks very narrow because we are on a daily time frame, but if I bring this into a daily chart, you can kind of see how we've been getting a little bit more response off this value area high. Not only that, we had a little bit more response off this same level yesterday. I would love if the market could dip into 28,000 flat or 28,015. I think to the tick is where it's at. And then also, I think Jermal and Mike would appreciate that as well, because I know they have that directional trade to the downside where if they get it around 28,000, it's going to be the sweet spot for a near max profit for their trade. And it's kind of coinciding with one of the levels that I'm looking at. But I would love to potentially get long or short at around this 28,000 level, but this is where we've seen most of the trading activity take place, and this is where we've seen a little bit more fair value. And we always notice a specific type of price behavior whenever we're trading within fair value. We typically get a little bit more consolidation. Sometimes the market will use it as a level of quote unquote support and quote unquote resistance. So we tested it a couple times today, but outside of that, really not much else going on. And we have another level of value to the upside that we're looking at. And this next level of value happens to be one of the price ranges on the chart where the market spent most of its time actually last week. And that's going to be between 28,651 and 28,470. What is that again? 28,471. So what I want to do with this, just in case we get the opportunity later in the day, I would love for us to be able to come back here on Monday and kind of see how it played out if we get the opportunity and we're not on together. So let's just mark these off together while we're here. Go clean that up. Clean that up. I love the volatility we've been getting, but the market has been in straight price discovery mode pretty much all week. Like we really haven't had a level where the market has found fair value. We've pretty much just been in imbalance mode, which is another term for price discovery in the market. And that's pretty much what the market's been looking for so far today. But that's going to be 28,471 for the value area low, 28,471, a little bit lower down here. Whoops. 28,471. And then the value area high is going to be 28,651. So find 28,006. There we go. About 28,653, 28,250 or 651-ish. So we would just want to see how the market is going to respond around these price levels right here. And again, the whole idea about using levels of value is the fact that auction market theory lets us know the market is constantly seeking fair value, and fair value being the price range or price level where buyers and sellers quote unquote agree on price. And depending on which state the market's in, we typically see a very specific trading behavior. Whenever we're trading outside of balance, we typically get more directional markets or a little bit more of a trending market. So we can even see over here, whenever we broke to the downside this morning, if I can find this tool, whenever we broke to the downside this morning, you can see we had a little bit more of a directional market to the downside. And this kind of makes sense from a logical standpoint too when we really think about liquidity, because the market moves and the market is constantly seeking liquidity. And whenever we get a trending market, it's typically because we have a lack of, quote unquote liquidity within those price ranges. And the market is going to constantly seek the next bid or constantly seek the next ask. So it makes sense, especially on a market like NASDAQ, that's a lot more volatile than the S&P 500. It makes sense why the NASDAQ is a little bit more volatile. And it makes sense why we sometimes have a little bit of a cleaner trending market. But again, by using a volume profile and auction market theory, we can kind of just get an idea on where the market found most interest. So that's pretty much the whole idea of, paying attention to some of these levels that we have over here. But right now, the market is looking like it's wanting to trend towards this value area low. But we will circle back around to that and kind of see how this plays out. But if you are just joining, one of the trades of the day that we put on today was selling an out-of-the-money call spread on Meta, just getting on a little bit of short delta. That's going to be 49 days left till expiration. So we got a good almost 2 months on our hands for this position, but we'll manage at around 21 days left till expiration. And another position that we're going to keep a close eye on is going to be the Micron position, where we sold an out-of-the-money call spread. Just kind of joining the trend to the downside on these pullbacks that we've been seeing on some of these memory names. So, the NASDAQ and the overall market selling off to the downside definitely helped these positions a little bit more, or vice versa, right? But it's nice to get some short delta on in there, considering the fact that it seems like we have a lot of range on these names, whether that's Micron, SanDisk, or Intel. SanDisk is going to have earnings August 5th, so that's something that we're going to keep an eye on in the next week, because sometimes those earnings can affect some of the other names in the memory space, so we're going to keep an eye on it. But again, if you're just joining, trade of the day was going to be Meta. We have on a Micron position. We still have on that Google position that we had put on last week from Google earnings. Our call side is getting tested right now, so we'll circle back around to how we're going to manage that one, and then we still have a little bit more short delta on in SPY. So we'll circle back around to all these positions. I appreciate you guys taking your time. Be sure to stay tuned. We're going to be back with an amazing guest, get his thoughts on the overall market and any other specific trades that he might be looking at. But we'll see you guys here in a quick moment. Stay tuned.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Cool. What's going on, guys? Welcome back to another trade of the day. We're going to be bringing on a guest, Christopher Ewell. How are you doing today, brother? It's great for you to be with us. Want to get
Dude, thanks for having me. I'm looking forward to being here and talking about the market. It's been a tough market the last few weeks, that's for sure.
It has been pretty tough, right? It kind of feels like that sentiment can shift on a dime, and I feel like we've really seen that, especially this week with FOMC on Wednesday. Some of the Mag 7 earnings. It really does feel like the sentiment can shift at the blink of an eye. Have you kind of experienced the same thing this week, or that same feeling?
Oh, yeah, for sure. I mean, I've been stopped out of more trades in the last couple of weeks than I have in a long time. And a lot of it has to do with the fact that Iran, the war over there, or the not war, continues to be a not war. And the issue with that is, regardless of your political persuasion, Donald Trump in reality is one of the main driving market movers of the market, right? He can sit on his golden throne and he can tap this screen and he can say basically anything in the world and it can send prices soaring or prices crashing. And how do you trade around that, right? There's no real way to do that. So like I say, I've been stopped out of a lot of trades in the last week, but one that's worked really well for me is Apple leading up into earnings. I don't know if you've seen Apple today. Apple's getting crushed down almost 10% today. Yeah, I traded that one. I got into it on the 7th, and it basically just went straight up, which was a wonderful trade. Really helped offset a lot of those losses that I've been having to deal with over getting stopped out. But this, Errol, is one of the number one reasons why I do not trade earnings, right? As great as it would be if it rocketed 10% higher, we can't control that, right? We're at the mercy of the market when something like this happens. Were you paying attention to the stock?
Yeah, 100%. I was paying attention to it because I thought it was kind of flying underneath the radar. I recognized that Apple was trading at its all-time highs coming into the earnings, so I thought that was interesting. And the fact that it was pulling back ahead of earnings as it was trading at its all-time highs, I thought it put it in a very awkward position to be able to frame a trade up for earnings. But I was paying attention to it. It's been performing really well, and I feel like it actually hasn't been getting a lot of love because the memory names have been taking most of the attention, but Apple just chilling at all-time highs, right?
Oh, yeah, for sure. You know, Errol, I actually go live twice a day, every day on YouTube. But one of the things that I say on my YouTube channel is all-time highs is bullish AF, right? You've got literally nobody above you. There's not a single person out there. Ever since the last time Jesus walked the earth, if you owned Apple since then to now, you are up money, right? So that's a very bullish environment to be in. But also, like earnings will take it down. You can have a month or 2 months worth of gains just wiped out all at once. Have you looked at Netflix lately?
I haven't been looking at Netflix.
Has been going down the entirety of last quarter.
Really?
And
this was one that has been taken off my radar.
Yeah.
But it's been getting absolutely crushed. Is there anything due to the sentiment in there, or what's been going on in Netflix?
Well, it really comes down to the fact that the way that prices move in the markets is an imbalance of fear and greed, right? When people are super greedy, that's going to push the prices up. When people become fearful, that's going to push the prices down. And whenever earnings come out, it really can rebalance what that fear and greed looks like. And in Netflix's case, you go back to the earnings that happened in April. It was on a big, beautiful run leading up into earnings, sold off 11%, and literally went down nearly every day the rest of the quarter. And now we're looking at it after the most recent earnings, and it may be in a similar situation once again. I mean, the earnings can really eat your lunch if you're not ready for it.
Right, and it definitely seems that way. I mean, we've gotten some pretty large gaps now that you continue to bring up earnings. I mean, we had a pretty large gap down on Meta. Google had a pretty large gap last week as well. Apple's having another large gap during this time of the year. So I mean, definitely the size of the gaps definitely can't be understated. But in Netflix, another one that's been flying under my radar as well.
It's funny you talk about the pullback in memory stocks like Micron. That's been getting killed. SanDisk has been getting killed lately.
Crushed.
And one area that I'm actually starting to see some rotation into is the staples, so consumer staples. That's really a flight to safety sector. That's where people, when they don't know what's gonna happen, right? We can't eat memory stocks. We can't fill our cars up with memory stocks. We can't put things like that on the pantry, in the shelf, and in our bellies. So people go to flight to safety stocks like the staples. Couple names that are interesting to me right now are like Costco, Walmart, Target. Some names that they're always going to be around. People are always going to be interested in them. And if you look at Costco today, right, it seems like it's found a bottom and it's starting to push up a bit higher.
It does seem that way. It's like the old faithful stocks, right? It seems like we're seeing a little bit of a shift into. And it's funny that you brought that up because I see we're starting to hold here. Some other products as well, were like Coca-Cola, I recognize are doing super well.
Mm-hmm.
That I feel like we could add in the conversation of what you've been bringing up. Heinz, right? Like Heinz ketchup, Heinz mustard, those kind of things are doing really well right now. But no, Costco's been another one. Some of these stocks that aren't the sexiest to trade or that have the most volatility tend to be doing pretty well right now, to the point you're making.
Yeah, and it really comes down to the mindset of the consumer, right? As great as AMD was, as great as Micron and SanDisk were, right? It doesn't at the end of the day sustain you, right? So defensive stocks like Coca-Cola is one you mentioned earlier. Not necessarily that Coke is going to sustain you, but some of the products that they sell definitely can. But man, one sector that I'm staying as far away from as possible is energy.
Energy, okay.
I am not I've literally said energy is off my radar until the end of the whole Iran not war, because dude, it's like every time you turn around, it's up 5%, down 5%, and it's a very, very difficult market to trade. But then you could look at something that's a lot smoother, like Microsoft. Have you seen Microsoft after earnings?
I did. I've seen it's been doing pretty well. I know Mike on the team has been trading this one, has been pretty happy lately. But another massive gap off these earnings of some very directional moves. Yeah.
But to that point, those gaps can be brutal, right? Brutal both directions, right? Imagine that you were short. Imagine that you sold calls against Microsoft at earnings. It's up 20% this week, right?
No
if it can
pullback.
break through that area at the top of that red candle right there, I could see a lot of strength coming through, right? I could definitely see some overhead resistance at this point, where those buyers who were trapped at that area, they're looking to get out as fast as they can, right? So if Microsoft can push through that level right there, it definitely has some room to go up to another area that could be overhead resistance.
No, it's a good point. I mean, up 2.5% on the day, after gapping up, from a low of 390, all the way to a high the next day at 450. So, I mean, that's 60 points in less than 24 hours. And it seems like that trend might continue here a little bit there.
You know what I like about gaps? I call it a gap and go. And what we're looking at on Microsoft is a gap and go. And that's where it gaps up at least 5%. And then it continues to push higher, right? A new regime has formed, a new buyer pool has come to town. And people are excited, right? The imbalance has shifted more towards the greed. But anytime you see a gap like this, and then it closes below the low of that gap candle the next day, I call that a gap and crap. And it's you know what, this is a fake out, get out of the way. And in fact, that red candle where the top of that line is over there is a perfect example of a gap and crap, right? It gapped up, immediately turned around. That's not where you want to be. And it turned around for months at that point. I can't tell from your chart right there, but it looks like it went down for several, maybe 3-4 weeks at a time right there.
Yeah, I know at the high of this red day you were referencing was going to be June 1st, and at the low of that move was June 25th. So we haven't been back there since over the last couple of months. But it does seem like that momentum is continuing, right, into Microsoft to the point that you're making a little bit of that gap and go action.
Gap and go. And that's a great trade, right? I used to be scared of gaps. I used to be scared of all-time highs. I used to be scared of gaps.
Well,
and now
what made you get a little more comfortable to recognize these ideas and potentially trade some of these? Was it like screen time? Was it experience? What was it for you?
It really was a little of both, right? It's, I mean, I've been trading for 17 years. So I've definitely had some good years and I've had some bad years. But a lot of it is getting comfortable with these type of moves. And the more you see it, the more you can recognize, you know what, gaps aren't scary if they continue on. And really, it could be a great catalyst. In fact, if you look at Palantir a few quarters back, was a great example. It had a gap and it didn't stop going for months.
Palantir, now, there we go.
Palantir is not the big, beautiful, sexy stock that it was a few months ago, right? There are several stocks. It's funny. I keep my ear to the ground on YouTube because I've made so many videos. But Palantir, SoFi, AMD, like there were several like real big stocks that people just couldn't get enough of. And Palantir, having been one of them, it's not the case anymore. And you can see, I think it's down roughly 30%, give or take. I don't know exactly, from its all-time highs. But yeah, right now it is, it's not a stock that I'd be buying. I wouldn't even buy Errol with your money. That's how much I would not buy.
You're not touching it with a 10-foot pole right now.
No, of course not. So speaking of SoFi, let's take a look at SoFi. They just had earnings recently, and another example of why I won't trade.
Yeah, been absolutely beaten down lately, trading at about 16.31 right now. And just a few weeks ago, we were trading at about 32.75. So, I mean, it's been pretty much cut it in half since that last swing high, at least.
Absolutely. Errol, I want you to add 3 moving averages to your chart when you get a chance. I want you to use the 10 EMA, the 20 EMA, and the 50 EMA. That's what I call the outlier trend template. When the 10 is over the 20 and price is over the 50, mathematically speaking, it is a bullish trend. Now, we don't know magnitude and we don't know duration, but it will absolutely show you with mathematical certainty which direction you're going. And once that ends, it'll start and flip the other direction.
We'll do that one more time for us. That's going to be the 10, the 50, and the what
10,
else?
20, 50.
10, 20, 50. There we go.
When the 10's over the 20 and price is over the 50, that mathematically is showing you the trend is up. Again, I can't tell you how long it'll trend that way, but it will show you by math, time and duration, that it is moving in that direction. So yeah, check that out, dude. Add that to your chart, and you'll be really surprised by that.
100%. We'll definitely take a look at that. That's one of the nice ways about having different perspectives up here. We can get different ideas. But with that being said, what are your thoughts right now on the volatility index before we go here? I know you're not going to be touching energy. It's too uncertain. We have a lot of headlines. It's so sensitive, especially to any type of geopolitical news. But how do you personally kind of view the volatility index? How do you kind of use this for yourself when kind of assessing other, type of trades that you might want to put on? Is this something that's in your wheelhouse?
So VIX is really not anything that I pay a lot of attention to. One of the reasons why I don't pay too much attention to it is for me, I actually buy deep in the money options.
Okay.
I worked with one of the market wizards, Larry Height, and he was actually the very first billion-dollar hedge fund manager. And one of the things that he taught me was if you ever wanted to have futures like leverage on any stock out there, you don't go for the out of the money, you don't go for the at the money, you go deep in the money, because then you don't have to worry about the extrinsic value, yet you can still take advantage of those big delta moves. So that's the way that I look at it. And when you do, like volatility really, the Vega on the options pricing really just comes down to almost zero. But for me, like right now, I'm just watching the SPY. If you look at the SPY right now, it's in an area of, I literally have overhead resistance and underhead, I guess you could call it underhead support. And it's just bouncing between those 2 points right now. So we really need to see a real imbalance of one or the other to push it through. And in the meantime, dude, this is a tough market, right? We've been going sideways since May, I believe.
Yeah.
And because of that, it takes a lot of buying and a lot of selling to push it one direction or the other. I don't want to call myself perma bear, perma bull, or perma anything. I'm a perma opportunist, and right now the market is not giving a lot of trending opportunities, which is how I like to trade.
No, it's a great point that you make. This last couple of weeks has definitely been a little bit of a shakeup. I've heard the same sentiment all the way or all around. But I know we are coming to a close here. What else is going to be top of mind as we get into the last few hours of market open for the day? Anything on your mind into the weekend, next week? What are you going to leave us with, Christopher?
Dude, right now I actually have all my money in BOX, BOXX. Now,
okay, I thought you said bonds for a second. I was like, okay, some
it
bonds.
actually was in bonds. I have been putting things into SGOV, SGOV, which is ultra short-term bonds, but BOXX with two X's.
Gotcha.
That is actually where 100% of my cash is right now. Reason being is it's basically just a place where you can earn interest on uninvested money. Think of it like if your broker pays dividends, then on uninvested cash, you don't have to stress about it. But this is a place where right now I'm getting paid to sit in cash and not make any mistakes in the market as it's really trying to figure out which direction. Once it figures out which direction that is, either up or down, I'll be there. But in the meantime, I like this kind of move where it's a consistent growth. I'm basically getting paid daily interest to do that.
Yeah, quite literally on a week-to-week basis, on a day-to-day basis. So I hear you. You're going to kind of transition to some of those areas in the market once uncertainty, I guess you could arise, if that's what we want to label some of the market moves that we've been seeing lately. Or lack of conviction in terms of direction based off of some of the news we've gotten this week in the volatility.
Yeah, that's a better way to put it, is more conviction in the market. And I don't take any trade unless it's high conviction, dude. Like, if it isn't set up all the way, I'm not even touching it.
Well, especially because sometimes you can have, a trade you can recognize really well and a trade that you really want to attack, quote unquote, let's just call it an A+ setup, and you could still lose money on that.
Oh, yeah.
Right? So it's like, why not just wait for those trades that you could have conviction in rather than losing a little bit of pocket change here, and here, and it really adds up. So I hear you on that. With that being said, Christopher, it was great having you on here today. Would love to have you back and get your ideas on the overall market and what's been going on. But with that being said, Chris, thanks for joining us. I'm sure everybody in the chat really enjoyed your time. They really liked the EMAs that you were giving out there too. So we'll have to have you back here soon.
I appreciate it, dude. I'm live twice a day, every day on YouTube. So y'all come subscribe. I'll see you there.
Absolutely. Thank you, Chris. And where can we find you? Let me give you that real quick. Where can we?
We'll right there, popping up on the screen. Just type in my name, Christopher Ewell. You'll find me right there. Couldn't be any easier.
Beautiful, beautiful. All right, Chris, you take it easy. Thank you, guys.
Thanks for having me.
Everybody else, we are going to be back for more amazing content here in a little bit. Be sure to stay tuned. Be sure to check out some of Chris's content on the socials. And we'll see you guys here in a little bit. Peace.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. You're still watching Tastylive. Errol, he's here with us for the next 30 minutes. We're going to call this a Futures Power Half Hour here on Tastylive, sponsored by CME Group. Errol, how's your day going so far?
It's a pretty good day. I can't complain. It's a little bit gloomy out here in Chicago today, but it is a Friday, last day of the trading month. I hope everybody's not sick of seeing me so far today yet, because I am back.
No such thing.
No, was looking forward to hopping on with you today, Chris. What's been on your mind?
Well, we've got a lot on our mind here today. I mean, the market's obviously trying to fight through the Amazon, the Apple earnings, dealing with Microsoft Meta. We obviously have everything going on in terms of a major player in the market getting, taken out, so to speak. And yeah, he's not done yet. He'll be back. Leopold Aschenbrenner will be back. Situational awareness will be around. But clearly the market getting that out of the way has been a relief valve here. I mean, volatility has come in. I think we can just go right to the charts here because we only have about 20 minutes left to go anyway. Our half hour goes by very, very fast here. I want to go to volatility futures here, Errol, because all of a sudden it's in 1835, not for nothing. This is going to be very close to, if not the lowest, but the second lowest close of this cycle for the August vol futures. 1830 right now, which is pretty dang low. Talk to me about this. After the week that we've just had, where literally a few days ago, volatility hit its monthly high, almost at 21. We now are back below 17 here. What does that whipsaw do for how you approach this market?
You know what? It's actually added a little bit of uncertainty for me in my book. So I know this week it's been very difficult to understand or at least manage the overall sentiment of the market. And I mean, we saw such an aggressive sell-off at the beginning of the week. We barely seen volatility pop to 19 on the VIX. So it tells me that fear isn't something that gets poured into this market very easily, right? You would have think a little bit of that roller coaster action to the downside would have people raising some question marks, but it doesn't look like that, especially with VIR collapsing back on its butt today. sitting around 1650. So it's added a level of uncertainty for me until we get a little bit more clarity, Chris. How have you perceived all this volatile action so far in terms of the VIX?
Spastic, honestly. Okay. Like the market clearly has been dealing with something, and the fact that
that's for sure.
Yeah, something. It has a little head cold, or I don't know what we want to call it, but the fact that you go from like a 21 down to a 16, volatility has collapsed as well. VVIX was at 108 a few days ago. It's now back down to like 91, 92.
Right.
And so this feels like almost like a clearing week in a certain extent. You know, we've ripped the bandage off, and now the market can exhale a little bit here. I mean, not for nothing. The way that those earnings turned out this week, they're going to be pretty good in terms of the earnings growth rate for the quarter. And the overall earnings growth rate for the market. So it wouldn't surprise me when we get our update here. I have to double check FactSet in a little bit. But when they produce their study, I wouldn't be surprised if the overall value of the market, the PE ratio for the market, is sitting below its 5 or maybe even its 10-year averages at this point in time.
Right.
Which, low volatility, I know there's tons of other stuff going on, but low volatility, market's cheap. Market's cheap. Markets still could be cheap in the short term, especially if the Fed's going to keep rates lower for longer. But hey, let's go to the NASDAQ here, which is where all the action's at today.
The real market, yeah.
The real market, not like that Dow Jones nonsense. What a ridiculous construction of an index. 28,044 here. We're kind of pinned just below those lows we had in early June. We can't really climb through them yet. Do you see this market trying to carve out a low here? How are you approaching the trade here today, even with that, you know, we had a violent pullback earlier, and we've been chewing away and scratching and clawing back from it all session long.
You know what? I'm not too convinced on the low just yet, Chris. You know, whenever we had seen the rally off the lows come Thursday, it made me question things a little bit. But I don't know how convinced I am. You know, I know SPY has begun to trade back inside that summer range we've been trading in the entirety of these summer months here, but. I'm not too sold yet. Not to say I'm bullish on the market and I believe. You know, we're going to whip back up to all-time highs, and we're just going to step down to making lower lows. But it's a great deal of uncertainty that I'm feeling right now. But I don't know how sold I am on these lows, and I think a couple of my positions are reflecting that I had sold an out-of-the-money call spread on the Qs, right? Not really signifying that I think the floor is going to fall, you know, underneath the feet of us right now, but just to get a little bit of directionality. Oh, I'm sorry, a lack of directionality, a little bit more sideways movement. But because of that, I'm not sold on it yet, Chris. I love the volatility, though.
You know, I hear you, and I think maybe you mentioned that we're back in the midpoint of the summer range is perhaps the most important observation to be made. All right, one of the things about the VIX and volatility falling back to where it is, when you're in, you know, Victor Jones used to say this here at Network, when you look at the return stats about where is volatility more likely to go if you're at like an 18 VIX, are you more likely to go to 20 or to 16? And it's basically a coin flip. You're kind of in this gray danger zone where things can go sideways or they could just be like, you know, it's a small bump in the road. But you mentioned the middle point of the summer range here. Maybe vol collapses further from here. Maybe we go back down. It was a 1493 low in the VIX for the month of July. Maybe we get back down there in the month of August. Maybe we don't. Maybe we go back down towards the range highs in volatility, which was closer to 21. And that probably goes with a decline in stocks. But where we stand, not all the vol's been taken out yet. We're not selling vol at a sub 15 VIX, which is not something you should do, ever. Our own data suggests that. You just might as well buy stocks at that point because you're taking additional risk and you're reducing your average daily return when you sell premium with a VIX below 15. So at a 17 still, you can get something done here. I'm going out in ES to, let's just start poking around. What does 21 days look like? What does 20, let's go to 20, actually, we'll go to 2031, end of month for August. Okay, so where are our range levels here? Bottom side of the range, just below 7,300. Top side of the range, just under 77. Believe it or not, that's where the expected move sits right now. So we have the brown bar here in the middle of the trade tab, of course. If we see the number on the right-hand column on the top right-hand side, you see plus or minus 223.07 points, Errol. As we both know, that's the plus or minus expected move for this market here. Curiously enough, we're sitting in the middle of a 400-point range. So here's what we're going to do. 725, 70, 750 just outside the high end. We're going to dip a little bit below 72, 75, 72.50 here on the low end. That's your iron condor, short iron condor trade. So does this fit the mechanics right? So we're in the middle of a range, middle of a summertime range, as you point out. Do the mechanics call for, and does the pricing afford you the opportunity to do something around here? So 43% probability of profit. That's not so high. Risking 450 to make 800. But here's where it gets interesting. These strikes are $25 wide in ES. So in theory, we're looking for like $8.33 of credit here to consider this something worthwhile to take a stab at. And I'm seeing 890 flash across my screen right now. So yes, the risk to reward is here, Errol. We want to express the view that we're back to the midpoint of the summer range. We can express that view through ES futures. We can place the bet that, I'm still have a little bit of a long kicker on here. I'm still leaning long MES. But over the next month, maybe we oscillate within this range still. This is a period when volatility tends to go up. Maybe some people feel trapped. Let's see what we can get going here. 31 DTE. We'll work the order a little bit. Maybe we get it filled by the end of the show.
What do you think is the headline that the market is waiting for? Do you think it's going to be that next interest rate decision for them to actually rip the Band-Aid? What do you think it's going to be that we're now waiting for now that FOMC has passed? A lot of these Mag 7 earnings have passed. What do you think is going to be around the corner for everyone to look forward to?
With a firm date, you're probably right. Fed meeting, of course, the month of August is coming up. So in the month of August, we don't actually get a Federal Reserve meeting. We get the Jackson Hole Economic Policy Symposium out in Jackson Hole, Wyoming, where all the head honchos of the major central banks, including all the Fed governors, regional presidents, et cetera, they all get together to go talk about monetary policy. That forum has been used in years past to change the market's perception around what the Fed is trying to accomplish. I think specifically about what occurred during COVID, when the Fed changed its like more of a hard 2% target to what they refer to as their average inflation targeting scheme, AIT. And that was basically an excuse to say, listen, inflation was so low in the years after the global financial crisis, we may be willing to be flexible to let it overshoot for a little while. Because if we have 1% inflation for 5 years and 3% inflation for 5 years, on average, inflation was 2% over the past 10. And maybe we need to stop looking at it so narrowly, like, what was inflation over the past year? 2%? No? Okay, we're doing something wrong. And sure enough, that loosening of their restrictions occurred right before the inflation wave. So one of the reasons why the Fed was late is because, well, in our new framework, we're allowed to see inflation overshoot for a little while.
Right.
Okay, so Jackson Hole can be important. That's coming up at the end of the month. We should definitely keep an eye on that. That's more important than the rate hike in September because that's going to set the stage for the rate hike in September. And it also is going to provide the lens with which we should view CPI and non-farm payrolls. Because Powell, miss him. If Warsh comes out and says there's no data that can come out between now and September that will convince this Fed that it does not need to hike, we're going to hike in September no matter what, all of a sudden the market's going to look at those August CPI, August non-farm payrolls prints, and instead of having volatility priced into them, the vol is going to come out because the decision's made. The data only matters insofar as it has an impact on what the Fed does, in my view. If it doesn't change Fed pricing, the market is going to roll past non-farm payrolls and not care about it. And it usually does, right?
Yeah.
Pay attention to Jackson Hole. Earnings is the other side of this equation. Maybe it's a three-sided coin. If the U.S. and Iran came to a peace deal, right? The Strait reopened fully. The U.S. pulls back its armada. Iran stops launching missiles. Trump and the new Khamenei are shaking hands in a photo op, like obviously over the top imagery, but the war is over. Not just that would be important because you're going to take inflation pressures out of the system immediately. Inflation's still coming, by the way, but it would take the pressure out of the system. And then the other one would be the earnings. More earnings like Microsoft and Amazon right now that show these hyperscalers are converting dollars spent into dollars earned. Really, we can go right back to Amazon here today, actually, on the chart. There's a reason why it's doing what it's doing, up 15.1% here today. This is a misunderstanding of what the business had been doing in recent weeks.
Right.
The market perception here was too much capital expenditure, not enough revenue. And all of a sudden we look at AWS and go, actually, they are able to turn a profit on some of this stuff. Maybe we're wrong. Microsoft, too, up 15.5% after the earnings yesterday.
Yeah.
Soapbox done.
No. That was very informative because I'm always curious to see how these things are going to be perceived. And I think that photo op is going to be really important right? I think specifically that photo op that I could definitely see coming now that you mention it here. But yeah, no, I mean, it's a great point that you make. I mean, I'm looking forward to it, and I'm glad that you reminded me that it's going to be Jackson Hole. Can you state that one more time, Chris? You said we're not going to get a Fed announcement in August. Why is that again, if you could educate us?
Yeah, so the Fed meets 8 times a year, once every 6 weeks.
Right.
And they specifically have their monetary policy conference in August, where instead of hosting a regular meeting, they do July, their policy conference in August, and then a meeting again in September.
Okay.
And so that's usually why, like, depending upon the meeting schedule, you get a meeting in September. It comes right before Halloween or right after, right? So 6 weeks.
Yep.
September 15th or so, add 6 weeks. So you're getting to the end of October, beginning of November. A few more weeks now, you're getting to right before Christmas. And then you get your end of January, beginning of February, FOMC meeting, March, late April, early May, June definitely. But you're always going to have June, September, December, and March as your anchor points.
Gotcha.
I know far too much about this stuff. Why do I bring up some of this, though? Because we talk about how the market perceives things, right? This is for far out in the future. We'll remind folks when we get closer to Jackson Hole. But September 4th, just to put from theory to practice here a little bit, September 4th is the day of that non-farm payrolls report. You can see that right now the volatility is 18.8%. When we get to Jackson Hole and we listen to what War says, this vol number should be jumping around. It's going to be it's the clearest way for the market to tell you whether or not the incoming data matters. Because if it goes down, then the market's telling you we don't need to be concerned about this. Warsh just told us what's going to happen next. And if the vol goes through the roof, the market's telling you then, oh, we clearly think that this is a fulcrum point. It's a decision. It's a hinge upon which the next rate hike swings. Mm-hmm. And so we should be paying attention to it. But those are the little clues you have to look for through volatility. And like now that we have some of these daily and weekly options in SPX and ES, you can really kind of hone in on the vol curve and the particular tenors you need to look at in order to understand what people are actually caring about.
Right.
That's really it.
I'm waiting on it. I mean, it's the last month of the trading month today, Chris.
Yes.
We finally have FOMC out of the way. We finally have these Mag 7 earnings out of the way. It feels like that was kind of on the precipice of what we were all waiting for. I don't want to say it was anticlimactic, but again, it's left me in the same position that I was in prior to FOMC, a little bit more uncertainty. I almost feel like I had a little bit more confidence and convictions in terms of some of these positions that we're putting on when we had a steady consolidating range, at the highs of these summer months again. And it just kind of feels like, once again, the market is still kind of trying to figure out what it's trying to do right now. So, I mean, with that being said, I do have a little bit of long delta on in bonds. I'm hoping for a little bit of a pop there. But outside of that, that's what's most interesting right now, Chris.
Yeah, bonds really, volatility here is creeping up, which I think is the noteworthy thing. I really wish I had those puts. 55, yeah, when puts print when price goes down and vol goes up. It's a beautiful thing. But the fact that you have yields along into the curve doing what they're doing here, right? ZT is up, yields are up a little bit today. What's the 210 spread doing right now? US 10Y, US 02Y. That is up again today. To 4.454%. So that's a 3.1 basis point move to the upside. That's 3 days in a row of the 210 spread widening out. So the yield curve is now the steepest it's been since Friday, May 22nd. Several takeaways there, Errol. Does the market think that the Fed's doing the right thing? Or does the market see more inflation and growth coming? This is exactly kind of playing out what we talked about earlier in the week. If the Fed doesn't hike rates, what happens at the long end of the curve? Yields go up. Right. And we're seeing that play out in real time right now, for what it's worth. I go back to September 24. We get two 25 basis point rate cuts from the Fed, 50 basis points total. And what happens thereafter? Dollar soars, yields go through the roof, stocks rise. Why? Because the market says, oh, you're keeping policy looser for longer, you're letting inflation breathe, you're letting growth breathe. We just got that again here this week. We went from 100% chance of a September hike with a 5% chance of a second 25 basis point hike to killing all of that down to just 60%. So policy is going to stay looser for longer. What happens to the long end of the curve? Long end of the curve gets blown out. It's one of these, like, if the Fed cuts rates, should rates go down? Not necessarily.
It feels like a game of chicken, Chris. I got to say it. It feels like that's the game that we're playing sometimes with some of these announcements that we're waiting on.
So ZN, ZB, they're sitting near yearly lows. Volatility in the space is absolutely creeping back up. I know there were some folks here a few days ago when you and I were talking. I never got filled on the ZN reverse iron fly, Errol. But for those folks who were trading with the July 31st expiry today, I hope you are happy because we were looking at what? The 109, 110, 108. Worked out like a charm sitting right at 108 right now. So if just for the record, if you're trading a reverse iron fly, your maximum profit is when you get to your wings and start to move beyond your wings. We're at the 108 portion right here. So if you had that on, looking for who knows what the Fed's going to do. Could they hike? Could they not hike? Are rates going to go up? Rates going to go down? Who cares? It's going to be violent either way. Just be directionally agnostic. Just look for direction either way. That worked out brilliantly here. So I'm cautious on the bonds right now. When I have my like little conspiracy Chris ideas and then they pan out, it leads me to think, okay, so then what's the next reaction in this chain?
Right.
But the reaction of the chain, Errol, is reflation, perhaps. Reflation, asset prices going up. People see their dollars are losing purchasing power because inflation is sticking around for longer. So they're buying things with the perception that it's going to retain value. Doesn't get much harder than that. It's really economics 101. I know that's not how the crowd usually approaches these things, but this is a simple, this is a real just like, what's the risk, what's the reward? Are yields high enough? Are they low enough? What am I getting from my stocks? Yada, 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 yada.
Yeah. It's coming down to some of those fundamentals sometimes, Chris. I think it's easy to forget with all the volatility that I get. And I mean, whenever volatility picks up, emotions typically rise, right? And I think sometimes it's easy to kind of forget those principles, but I think that's what emotions do. And I think that's sometimes why we get such dramatic moves in the market, because I think it makes people make irrational decisions. And I think, sometimes larger players in the market need, right, a little bit of irrationality sometimes.
You know what's so fascinating about this is if you're really worried about inflation, oil is not the place to play it because oil is nowhere near its yearly highs. And what do we see about ZB? It is right now slumping into fresh yearly lows. The story is not about oil itself. The longer oil stays elevated, the longer the strait stays closed, the more inflation goes into the system. It's why you're seeing the refiners, Errol, the refiners, not the oil producers themselves, but it's the refiners who have the margins now that are doing so well in this environment. Your Valero, your Phillips 66, PSX, for example, right? Marathon Petroleum. There's this, we can't ignore the fact that there is a macro pulse to what's happening right now, and there is a very clear explanation from where I sit for why these things are happening. So keeping that in mind, let's move off of bonds here real quick, and let's get into gold and silver, because you know what typically likes reflation? Gold and silver. If you told me that oil was going to be up near the weekly highs and oil was going to be up at the weekly highs and bond yields are going to be now sitting at yearly highs, I would think that gold would be doing a lot worse than this, Mr. Coleman.
I mean, it does kind of seem that gold is still, sustaining the price that it's sustaining based off of that, rally that we've had a little bit earlier into the year, which I think is really helping, gold in the overall metals case in this way. So I think it's going to be interesting if these metals come back into play on top of what we had already seen in the metals this year.
Yes, and so one of the things that was driving gold last year was central bank demand. Mm-hmm. According to the World Gold Council, central bank net gold demand picked up significantly in the second quarter, reaching 289 tons, a five-fold increase on Q1's revised estimate of 57 tons, and a record high for any second quarter any year ever.
Jeez.
So, there's clearly a lot of churn here. Some central banks are buying gold, others are selling them. We know that because of what we've seen out of the Middle East and Asia. But the ballast of this market, of the gold market and the silver market, remains in place. And so with this floor here, it does certainly feel like there's been a floor around 4,000 for about 5 weeks now. And we have now this gold buying data from the central banks in hand. I'm continuing to watch this like a hawk. I mean, one of the least surprising things about the market, what would surprise you more, Errol? Gold back at 5,000 or the S&P at 8K?
Ooh. Gold.
I think I got to play for
gold.
I got to play
back
for both.
at 5,000. Yeah.
I think I got to play for. I already have my 8,000 calls.
Yeah, I mean that's right around the corner, especially if we're looking at the S&P 500. I mean, it looks like we could pop back to that level. I mean, by next week. Not saying that's going to happen, but that's how in reach it seems right now.
Beyond there, I do want to take a brief moment to talk about what's going on in the currency space. So we're going to take a jaunt over to 6J right now, where Errol, they're intervening here. And we've been talking intervention for some time. This is not the right contract. Why is that not rolling over? I want you to go to 6J here, friend. So now we're in 6J. Slightly out of reach still for us, where we had put this on about a month ago. We've been rolling forward with intervention type trades because we think 160 is going to be defended in the spot rate. But they have indeed intervened yesterday. They've intervened again today. The Treasury, the Ministry of Finance are working hand in hand. I've asked around the industry. I've heard from 3 sources that I know to be very, very accurate on this stuff. They work at banks that receive rate checks from the Treasury. So there's intervention going on right now. Obviously, the market likes to use the yen as a carry trade vehicle, so perhaps stunting some of the returns here in stocks today, but still important context right now. Do you chase this is the question that I saw earlier. No, we don't chase this up here because we've seen the interventions, If 6J were to fall back down towards like 0062, 0061, dollar yen is back up near 160, 161, 162, that's when you think about getting long the yen again because they're trying to put a line of defense in the sand. But Errol, we're going to have to leave it there here. You get the final thought, though. What do you think of the U.S. dollar here on this Friday as we look across the board?
I'm curious to see how it plays out. Again, I'm in a territory of uncertainty right now, given the way a lot of these other underlyings are performing, such as the indices, bonds, and things like that. But a stronger dollar is always going to help. So I'll leave it at that with you, Chris.
It does help, but the dollar's down because they're intervening. So do you trust an intervention move lower in the dollar in DXY? I don't. I think that's a dip to buy, but we'll leave it there for now. We're going to take a brief break here on Tastylive. We're coming back in about 2 minutes' time. There's more great programming coming up next, of course. Top of the hour means one and one only. It's TP Tom Preston for more live trading. Stick around. See you later, Errol.
Thanks, Chris.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, is not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company. There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Okay, welcome to Friday afternoon, everybody. Last day of July. I'm Tom Preston, and let's see if we can get trading here. Let's touch on a couple of things I've been watching closely here. The VIX I have loaded up here down below the 17 handle, down to 1659. What is there to worry about the market? Obviously nothing. SPX up $43 today. While I'm at this, let me do this really quickly. Let me see if I can get loaded up. I want to see if I can get YouTube loaded up and see if I see any comments from you folks. Oops, sorry. No, I'm not sure if I can do that here. Let me see. I'll worry about that later. All right. Actually, let me do it on my phone. I'll see if I can do it there. So one of the things that's interesting is, and I wish I could show, and I think I'm going to try to show this to you folks, is the contrast between, let me see where I am. Contrast between bond volatility and VIX. So if you look at something like TLT, let's see TLT, go to a chart and open up TLT in the chart. What you see is TLT is the ETF that tracks the 10 to 30 year treasuries. That is rising. Compare that to, now, take that as a snapshot in your head, to the VIX. This is the VIX of the VIX. Just pay attention to this top number. This is the VIX. This is sinking. What does that mean? Well, there's more excitement going on in the bond market right now than there is in the equity market, which is a little alarming. I'm not saying it's unusual, because you do see that fairly often, where there's a discrepancy between the bond and the equity volatilities. But the bond volatility is actually creeping up pretty quickly. And that could just be a warning sign, maybe for equities. Maybe I'm just talking my position. I'm short some NASDAQ in here. One of the things too is, and I want to talk about some real estate ETFs, maybe do a trade in there. Go back to, I can stay on the charts. Look at ZB. ZB, the 30 years are getting crushed in here. The way to think about this, bonds prices go down, their yields go up. In the 30 years, that's very important. They're down $1 today. The ZN, the 10 years, They're down 16 ticks, about half a point. So roughly half as much as what the bonds were dropping. And that's about right. But the 10 years are down too. Means the 10-year yield is going up. And it's the highest it's been in quite a while. That puts a lot of pressure on real estate. People, the mortgage rates are still kind of based off the 10 years. And the higher they are, the harder it is for people to borrow money to buy a house. Let me do this real quick. Let me do search Tastylive on YouTube, because I want to see if anybody has any ideas or thoughts. And while that's coming up, anyway, so I want to look at on my watch list today. I've got a bunch of stuff. Three of the ETFs, the real estate ETFs I was looking at. And so here's the idea. The rationale is as interest rates start to climb, people can't afford to buy the houses. Real estate ETFs might start dropping. Okay, that's the basically as much analysis as I do on this stuff. Looking at three of the big ones. VNQ is the Vanguard real estate ETF. IYR is I think it's the State Street maybe, or iShares. XLRE I think is the iShares. No, this is State Street. Sorry, they say the names right here. IYR is the iShares real estate fund. XLRE is the State Street fund. Looking at the options in these things, let's look at VNQ. The markets aren't awful. There's some decent open interest at some of these strikes. 1,000, 2,000. Again, it's not like we're talking about the S&Ps, but it's VNQ. It's a little real estate ETF. Go into XLRE. Again, markets aren't bad. 10 cents wide of the 45 puts. Again, for a not heavily traded ETF, go to 49 days. Yeah, this is almost zero open interest in these things, and the market's wide now as you go up to 49 days. What's the third one? IYR. And so just bearish ideas in these things. There's a fair amount of open interest in IYR. We might be able to get filled in a spread in here. I don't know. Anybody want to look at a chart of IYR? It was rallying up. Now it's down. Hardly a surprise. Like I said, when the interest rates go up, it's just never a good sign for housing. And I've been bearish on housing for a while. Some of the individual names like Lennar or Hovnanian or KB Homes, things like that, they're kind of tough to trade. The markets aren't great in them. That's why I look at these ETFs. Again, they're a little bit better. So let's go and see what we could maybe do in here. Stocks at 105. I'm not even going to look at the skew. Skew be damned. Can I sell the 108, 110? No, it's 2 point. No, I'm not getting enough credit for this. 16%. Actual volatility is fairly low. What if I pull this down to the 7.9? No. So let's do a put spread. So one of the stocks at 105.20. If I buy the 106s, sell the 105s, what am I getting for that? 47 cents. Okay. Here's the deal. I mean, look, it's a cheap bearish bet on IYR. That's all this is. Decent open interest at these strikes, so maybe it'll get filled. 47 cents. Very not a big delta trade. Negative 10 deltas. P50 probability making 64% probability making half the max profit, about 53. So about $27. I would take that absolutely, and it's generating at 22 cents of theta. Let me just explain a little bit because I love this theoretical stuff. That's my expertise. The 106 puts, buying those, you think, gee, I'm buying a debit spread, I should have negative theta. Yeah, that can be true, but when you're buying the at-the-money stuff, the 106 puts, the 106 puts have an intrinsic value of what, about 80 cents. 81 cents, but the debit of the spread is only 47. So the idea is that if IYR, I can't even remember the symbol, if IOIR just sits here at 105.19 over the next 21 days, that the spread will grow into the intrinsic value of those 106 puts. So it should grow hopefully from 47 cents up to 81 cents. That's the idea. So that's why you're getting positive theta. Let's route this at 47. I give this about a 30 delta of getting filled. Oh, geez, 100%, 100 delta. I should be more optimistic than that. Let's go, moving right along now. Oh, let's check this. Let's check the S&Ps. Do we want to do an SPX trade? Let me go into the live show if I can see your chats. My Wi-Fi is very slow here today. What do you say we do another one of those silly little butterfly things? Stocks at, up, stock index is up 74.80, $42. I'm not optimistic about this. The reason, and I've said this before, when volatility is low, it inflates the value of butterflies, inflates the value of at-the-money butterflies, kills the premiums on short out-of-the-money put spreads. If I buy one of these, sell two of these, and then buy one of these, 5 points, drag this down, 35-cent credit. Look at that. Spoke too soon. Let's see if we can do this a little bigger. I like to live, I like to say dangerously, but that's not the case. Nah, I don't want to go too far. I'm not getting it with this stuff. If I just keep it 5 points in this, let's do 30 cents. Let's do 30. Let's see if I can get 35 cents for it. 35 cents. Short the 745, 74.55, 74.60 put spread as this package. Let's see if I get 35. Submit. Working. Next, let's go to the watch list. Philip Morris. Gotta love cigarettes. The stocks, I don't smoke. No, I never have. And I don't necessarily, if you want to smoke, it's up to you. But Philip Morris has been actually rallying, I think, a little bit recently before it collapsed. This was earnings, and they got whacked here. So this would be a contrarian trade. What's interesting about Philip Morris, and I couldn't remember if we had traded this as part of this half-hour session, has a 6.24 dividend yield. I'm sorry if I'm repeating this trade, but if we go into Mo here, let's see, could do it as kind of a wheel strategy. If I wanted to, and I guess some people sell the in the money puts as part of the wheel strategy. I'm talking about out of the money puts. I don't love being assigned on stuff. But the point is that if you were bullish on Philip Morris, stock's trading is 68.74, in between 68.69, down, let's say a point, up a point. Yeah, the skew is pointed to the upside. Let's just see how much capital it requires. Selling the 67 puts, the numbers are decent, 85% P50, $3.27 a theta, not bad, but $1,200 of buying power, that's a little rich. Let's do the 65. Yeah, this is not, let's try the 68, 66. Yeah, this is a little bit aggressive. Let's go out another, see what we get in the different expiration. 28 days. Let's do this, 28 days. No, let's go out to 35. And one of the nice things about the platform is it's easy to move this stuff around, extend it out to a different expiration, change the strikes. I'm not getting much more credit going out extra weeks for this. I'm not getting a third of it. Let's pull this up. Let's pull this up to the 68.66, 66 cents of credit. 72% probability making half that, so about $35 ahead of expiration. It generates 73 cents of theta for $134 of buying power reduction, and it is the max loss. So 1% of that, or 1/10 of 1% of that, would be about 13 cents. I'm collecting a decent return on a theta return on capital for this. Yeah, it's a little tight, but let's try it at 68 cents. Let's review and send. Contrarian trade. Next, one of the symbols that I've had fairly good luck with is GLD. Let's check this out. GLD, decent IV rank, not bad, but GLD has really been noodling around. Hasn't been going anywhere for the past month. And I've been selling some short-term, like 7-day iron condors, so they've worked pretty well. 7 to 10 days, because I know I've been selling them, taking them off, capturing a little bit of premium every time. I may just go to the well again on this. The volatility, you can see the chart in here. The volatility has been slinking down. That's what happens when the stock's not moving a whole lot. So GLD, let's see what we get for 7 days. Let's just see what we get. Markets are not bad. Let's go out to 10 days and see what we get. Yeah. Now let's go 7 days. And let's just use the expected move, this thing here, this brown bar. In case you're wondering, the brown bar here is this plus minus $8 from the current stock price. Let's put it out in the wings here. Let's do this and see what credit we get. Do I get a third of the width of the strike? 65 cents. See, lo and behold. Lo and behold. So 65 cents is about a third of the width between 380 and 382. In other words, 2 points. 61% probability making half the max profit, generates $5.33 a day. Theta, not bad. Let's fire away. Review and send, 65 cents. Firing, filled, take a fill. Another one that I was looking at is, well, we could take a look at the VIX. It depends on how much time we have. We can take a look at the VIX. Coca-Cola, or let's look at Intel. Intel, go to the charts. Intel's been beaten up a little bit over the past quarter, I guess, or past month. Rebounded a little bit. Do they have earnings? I think they had earnings semi-recently, because there's nothing coming out anytime soon that I can see. Let me minimize this. This is I have a trade loaded up here. Let's do, again, if I were, maybe bullish on this stock, let's see what the volatility, or let's see what the skew looks like. 92, let's minimize this. Let's go out to 35 days. 92 and a half, so 90, in between 92 and 93, down, let's say 2 points. Let's get down, down 2 points to the 90 puts, 795 up $2 to the 95 calls, 865. The skew is pointed to the north. Skew is pointed to the north. Let's just see. Let's just start the process. If I were bullish on Intel, selling this 1 point, short put spread generates a third of the width. Sorry, 73, 74. But it's two. That's not enough. And one of the issues, I understand if you want to preserve your capital, you don't want to take a lot of risk. That makes a lot of sense. Selling a 1 point put spread as a bullish trade, great. It's 30 cents max profit, $70 of max risk. If you're just starting out and you're saying, or somebody says, well, I'm not that bullish on it, fine, I'll keep the risk small. The problem is it's going to take a while. As in that 30 cent, the thing's going to be worth 30 cents for a while. What's going to go down? It's going to 28, 25, 21. It's going to decay. And it's probably going to sit there at 10 cents or something for a week. So it can be very hard to capture the profits relatively quickly on a short puts on a narrow put spread like this. Let's pull this up where the strikes are actually, it's in between this inside the expected move, but okay, you got to live dangerously sometimes. So selling the 77 by the 75s generates 65-cent credit. Let's look at the numbers on this. 77% probability of making half of its max profit, which is about $32 versus $135 of maximum risk. Generates 90 cents of theta per day. Those are decent metrics. And if you were bullish on Intel, let's ship it and see if we get 65 cents. Nothing done. Nothing done. Let's go to, what else do we have? Cisco. Let's go look at Coke. KO. I thought I did a trade in here earlier, back in one of these sessions, and I like to give everybody a little variety in looking at this stuff. Earnings are coming out in September. Coca-Cola has been, had a nice little rally, sold off a little bit. 63% IV rank. The volatility is, what's volatility doing in here? That's what I look at. It's come off a little bit. Not much. A little bit. So it's still decent volatility. 22% vol going out here. It's borderline. But let's just take a look at the options and see which way it might be headed. 87.5 right here. So down, let's say $2.50. The 85 puts are at 74, up $2.50 is 90. The 90 calls are at 90. So the skew is pointed to the upside. Let's see what we get. If you're bullish on Coca-Cola, I bet, let's see. No, I'm not getting the credits for this. Let's pull it up here. 84. Let's push this out to a further expiration. 60. Yeah, the markets start widening out here with 35 days. Let's look at the August weekly. Can I get something done in here? If I can get, if I were bullish on Coca-Cola, maybe actually, you know what? What do you think about an iron condor and Coke? What do you think? Let's pull it back to 21 days because the markets are, semi-tight here. So let's go to the 65. Let's sell these by these. What do I get? 58-cent credit for a 2-point iron condor. Not bad. Not great, but not bad. Let's see. And what I look at is keeping the option prices relatively the same. This is a little, let's see if we can get, no, I'm not going to get it. Let's just route this. Let's see if I get filled. Generating $1.56 of theta, small, relatively small capital requirement. Oh, I have the strikes. No, the strikes are here. 91.93, 83.85, 58 cents. Ship it, see what happens. Filled on Coke. Who knew? Let's go to the watch list again. And so one of the things, I've done a lot of cleaning up its expiration today. Right now, I am battling with SpaceX. Let's see where we are here. I am short the 109 puts in here. I'm short the 107, 109 put spread. So this is noodling around. This always happens to me with SpaceX. I'm a perfect counter indicator for SpaceX. So I'm going to be looking to buy this back. I sold that put spread for 60 cents. So I'm right there. I'd have a small loss. And what I'll do here, instead of paying, let's go to SpaceX options, and I'll show you exactly how I'm managing this. Right now, those 109 puts are 75 cents, have 75 cents of intrinsic value. Okay. So if I buy this call here at, let's say 110 or 115, I'm paying about 30 cents No, more than that. I'm paying about 40 cents over. I don't want to do that. So what I'll probably do if SpaceX is reliably below, and what does that mean? Well, it's keeping my fingers crossed. If it's down below 109 and I'm very certain about getting assigned on these short 109 puts, I'll just sell the stock ahead of the assignment on the short puts. Okay, so that's how I'm going to manage this. I'm going to watch this, and if I can, it depends. This thing can move around a lot, but I'm going to make a decision. It's 1:30 now. I typically do this around 2:30 or even 2:45. I just deal with stuff. There's a lot of stuff that I'm working to close. Looking at ARM. I sold a call spread in there, and I'm right on the edge of ARM. I was looking ugly. Now it's down and making up a little bit of money. Short the 247 half, 252 half calls. That's what just keeping your fingers crossed and hanging on to a position will give you. Get killed in this MSFT rally, killed on the Amazon rally, killed on the Apple tank dropping. Let's go to the VIX. Let's see. Am I done in my SPX? Almost certainly not working. Nothing done. Nobody wants to play with old Tom Preston. Okay, fine. Let's go to the VIX. Maybe I'm bullish on the VIX. If I'm thinking that the market's going to sell off at some point, the futures are trading at 1840 or so. But if I sell this put spread, 735 cents, I like it. Ship it. Filled. So this is, I'm sorry if I missed your questions, comments, because I wasn't paying attention. I didn't have the YouTube channel loaded up on my other screen here. Next time I will. Next Monday, I promise. But do you have any questions, comments? It's tp@tastylive.com. None of this is a trade recommendation. If you do this stuff, it's your call. And please, if you do decide to trade this stuff, don't take any more risk than you are comfortable with.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Jim Schultz, and this is From Theory to Practice. Welcome to the show, Tail. Welcome to the broadcast, man. Welcome to the Friday edition of what it is that we are trying to do. Welcome to the Earnings Plays Mean Reversion edition of what it is that we are trying to do. Man, we came home to roost. Like we thought we had him there for a second. Like you guys thought you had a different Dr. J. No. You have the same crusty old stale Dr. J that you've had from the very beginning. So welcome to the show. I'm glad that you are here. If you're watching over on the Tastylive network, I would actually bounce on over to YouTube right now because you can join the conversation and join the discussion and communicate with their brethren who could be communicating with your brethren who are also in the chat. You can celebrate if you're a bull today. Yeah, I think so. You can commiserate if you are a bear, but it will be a good time had by most. Hop into the chat. Questions, comments, stories, jokes, drop them in there. I'll try to get to as many as I can right around the halfway mark of the show. I want to know. The algo wants to know. Ben wants to know. Everybody wants to know what is going on in your neck of the woods. So, Ben, bring us in to the market, man. EMI S&P is up 41. Risk-free instrument, also known as the NASDAQ futures. If you're brand new to trading, this is an extraordinarily high-risk product. You got the boomers up 300. You got the Russell 2000 futures index down 11. The artist formerly known as the Russell 3000. You got bonds down a point. Wait a minute. Bonds are down a point? Hold everything. 108 on ZB? And they're letting this happen? The administration's letting this happen? Ken Griffin is letting this happen? Like the powers that be are letting bonds slide down to 108, almost 107? No, there's no way. This has got to be a bad quote feed or something. Let's look at the chart of bonds. I hadn't seen this all day. Man, look at that. ZB got all the way down to 108.08, so it is on the lows, man. This thing is on the lows. That's pretty crazy stuff. I mean, if you go back, hang on a second. Like I was going to go in a different direction this morning, but we can't do it now. I got to see what's going on. So if I go back to, let me just look. Yeah, I mean, look at that, man. I mean, I'm no technician. That's pretty obvious. But I'm thinking this is not good. Like I'm just thinking out loud, stream of consciousness, right? You got a bonds up at 118, all is well in the world, right? The borrowing cost, I mean, the U.S. debt, the treasury, blah, 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 blah. I mean, it's all made up, but at least it's, at least we can feel good about ourselves with ZB at 118. You got bonds at 114. It's like, okay, we still got some room. You got bonds down around 109. I mean, this was the last time that, DJT and crew kind of jumped and sprung into action, and then boom, you got them right back up. But now, man, you're all the way back down below the previous low. Guys, I am clearly no technician, but I see lower lows. That's what I see. Now, you may see something different. I see lower lows. I have been reliably informed by all the technical traders on the internet. Johnny Pools 47, Johnny Pools 48, Johnny Pools 49 even makes an appearance every once in a while. This is not supposed to be bullish. This is not supposed to be a positive chart pattern at all. So, man, I don't know what's coming next. You don't know what's coming next. But, man, put something in the chat because maybe the algo knows. Maybe the algo can enlighten us as to where ZB is going next. I'm actually surprised that they let it get down to 108. But there's some ZB commentary for you. You got bond, or you got notes, you got oil. Got UB40, got gold, got silver, Hunt Brothers, Shifties. They're all getting smacked around a little bit. What I want to focus on here today is we need to talk about these butterflies. So we need to have a very open and honest conversation about these butterflies because none of them worked. Not a single one. Even the one that looked like it was going to work last night didn't work. Right? Like Amazon basically right on the number. It just shot to the moon and never looked back. So I'm like, okay, that's not a great start, but we might be okay. And then I think Reddit was next. And I'm like, all right, that really surprised me. Because again, right, if you're trying to like settle a debate or you're trying to like find information and you're trying to like make medical decisions, you're going to be not only in the subreddits, you're going to be in the comments to the subreddits. And I'm like, all right, they've got something special over there that really you can't duplicate. But apparently the market felt differently. So Reddit down 37. I was like, all right, that's pretty surprising. But Apple's got to bring us home to roost. Now, I talked about this morning on Inside the Trade, where the thing about butterflies, man, You got to get the direction right, but you also have to get the magnitude right. It's not enough to just get the direction right. You also have to get the magnitude right. And so because of that, you can find yourself in a situation like what we have right here, where you actually get the direction right, but you overshoot your mark. You actually get the direction right, but you actually end up overshooting the mark. And then the next thing you know, you were actually too right, which is not a problem I typically have myself too often, but you actually got the direction of move too correct. And so because of that, you kind of slip outside that butterfly net. You kind of need that guy right in the center, and it just didn't work, man. And so for Apple here, it's kind of sad, right? And so if you have a little banana natty left, I mean, we're already 6 minutes into the show, so you're probably pretty dry. But if you happen to have any left, pour the last little bit onto the pavement, because this butterfly is done. Now, what's interesting about this butterfly is you can see this guy. Let's grab a magenta. Happy Magenta Friday to you guys. This guy is fully in the money. So that means that unless we want to pay assignment fees, which I don't really want to pay, especially when, commissions to close on Tasty are zero, we may have to pay some bid-ask spread differentials and some slippage to get out of the trade. And, that obviously can happen and usually does happen when you get all the way down to expiration. But I still think net, we're going to end up better off not doing assignment on each leg, because each leg is $5 and we have 3 legs to a butterfly. So that's $15. So the question is, can we close out of the trade for less than an extra $15? I think we probably can. And we're going to find out here in the next couple of minutes. Because when you have an in-the-money butterfly, you have to close the whole thing. So you have to close the whole thing on the in-the-money butterfly. Because if you don't, then you're going to expiration with in-the-money options and everything gets automatically exercised. Now, they're going to offset, like you won't have a position on over the weekend or anything come Monday morning, but you just have to understand that if you keep this guy on, everything is going to be assigned. And so, all right, so for Apple, we're going to close that guy down. But I just want to point one thing out really quickly. If we look at like Amazon or Microsoft, or even Reddit is also going to apply. I think we can't really get that guy on the screen, but it's the same thing. Amazon, Microsoft, Reddit, and Visa, actually. So if you look at Amazon, right, this guy is also expiring today. You see there is no mark price. It's out of the money, though, so we can just let it go out to pasture. Microsoft, same thing, expiring today. No mark price. Don't have to worry about it. It's gone. It's over. It's like it never even happened, other than the fact that, you can smell the smoke in the air. I mean, I can feel the flames. Like you guys maybe can smell the smoke. I can still feel the flames from all these trades. So Amazon, Microsoft, you can see those guys are very different from Apple. If I minimize those and I go into Reddit, you can see Reddit's the same thing, right? Butterfly expires today, no mark price because it's fully out of the money, right? You've got the stock at 140. And our lowest strike is 182.5. It ain't coming back. Like it's over. I mean, probabilistically, there is a chance, but there's not really a chance. And so Reddit is over and done with. But then Visa, it's the same thing. This was a trade that we did earlier in the week. I think this may have been a Monday or a Tuesday trade. I'm going to check here in a second. Oh, you actually have a couple mark prices right there, which is interesting. But this guy's over and done with too. This guy's not coming back. And so all those trades, Visa, Reddit, Microsoft, Amazon, those guys can all just float off into the ether. If I look at the chains, though, we did this trade on, was it Monday? 7/28. Hold on. Let's do some backwards calendar math live on the show. No, that's Tuesday, actually, I think. Give or take a couple of days. Yeah, I'm pretty sure that's Tuesday. I'm about a 65 delta on Tuesday there. So still, though, Tuesday going into Friday, not my favorite, but it has its own set of gimmies, right? I mean, it's all gimmies and gotchas. It's always gimmies and gotchas. Like, don't ever let anyone tell you differently. There is no point of optimization. There is no optimal trade. It's all gimmies and gotchas. Now, there may be something that might be optimal for you, but I don't know that we can ever get to a point of universal optimality. Like, I can't say like a 20 delta short put is the optimal strike put. It's impossible to say because we are all too unique. Right? You have your own risk tolerance. You have your own goals. You have your own, schedule. You have your own whatever. Like you fill in the blank, account size, skill set. Like all these things need to come into play. And so it's impossible or nearly impossible to say writ large blanket statement, your 28 delta put. That's your optimal put. I'm never comfortable saying that because it's gimmies and gotchas, man. It's gimmies and gotchas. Now, you may look at a certain put or a strike or a strategy or whatever, and you like the gimmies. more than the gotchas you have to absorb, right? That's kind of the destination we're all trying to get to, right? You analyze the gimmies and the gotchas, and you're like, all right, I like these gimmies, and I'm okay with these gotchas. I know what I'm signing up for. I'm going to go for it. Or you look at another trade and you're like, man, I don't like those gotchas. And I don't like those gotchas because of X, Y, and Z, or whatever. The gimmies are not, they're not enough to make up for the gotchas. That's the type of analysis that I like to work through, and that, hopefully helps you guys out a little bit too, because I really do think it's gimmies and gotchas, man. Always and forever. So Amazon, Microsoft, Reddit, Visa, all going to be gone. But let's go back to Apple, because we do need to close this guy. And I see you guys in the chat. Man, I see you guys. Look at Jem is in the house. Griffin Jones. Ryan is in the house. iPod Touch is in the house. Man, what is going on? It's been a minute there, iPod Touch. Man, thank you so much for popping in. Guys, iPod Touch is here. I mean, that means iPod, tell us, man, when is the next event horizon? Because we thought we had him there a couple days ago. A little 700, 800, 900 points in the NASDAQ to the downside. I mean, that'll wake up the old sinuses. Like, that'll clear the old sinuses pretty quickly. But let us know what's coming on down the chutes next. I mean, you're the one that's always told me we don't crash from all-time highs. Well, we're not at all-time highs anymore. I mean, NASDAQ, we're 10% off of all-time highs, 11% off of all-time highs. Even the S&Ps are off by 5%, 4%, whatever. So let us know, man, because we need to know. We are just the common man, right? Us peasants and plebes, we need help. We need lots and lots of help. And so for Apple, though, I'm going to try to close it all together, and let's just see what happens. It should be about zero. I may have to pay. I'm not going to get a credit for closing this. That's an illusion. Like, here, I'll try to get it, and I'll show you guys it's not going to happen. There's no way they're going to give me not even 2 cents. Here, I'll try 2 cents. I'll lock it down at 2 cents. I don't think this is going to happen. I don't think it's impossible, because there is still an hour 15 left. But Apple's so far out of the money. Well, actually, hold on a second. I don't know that I want to stake my career to this. It's only 5 points out of the money. That's only a 1.5% move. I mean, Apple could rally 5 points going into the close. So we actually might get a couple cents for this. It's not impossible. I think we're going to have to close this for like a 1 penny debit, actually. But we might get a couple cents. Yeah, see, we didn't get filled at 2 cents. And notice what's happening right now. Like, the mark price is actually, it leads you to believe that it's more than that, right? It leads you to believe, whoever it is, it's leading us to believe that we should be able to get more than this. We should be able to get more than 2 cents or 5 cents or whatever. Well, it ain't happening. Like, again, in the textbook, maybe. In the ivory tower, maybe. But in theory, it ain't happening. In theory, it is a no-go. So we need to go from theory to practice and kind of see what's what. So let's see here. 2 cents. See, now it's 17 cents. It's all made up, man. All of it. Every last little bit. So, all right. So let's try a 1 penny debit. I think we'll get filled for a 1 penny debit. Oh no, they're going to do that to me. They kicked it back. Oh man, they kicked it back to me. Oh man, they're going to make me, oh no, they're going to make me. Now I got to do crazy stuff to get out of this trade. Let's try this again. Hold on. Did it get canceled right away? Yeah, it did, right? We got filled. Okay. I was like, yeah, that was weird. So we got filled for 1 penny debit. I'm not surprised by that. That's essentially what I thought would happen. So we ended up paying 1 extra penny off of max loss. So again, just to give you guys like the full scorecard now that it's over, that's a much better scenario than $15 in assignment fees, in my opinion, right? $15 would be 15 cents. And so we paid an extra 1 cent, whereas you go in for assignment fees, it'd be an extra 15 cents. And so net, I think we're 14 cents ahead. And so Apple is over and done with. We talked about the other butterflies. Let's talk about MNQ here for a minute. So MNQ, man, once again, the DNS, once again, right? We, on this show, we had a little situational awareness. Now, others in the financial space, sometimes they don't have as much situational awareness. Even if their name might imply they should have all the situational awareness. We actually had a wee little bit of situational awareness, and we were able to DNS here on the MNQ position. And as a result, we are in a decent spot. And that's a hard thing to say live on the show over and over again, situational awareness. But we did exercise a little bit, and as a result, our MNQ position, I mean, I didn't think we were going to Bonefish tonight, but apparently we are. Well, actually, let me rephrase. I knew we were going to Bonefish tonight. Autumn didn't think we were going to Bonefish tonight, but apparently, I mean, the Bang Bang is calling my name, man. Like, it is calling out to me. And so Bonefish is on tap, MNQ, the DNS, and this is how we do it. And then the rest of the trades, I mean, there isn't really anything else that requires our attention, I don't think. Now, it may look like there should be some things that require our attention. I mean, you may be looking on down the chutes, and if you're brand new to the show, you're like, wait a minute, Jim, what are you doing? That Amazon trade, that thing is not looking too good. Yeah, don't worry about Amazon. You might be going on down the chutes. You're like, hey, what about Microsoft? Yeah, don't worry about Microsoft. We already talked about Microsoft. You might be going on down the chutes like, Jim, what about Netflix? Yeah, don't worry about Netflix. Doesn't matter. Or you might be thinking, what about Reddit? What about Snapchat? Well, we should definitely be worried about Snapchat because like Penelope's college fund, it's hitched to Snapchat. Amelia's college fund, it's also hitched to Snapchat. Eli doesn't have a college fund because I kind of think he's going to run just an all cash business. I kind of have a feeling he's going to be doing some things that he's not really going to be on the grid. I think I have a feeling we're going to hear about him at some point in the future in ways that a parent maybe doesn't want to hear about their child, but he's going to do some great, great things. But it's going to be more or less under the radar. And so I'm not so worried about him necessarily. He's going to learn his smarts on the streets. And then SpaceX, SpaceX, you might be thinking, Jim, what about SpaceX? Don't worry about SpaceX. It's fine. Again, P&L opens, it doesn't mean anything, right? And you might be thinking, Jim, how could it not mean anything? It shows you where you're at over the life of the trade. I mean, sort of. If it's a trade you have not adjusted, then yes, it does show you where you are over the life of the position. But sometimes when you make adjustments and such, it doesn't always show you where you are over the life of the position. Now, when you group by order chains like we've done up here, or excuse me, when you group by the Allison chains like we've done up here, then it does a much better job. But even still, even at that, we've talked about this a million times before, but we have so many new people finding the show and finding the network. Welcome aboard. I'm glad that you're here. I really hope that you stick around. The P&L Open doesn't really mean anything because as an active winner manager, I don't really love the way that sounds, but it's already out there. As an active winner manager, as a premium seller, right, I am not going to necessarily hang on to my winners. Now, I'm not super crazy, right? Like, I'm not picking up nickels in front of the steamroller. Like, sometimes they're dimes, sometimes they're quarters. Like, we mix it up a little bit, but we're not going to hold on to the winning trades super long. And so a lot of times when the trades are working, we take them off. When the trades are working, like we're done with those trades and we move on, it's going to be the losing trades that we tend to, kind of keep in the position or keep in the portfolio, I should say, for at least some length of time. Now, you may not want to say, hey, put it in the ground with me. I mean, that's kind of my default setting, but it may not be yours, and that's totally fine. But when it comes to just thinking about the dynamic between the winners and the losers, it's going to make sense that the P&L Opens are going to be significantly larger. And not to mention, I love the P&L Open bros, man. Like, I love everybody. And so you guys are welcome to the show, and I just appreciate the eyeballs and the heartbeats. And so, all right, let's, I think, this is it. I don't really want to do any new trades because the portfolio is already kind of bursting at the seams a little bit here. Come time Monday, Amazon will float off into the ether. Apple is already obviously gone. Microsoft will float off into the ether. Reddit will float off into the ether. Visa will float off into the ether. And so we're going to be in a decent spot come Monday to kind of deploy some new positions and do and use some more capital. TLT, was this a bullish trade or a bearish? Yeah, it's a bullish trade. Interesting. Okay. So you know what I'm going to do, actually? I am going to do one thing. I'm glad I pulled up TLT because I was just kind of looking at the price differential, and I was like, all right, is there something here that requires my attention? And I think there might be. So if you look at the short option on TLT, you can see that we sold this guy for 31 cents. It's currently marking for 5 cents. So just the short option of the diagonal spread, it's essentially done all the way I've asked it to do. Like, there's nothing more for the short option to do at this point. We can make another 5 cents on that portion of the trade. That's it. So again, you have to make up your own mind. You have to make up your own decision. I cannot tell you what to do. I would never even begin to try to tell you what to do. When I look at this, there's not that much more to make here. So I'm like, man, let's just close this thing down. Let's close this thing down. Let's be done with it. And let's go ahead and move on. Now, what I do beyond that point, maybe we sell premium again. I think I'm just going to leave the long call for just a minute because we have so much time in that September cycle. Like if I go to the September cycle with 49 days to go, you can see there's so much time left. And so right now, I mean, I may want to get premium on against this TLT long call pretty quickly, like early next week. But for right now, I'm just going to close out of the short call And then I want to see what you guys are doing, man. I want to see what you guys are doing in the chat. And we'll see what's what. Okay, so we got filled at 6 cents, actually. We paid a little extra for that guy just to get out on the offer. So now we have a long call in TLT, and it's just out there flapping in the wind, man. No premium against it to protect it from anything. And yeah, so let's go ahead. Let's see where you guys are at. Man, I appreciate you guys. Look at you guys in the house. Man, you guys are doing it, putting in work. And so, yes. Brandon, 1419. Dang, Dr. J. The number of positions is running hot. What is this, the Liz and Denny show? Yeah, RIP, man. RIP. Pour, if you got some banana natty, you should be on round 2, possibly round 3 by now, right? Pour a little bit out for our fallen comrades. Please do. I mean, I would. If I wasn't at work right now, I 100% would. But you guys don't know what's in here, right? You think it's water. It could be water. I'll leave that to your imagination. And so let me see if I can surprise and delight somebody. Let's see. Oh, here we go. Away from the numbers, my man Neil. What's going on there, Neil? Appreciate you, my friend. Hey, Dr. J. I got beaten with a Roblox 45 short put after a 30% drop. But 21 days to go, there's no liquidity, no roll or exit assignment. No liquidity, no roll or exit assignment. Or would you manage it differently? Interested in your thoughts. Okay, well, let me just, I'm not exactly sure. It looks like a couple things ran together for you there, which, I mean, hey, I've been there. I mean, I'm there live on the show pretty regularly, so I'm right there with you. You've got a 45 put. Yeah, so this guy's 10 points in the money now. Yeah, so, you got 21 days to go. Okay, so a couple of thoughts. So number one, if you just roll out the 45 short put from August to September, you're probably going to pick up not very much, maybe a little bit. Yeah, 60 cent credit, which may not feel like much, and it really isn't that much in the absolute sense of it, but it's only a $35 stock now, $40 stock. So it's also not totally insignificant. So right now it all comes down to, and this is, what I always like to figure out before I get into a short put. I want to know what type of trade is this? Because again, as we've said on the show a million times, one of the most redemptive qualities of a short put is the simple fact that if it comes down to it, you just take the shares. Like if it comes down to it, I'm just going to take the shares, I'm going to take the stock, and I'm going to be done with it. And by done with it, I mean it's now one with the family. Like it is part of the family. It is one with me. And so you need to decide, are you going to do that? Or is this more of like, hey, I'm taking my shot. If I miss, I miss. And I just close it, at whatever kind of makes sense. Whether that's 3x of credit received, 4x of credit received, 2x of credit received, or maybe it's gone beyond that point now. You're like, hey, I'm kind of done with this trade now. I just want to move on. That's totally fine. But you have to decide which pathway forward through the forest do you want to go down. Almost always with indexes, I'm going to choose, you can put it in the ground with me. With an individual stock, I still probably typically default to that because you still have positive drift. You still have, the upward trajectory of the, of the marketplace over time. You've got growth, you've got innovation, you've got the efficiencies, like it's all there. But individual stocks are a little bit trickier because you're going to have a lot more losers, right? That, the stocks that don't come back, and not to put all my chickens in the basket that the market will always come back. But if history is any guide, it's not a terrible bet to make. Right now, it could get super bumpy, and if the perma bear propagandists are right, like it's going to be by the market close today, like I got it, like 100%. But individual stocks is a little bit different because there's a lot more losers. So at this point, Neil, I think the number one thing that you need to figure out is, how am I categorizing this trade in my mind? Like, how am I thinking about this trade in my mind? And then that will help you kind of decide what to do, moving forward. I don't really think you can sell too much premium against it right now because it'll be too far in the hole. Like you'll be way underneath your basis. So I would either, whichever way you want to do it, take the shares, just leave the current position, let it get assigned, and just take the shares. That's fine. That gives you static upside. That's totally fine. Or roll the put out to September right now and pick up your 60 cent credit. And then you basically have what's a long stock anyway, but you got a little extra extrinsic value to kind of, pad around the edges. It's really just those two options if you want to hold it. And if you want to close it, you close it. That's what I would do. Hopefully that helps a little bit. But I appreciate you. Let's see. If I go ahead and let's go to the beginning. We go to the beginning now? I think we do. Yeah, let's do it. All right, all the way back to the beginning. Grumpy Mike is here. What is up there, Grumpy Mike? I appreciate you, my friend. I think there was a TP comment holdover for the TP Amuse Bouche to kick off my show, which is no longer an Amuse Bouche. I mean, he might be the main dish and the dessert. And I'm not sure where I am. I guess I'm like the coffee you sometimes have afterwards. Maybe the Cuban coffee. We learned about that recently. Thank you, Ben, for bringing that to my attention. Ash Finn is in the house. What is going on there, Ash Finn? Ordenu is here. What is up, my friend? I hope you have a great weekend. Yeah, we got tomorrow morning. Tomorrow morning, my kids, well, my two girls, Penelope and Amelia, are starring in a Robin Hood play. And so it's not a real big deal. Like, it's just in like one of our friends' backyards because they want to be outside so they can do a bunch of sword fighting and a bunch of whatever. Not that you can't do that inside. I mean, I think you probably could. But yeah, they're starring in Robin Hood. And I want to say Penelope is Maid Marian. And Amelia might be like, I think Amelia is like young Maid Marian. And so the way they set it up is like, I think Penelope's Maid Marian. If that's from Robin Hood, like help me out here. Like I could be mixing up my childhood fairy tales or whatever you call those. And I think Amelia is young Maid Marian. So that's an interesting little setup. And then Eli is like a stagehand or something. But yeah, that's tomorrow morning. That's going to be a lot of fun. So I'm excited for that. There's nothing like standing outside in the backyard in August in St. Petersburg, Florida to enjoy not only this play, but any and all mosquitoes that you are interested in. They will all be there. Every single one will be present. Ashvin, Dr. Jim, let's go. What's going on? I already got to that. Thank you, Ash, and thank you, Ordenu. Samuel, Doc, your homeboy Jeff B pumped his stock again, of course. I guess those pharmaceutical investments are finally paying off. I guess they are. Samuel goes on to say, we all know you're a Microsoft Windows guy. I am. But let's be honest, you've got an iPhone like every respectable boomer. And iPads for the kids. Deep down, you've been Team Apple all along. Well, maybe so, because once they get you in the ecosystem, you can't escape. There is no escape. It's like being in a casino, right? Like you don't know how to get out, and they've done that on purpose. But I will take issue with one thing you've said, right? You've got an iPhone like every respectable boomer. See, that's where you're wrong. Because every respectable boomer that I know, they still got Blackberries. Like they're still doing Blackberries, man. And they're holding them strong, like 100%. And so I think you missed the mark a little bit, but I am kind of team crossover between Windows and Apple. Let's see. Point B, Doc really said, let me turn my B- humor into F for the plot today. We love the chaos, Dr. J, but let's negotiate our way back to B- status tomorrow. I will try, but tomorrow's a Saturday, so we get an off day. We'll shoot for B- on Monday, but I wouldn't necessarily hold your breath. Wolf is in the house, Doc. Your Red Sox going to make any big moves today? Have a great weekend. I don't know, man. You know, we traded Connolly early, and then we got Mead, and then he broke his wrist like literally that night. I mean, it's insane. It's crazy. And so I don't know what they're going to do now, and I'm really interested to see. I mean, we could use the shortstop because Trevor Story's hurt, and, you got Jim Schultz, and you got, Tony Batista playing shortstop, and so that's not amazing. And so from that standpoint, we could definitely use a little bit of help. But I kind of say we just run it with the squad we got. Like, I mean, I wasn't expecting very much, and then they rattle off 15 in a row, and I'm like, wow, now we're 3.5 back in the Yankees for second place in the division. Like, that's just insane. And so I kind of say we just run it with who we got. Like, I don't really want to see any of the major pieces go away. Like, everybody wants to trade Jaron Duran, and I understand. I mean, he's had some troubles and whatnot, but I don't know that there's anybody in the whole entire league that plays harder than he does. Like, he literally gives it everything that he's got every single day. And so because of that, I'm like, you got to keep him, man. Like, yeah, you got to deal with some stuff, around the edges, but I mean, that's the case with everybody. And so, but we'll see there, Wolf. We will see. SC Golfer in the house, in for the algo. Hope everyone has a great weekend. Thank you, Doc, man. Thank you, my friend. Thank you so much for being here. Ryan is in the house. What is going on? BBB Fine is here. Hey, Dr. Jim, the earnings gods are kicking our behind. This is a family show. And yes, they are, my friend. Yes, they are. But again, with the butterflies, you take your shot. If it doesn't work, you move on, right? You take your shot. If it doesn't work, then you just look for something else. And don't forget, like, the earnings trades are fun, and it's fun, and it might even be a little bit profitable in the end. It might not be profitable in the end. I mean, whatever. But it should never be the foundation. It should never be the core foundation of what you're trying to accomplish. Not in my opinion, at least. Again, it's fun around the edges. It's whatever. And, and we all have great earnings trades and poor earnings trades and whatever. But it should never be the bread and butter, right? It should never be the peanut butter and oatmeal. It should certainly not be the tuna fish and applesauce of what we are trying to accomplish. Griffin Jones in the house. Crowd watching my short put vertical turn green. Do I not have the same trade on? I think I should, right? Yeah, look at this, Griffin Jones. We have the same trade, I think. Similar trade, maybe. I mean, obviously, you've got your trade that you've done your analysis on. I've got my trade that I've done my analysis on. The fact that they happen to coincide is pure happenstance. But CrowdStrike here being down a few cents. Yeah, I mean, I'm pretty happy that we're green now, and that is good. Sam L says, Doc, single stock futures for the micro futures. This added an X to the big dogs, so X Apple, X Meta, etc. For the mini futures, they added an S. S Amazon, S Nvidia. Looks like the ticker department ran out of creativity. Yeah, maybe so. Maybe they only have so much bandwidth. Like they've already got to kind of borrow the base from the regular ticker. I haven't even looked at the single stock futures. I don't think you can just do, maybe it's a forward slash. Like I can't do X Apple, right? Yeah, I mean, that doesn't do anything. I mean, there's nothing. And if I do like X Meta, nothing. And if I do like forward slash X Meta, nothing. Right. So how do I find these quotes for these single stock futures? Because obviously, I mean, I want to trade them just like everybody else. But before I even trade them, I'm actually very curious to see what the markets are like, because I kind of think that the markets could be really, really bad in there, like really bad in there. And so it's going to be very, very, very interesting. And so, but let's see. Where we at? P.E. Leonard is in the house. Word is up there. Here's something you can answer, Doc. Covered calls, pros and cons of using weeklies over monthlies. Great question. So if you are dealing with like the creme de la creme of liquidity, I don't really think it matters too much. I mean, just understand that with weeklies, you're going to have to manage it a lot more regularly. Like you're going to have to be kind of on the spot a lot more regularly with the trade in terms of management and, buying back the short call or rolling out the short call or whatever. Whereas when you do monthlies, it's a lot more of a laissez-faire kind of hands-off type thing. And so that's obviously kind of nice when it comes to if you really want this to be more hands-off. So that would be the main thing that I would say. When it comes to, the liquidity and you're not dealing with the creme de la creme and the grand poobahs of liquidity, I'm going to say you're going to want to do monthlies a lot more than weeklies because the liquidity is going to matter. The bid-ask spread differentials are going to be much, much tighter. And so, yeah, I would opt for monthlies when in doubt, go to the monthly. But I think with the super strong liquidity, I don't know that it's going to matter. I don't know it's going to matter too much. So let's see where are we at. Point B, my Palantir Strangle is basically a straddle now, and earnings hit next week. Roll now to reset the strikes and collect credit before the IV ramps up, or hold through and let it ride the move. What's your call? Honestly, man, I don't like either, to be honest with you. If you've got a trade, if you have an undefined risk trade on that, has been giving you fits and it's already a loser and you've already made your adjustments, you've taken your shots, whatever, and it's just beating you to this point, taking that trade into earnings, in my opinion, is asking for a disaster. Like, I really don't like to do that because I'm like, all right, man, this could be a disaster. Where right now it's manageable. It stings, don't get me wrong, but it's manageable. Well, yeah, if you get the perfect move out of earnings, you're going to look like a genius and you're going to be like, yeah, why do they not have my statue erected in downtown Manhattan? It's a travesty. It is a travesty to trade it all across the world. That's true. But what if you're wrong? If you're wrong, now all of a sudden they should take your mouse away. Now all of a sudden they should take your trackpad away. Right. And you can't even navigate on the screen anymore. And so I don't really love that trade. I feel like there are too many eggs in one basket personally. Sergio's in the house. What's going on there, Sergio? Appreciate you, my friend. Stock price is 122. Break even is 115, says Point B. Yeah, I don't like holding it in earnings. I don't, not me personally. But if you want to let it ride, then let it ride. As long, again, I say it every day. I say it multiple times per show. As long as you know what you're signing up for, it's your call. Right? You are the judge. You are the jury. You are the executioner. P.E. Leonard, when doing a cover call, do you always let it expire? Or do you buy it back for a buck or two and put on another one for another week or month? Yeah, great question. And so this is another one, right? If I'm doing a cover call and it's like an investment style cover call, so this is something I intend on holding for, a longer amount of time, then that's going to be something where I'm not going to manage at 21 days to go. I'm not going to pull it off at 50% of max profit. I'm probably going to be buying back the short call when it's basically run pretty dry in terms of the extrinsic value. So once the extrinsic value gets down to, like if I sell a call for $2, let's say, and the extrinsic value drops to 30, 40 cents, I don't know, man. There's not much reason to hold that anymore, in my opinion. And so typically, if I had to give you like it's not even like a hard rule. I'll give you like a soft rule. Once it clears like 75%, I'm very, very interested in taking that guy off now. And you can hold it for longer, of course. I mean, some people like to let it go all the way and they don't have to buy it back. There's no commissions and whatever. And that's fine. But there's going to be a lot of times when, I mean, markets move and things change, man. So it's like, the stock's moving around, right? It's moving around. You're picking up your decay, whatever. It dips. You get a nice opportunity where you're like, man, I can take this off for 77% of max profit. Maybe I should do that. Maybe you should. Right? I mean, you take that off, now you just have the long naked stock, which is what you would have had anyway if this is kind of an investment style covered call. And you get to run that guy clean, unfiltered delta to the upside. I kind of like that trade personally. I don't really like trying to get every last penny out of a covered call, out of the short call portion of a covered call. It actually irks me when people refer to, so here's one of my pet peeves. I don't have very many, but I have a couple. It really irks me when people, when they refer to a covered call, they're only talking about the short call. That really, really bothers me, because the covered call is the entire strategy. The covered call is the shares too. Like, you can't say, I'm going to take out this covered call and then just buy back the short call. It's like, no, you still have the shares. That's part of the deal too. Now, obviously I understand what they mean, but in this world that we live in, especially, I guess, maybe being an educator, I'm a bit of a stickler for like terminology, and I'm a bit of a stickler for like, correctly labeling certain things. Not that I blame myself, I most certainly do not. But it's in the day with, man, you guys remember engineering the trade? Man, pour out a little for engineering the trade, man. Like, yeah, that was the most dangerous 45 minutes of the day. I mean, I've got the right song for that line, but yeah, man, those are some good times. Griffin Jones, Doc, question, NQ riff for 90 seconds on the plus or minus, which I believe you mean to be the gimmies and the gotchas of holding a long contract and rolling it. Okay, so I think what you mean is you just want to have perpetual upside exposure, right? I think that's what you mean. I don't think there's necessarily a problem with that, because a lot of times what people will do, whether it's, you said NQ, right? So NQ, ES, whatever, right? People want perpetual upside exposure. And there's a number of ways that you could achieve that. You can buy shares, you could sell puts, you can buy futures. They're all going to effectively accomplish the same end goal in a different way, of course, but they're going to give you that upside exposure. Well, some traders are going to want to keep that on all the time. And so some traders like to kind of roll that contract, and that becomes kind of their core position. I have no problem with that whatsoever. It's not usually what I do myself. I like to be a bit more fluid with my core positions, but there are certainly things that I might hold for weeks or months on end as I wait for them to come back, of course. But some traders like to hold things for many, many months and many, many quarters. And so I see no issue at all with just rolling along indefinitely. And maybe you're playing it as clean delta to the upside. Maybe that's like the long delta pillar of your portfolio. Maybe you're selling premium against it. Obviously, there's a number of things that you could do, which I know that you know there, Griffin. But yeah, I mean, I have no issue with that whatsoever. There aren't really too many cons other than the fact that you have to roll it every quarter. Like, the financial futures have quarterly expirations. So, it's not as simple as like just holding shares. Like, if I wanted to have NASDAQ exposure, I could buy QQQ shares, right? And now I don't have to think about it. Like, I can quite literally stuff them in the stock drawer and they'll still be there. They're not going to expire. Like, it's not like a December, March, June, September type of deal. Like, they're still going to be there. They're just like a going concern for all the time that the company remains a going concern, or the index remains a group and collection of going concerns. And so, yeah, I really have no problem with that whatsoever. Weiss is in the house. What is going on? Whiplash, and will continue until morale improves. I think you're right. Great movie, by the way, is indeed Whiplash. If you haven't seen Whiplash with, the State Farm, or they're not State Farm, the farmer's insurance guy, whatever his name is, right? I mean, he's a great actor, man. Like, he is like, is he underrated? I think he might be criminally underrated. Like, he is phenomenal. And then obviously Miles Teller was in there too, and he's always great. But the guy's name is it's JK something, right? JK something. My boy J.K. something. I don't think his last name is something, but that's what we're going to go with. Ben, J.K. Simmons. Yes, thank you. Okay, so I was pretty close. Yeah, J.K. Simmons. And so very, very solid, like criminally underrated in my opinion. So if you haven't seen Whiplash, then go check it out this weekend, man. It's really, really good. It's kind of intense. Like, you think it's a movie about drums? Yeah, something Simmons something. Yeah, something Simmons same thing. Yeah, that's funny. I was actually closer than I realized. Yeah, that's true. That's really, really funny. It's about a lot more than drums. I'll say that. It's a good movie. And so Ranch is in the house. Ashfin is in the house for the algo. Man, I appreciate that. Vicky Zags, how about that crapple? That might be an inside deal that I'm on the outside of. Ryan LP is here. What is up? DMZ is here. What is up? Ashfin, the only correct answer is tuna and applesauce. That's correct. It's never been more correct. Look at Jared Kramer in the house. Happy Friday and end of month, Dr. J. I got to go in a second. SPX is currently a whole 7 points. I got you, Ben. It's currently a whole 7 points higher than we opened in July. Green month indeed. Bring us that B- humor and some ideas for the BFUs for the weekend. No, it's BEUs for the weekend. And I got nothing, man. I'm tapped out of ideas. Hopefully I can muster some more up over the weekend, but I'm totally out right now. I gave you guys all that I have to offer. But man, if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up.
The open and a line this way, and it seems dull, boring, nothing happened. We're stuck. and we've been stuck for months in the ES range. And we're stuck in this war. Is it on? Is it off? Changes daily. And this week has also been basically both sides of the picture, because we had this glorious plunge Monday and Tuesday and Wednesday. And Wednesday it stopped. Wednesday at the close, that was it. And we had an enormous bounce yesterday and a total roller coaster today. It's been really exasperating because we had this explosive move after the open, which for no particular reason completely collapsed. And then we recovered half of that, and now we're just kind of hanging out. So I recounted this morning about how I got stopped out of all kinds of good stuff and had to re-enter them at worse prices. And I got to tell you, after the shell shock of yesterday and today, I'm going into this weekend light. I'd rather just kind of relax this weekend and not wring my hands about, another taco or some craziness on Monday. And the market gods probably hear me and will crunch the market on Monday based on this. But I'm sorry, market gods, that's what I'm going to do. I'm ending this week on the very light side. But having said that, doesn't mean I'm not going to show charts to you. So let's do that, and let's kind of catch up with some of this mayhem now that the earnings season is behind us, and we're just going to get the stragglers at this point. Here's the ES. It cannot make up its mind. We have been in this for all of May, all of June, and all of July now, and it ain't going nowhere. It's just been grinding around with no rhyme or reason. And of course, within each of those bars is his own little micro drama. But net, the net change from May 14 to right now, zilch. Haven't budged. IWM is kind of the same story, although ever so gently. You can just kind of see this slow deterioration, a little bit lower lows, a little bit lower highs over the course of time. This trend line, it tried to find support day after day, but the damage was done. It sort of slipped past that. So everything's just kind of in drift mode right now. And we're in the final 42 minutes of the trading month at this point, and who knows what weirdness is going to happen because it's the end of the month. But it's been just today alone has been a little bit of a peculiar day. Now, as far as the market, the one that's been the most dynamic, the one sector that's been everyone's attention is semiconductors / memory. Many of you have probably read the tale of, if I get the name right, Leopold Aschenbrenner. I think that's close. A young man, early 20s, from OpenAI, who started a fund and had, in very short order, billions and billions of dollars to manage. And he was on fire. And I think his returns through the first half of the year were like 435%. Not bad for a 24-year-old. And apparently it's all fallen to pieces. I'm not saying the guy's roaming the streets broke, but I believe that his fund on the whole has been dispatched and sold off because the reason for those sensational returns for the first half of the year were because of the AI trade, principally in April, May, and June. Because here we see EWY, South Korea, which is an approximation of the kinds of stuff he was trading. It was just setting the world on fire. And without any announcement, without any news release, it peaked on June 18. And since then, as you can see, you can just draw a line straight down, has been just falling to pieces. Now, from time to time, we do get counter-trend rallies here and here and here. And of course, what's happened over the past 72 hours or so. But the downtrend is clear, and it's not the cleanest chart in the universe, but it's not bad. We've got pretty decent resistance right along this level. So we'll keep an eye on that. The other interesting thing is that we basically opened strong and are trading rather weak now. You can see this also reflected domestically, SMH, the semiconductor index. So we have here is the uptrend. It first broke here, and this line changed from support to resistance, but that doesn't necessarily mean it'll go down. It respected it as resistance all the way to lifetime highs. And then this was the end of it. June 22. So just a little bit after South Korea peaked. And down we go. And this pattern's a little more clear. If I give EWY a grade of like B-, this is more of a B+ in terms of clarity. And I would say that today's high isn't a bad approximation of resistance here. There's the top on that. And, you know, it's funny because I mentioned this morning that I did not nail the entry of this position at all. I started just all around here trying to short, and on the whole, it just kept failing. And finally, after a couple of weeks of trying, it stopped failing. I stopped getting stopped out because the market moved lower. And so I was short SMH by way of puts, and also short a bunch of individual items, and rode this. And I began to cover here on Tuesday, and I sold my SMH puts. And I was really upset with myself the next day because then it fell hard. But you know what? Let's be fair. I missed the bottom by, if we consider trading days, I missed the bottom by a few hours. I'm not going to beat myself up that much. It's true, there was a lot of gains to be had with those extra few hours, but I missed the bottom by a few hours. And I was really concerned that, you know, I was mad enough on Wednesday. It's like, good Lord, how long is this thing, how far is it going to fall now? Not so mad anymore. I've looked, and if I just put my fist on my hips and kept it through this day, it would have been a pretty ugly loss by now. So wasn't bad to get out Tuesday. Lighten up Tuesday, lighten up Wednesday. Yesterday was no fun, even with the positions that I still had left. And the day's been no fun either because it's been a real whipsaw. As I said, got stopped out of some stuff and re-entered some of those items at worse prices as we went into this like inexplicable free fall. And that only took about 15 minutes from top to bottom. The whole range of the day was just crunched in that little bit of time. A more dramatic way to see all this is KORU. And in this instance, very well formed top. Down it goes. You've probably read that South Korea had their biggest rally, I think, ever. On the Kospi, and like 16-17% over in one day. But looking at this, it's not really sticking. So all in all, just to reemphasize, going to the weekend very light, although the positions I am still in tend to be in the same zone. SMH and a handful of high-tech stuff. So storage has been another very similarly behaving sector that's been breaking down. I entered a tiny position in SanDisk this morning just because I like the chart so much, but this is SDNK SanDisk, exceptionally well-formed pattern here. And once again, yes, it was very, very low on Wednesday, but the ideal time to short any of this stuff, which I missed because things are moving so fast, would have been the open this morning, or any of the first 100 seconds or so of this morning. It peaked really, really quickly. So it looks like a great setup again. WDC, this one not as much. This one is pushed into its pattern. It does not have the clarity that we saw with SanDisk. And same with STX, not as good. So as far as storage goes, SanDisk looks like the real winner there on the short side. And even though earnings season is kaput at this point, now that Apple's behind us, the next big one is weeks away. The 26th of August, Wednesday afternoon, NVIDIA will announce. There's a billion things that happen between now and then, but just so as you know, that's the next meaningful earnings event. I do have puts on a few items here, and I peaked at like 45 positions. I've trimmed that way down to 28. Yeah, 28. And among those is a portfolio of just puts, and there's 7 of those. Here's a few of them, just so as you know what I got going there. And these are all, as I keep saying, these are long dated. These are January's, and in the case of FXI, March of next year. So here's Caterpillar, looking real good. And I mentioned this in the morning program that as exasperated as I was by this morning's activity, the one place I wasn't was my options portfolio, just because nothing got stopped out because I don't put stops on that one. So that dealt with all the turmoil just fine because it was just passive. But there's Caterpillar, which reports, I think, next week sometime, I'm pretty sure. So that's shaping up nicely. Carvana, which already reported on Wednesday evening, and this looks just fine. Looks real good on the diamond pattern there. FXI, these are the March ones, giving him tons of time. I will get out if we push past this line level because this has been very, very strong, and this is my line in the sand. I will not tolerate it past that level. But if we look at the whole history of this, my view on FXI, that is to say China, the China ETF, is that this is a pretty interesting medium-term opportunity. You can see with this giant green bar here how positive this month has been for FXI. And I am defying that by getting all these puts. So that's my March. GE, this is doing okay. It's not a beautiful pattern, but it's doing okay. Cubes, we've got a overhang, if you will, of supply above that price bar. And some I've got Cubes puts on that. Shopify, SHOP. This one, weirdly, in spite of the huge rally yesterday and the continuation today, has had two nice red bars. So that one's going pretty good. I like how that's shaping up. One item I've been really ham-handed on, very frustrated with myself, so I've just stopped messing with it, is Bitcoin. On the whole, Bitcoin trade has been going slowly but properly. But I just can't get it right these days, it seems. Here's IBIT, down almost 3% today. There's nothing broken about the chart from a bearish perspective. I just keep blowing it in terms of the short-term moves. I do still have MSTR short, and that's doing well. But yeah, on the whole, I've just kind of thrown my hands up for the time being. BITI, the inverse Bitcoin fund, up almost 3%. Again, nothing wrong with these. They're doing great. I just... my own personal performance with these has been poor over the past couple of weeks. I do still have MSTR, as I said, and it's down about 3.5%. And at least I got some participation in that. I'd also mention MARA, M-A-R-A, is another interesting looking chart for any of you who are bearish on crypto. There's just really rough idea of the right triangle on that one. SpaceX reports Tuesday afternoon. We're at lifetime lows again. The push above the trend line has clearly not meant a thing. We could easily be at double digits on Monday. And it's, I'll say that this is very rare. I want this to go up. I believe it will go down. You've got the risk of the earnings report. You've got the unlock coming in about a week or so. And clearly the performance has just stunk up the room during its lifetime. So yeah, it's probably just going to keep sinking. But just real quick, last items. Here's the NQ. Today's high, I think, is a pretty reasonable line in the sand for resistance. Frustrating as yesterday and today have been, this is a good looking chart. And I imagine I will be delighted and furious with myself on Monday if things flop, because I am, as I said, quite light going in. And the one item that not many folks are talking about, but I think demands attention, is bonds keep falling. Interest rates keep rising. No matter what Mr. Warsh is doing, they just keep rising. And we have been in a 6.5-year bear market on bonds. It's not stopping, and I don't think it's going to stop. So, hope you've had a decent week. Have a good weekend, and I'll see you back here on Monday. Goodbye.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
We're back. We're here for the final 30 minutes of the trading day, final 30 minutes of the trading week. TP, it's last call. He's Tom Preston. I'm Chris Vecchio. TP, what a week it's been. What a month it's been.
It's the never-ending bull, Chris. This is S&Ps are up again. My shorts are up and my longs are down. How can I survive? Actually, what was looking like a really ugly morning has turned into, yes, if I can hang on to this, it'll actually be a green day for my account. Up a little bit, not huge, but all my yesterday's earnings trades from Reddit, Amazon, Microsoft, what else did I do? Those are all losers, complete. Those will go out as full losses because I sold, one day put spreads, one day call spreads. So I just called all those wrong. But everything else, I'm hanging in there. Nvidia's the market's very inconsistent. So, Chris, I just pulled up some data of the S&P 500, and this was 5 minutes ago. Of the S&P 500, 266 stocks were up on the day. In the NASDAQ 100, 61 stocks were up on the day. So it's a mixed bag. The NASDAQ's a little bit stronger, just statistically. A few more, greater percentage of their shares are up on the day as opposed to the S&Ps. But just sort of, I don't know. I'm not convinced that the rally's going to hold. Partly because looking at the bond yields start to spike up, the crash in ZB and ZN. The increase in bond volatility versus the VIX, which is, what is it, Chris? Back down just above 16. It's the rise in bond volatility versus the drop in equity volatility has me concerned about equities. I don't know. What's your take on that?
I don't know if bond vol is at a place yet where I'm looking at the MOVE index right now. Mm-hmm. Bank of America U.S. Bond Option Volatility Estimate Index. So MOVE, Market Option Volatility Estimate. Okay, it's only 77 right now. Back in March when the market was really freaking out over bonds, the MOVE was up at 112. So maybe this is the start of some acceleration, but also the MOVE index is not. It's below where it was trading last Friday at this time, for what it's worth. So the MOVE is certainly accelerating. I can't believe I decided to get out early and then didn't get filled getting back in. I can't believe it.
Oh, you mean on short ZB? Yeah.
Well, I was rolling forward that long put spread you put me in a few weeks back.
Sometimes you just have to do it. And as long as the position is small, Chris, you just you play the odds, play the statistics. Personally, the way I'm expressing it right now, let's see if I get filled. I bought a put spread in IYR.
IYR.
Yeah, IYR. That's I'm surprised I was actually filled on it. That's the iShares Real Estate Trust. I don't know anything about it. It's probably a bunch of REITs, maybe some home builders. I don't know what's in it. But it is one of three big ETFs. What is it? XHB is the home builders. VNQ is the Vanguard one. XLRE And the options in those were just nobody wanted to play. I got filled on IYR. I bought the 105, 106 put spread, one strike wide in the August expiration. It just is a bearish trade on the housing sector, on real estate, because as the 10 years specifically, as the 10-year yield starts to move higher, and it seems to be, that's going to put pressure on mortgages. People just can't afford to buy this stuff. It was hard. It's going to get harder.
Mortgage rates are jumping up here today. I think they're approaching. We're going to have a 7 handle soon on the 30-year. The way that it's turning out, TP. IYR is more of the REITs, XHB, ITB. Those are more of the home builder side of things. But TP, you and I have put on so many dang trades on these last calls over recent weeks that we find ourselves looking down the barrel at a lot of expiration cycles here. So today I figured that we could head over to the little positions tab here on my particular platform and do some summer cleaning, as it were. There are a few things that are at 0 DTE, for example, like the put butterfly that we put on as a hedge of sorts. I put on as a hedge of sorts earlier this week in case things really went haywire, and it looked like it was going to go haywire for Wednesday afternoon. That was looking pretty good, but ultimately it's going to expire worthless. I do want to consider the short put spread, though, that's in here in the Russell at the 2850, 2875 level right now, though, because the thesis when it was put on back here in the first week of July actually has held up so far. I believe it was maybe around here when we first dipped. But the point was that we had a market dip between a 1 month and a 50. You like to say if it gets you into the trade, it gets you into the trade. The idea was that it would hang out above the 50 throughout the cycle, and sure enough, we're here above the 50, but we're at 21 days to expiration, so this has got to go, TP. We can think about rolling it forward later on. I don't like putting new trades on Fridays. So
I agree.
We start to ship it to get out the door. What else here? Corning. You and I put on a put spread earlier this week in Corning around their earnings. While that did ultimately fall apart, we got a rebound, and we got to bounce back. And so this now, I can't find a market for it because there's no actual bid here. Given how far
you got to do a little price discovery. What you could do? Let me see this. You could just put in like a 2 or 3 cent bid for the 27s, the 127s. You're not going to get filled on the 22s, but if you try like a 2 or 3 cent bid, try a 2 cent bid. See if somebody wants to play.
And TP, I wanted to say, I put that up there for you very specifically because Liz and I were doing this morning with Amazon, which we're going to go into in a second here. But that's one of the things you can do here when you're trying to get out of the market. If you want to change, you're going to have to take a different potential max profit loss on the trade. But you can work the market where you go a little bit under, a little bit over to see if any fish bite if you're really desperate to get out of the position. You don't need to wait to see if someone comes to you.
Yeah, 100%. But you just make sure that if there's a zero bid, there's a reason it's a zero bid. Don't go too high on it. Don't say, oh my gosh, I got to close this thing. And then the thing is, don't get too weirded out if you don't see your bid working, because some of these orders can go to liquidity providers and they'll sit there, and it's a fair market. Don't think you're being screwed. That's not the point. But you may not see it working, especially in a stock like GLW. Cisco, I wanted to do a trade in Cisco today, did not have time. What do you have on at Cisco?
I'm sitting at 7 days to expiration now. I was running a little bit close here and seeing if we could get more of a pop back above the short strike, which fortunately able to do so today. So it's only $13, but it's better than taking a loss. And a few days ago it was looking much worse than that. But as others have said around here, when you're sitting in a defined risk trade, right, and you get to max loss, if you're not going to use the capital, sometimes, depending upon the market conditions, you kind of Thelma and Louise it. You might as well drive it off the cliff. What's the worst that happens? You still have a max loss. If it rebounds and bounces back, maybe you can get out at break even or a small profit, like we just
100%
did here. But I actually still really like Cisco. Cisco looks like it wants to make another move higher again here. So start of next week, I'm going to be operating similar 110, 105, depending upon the pricing that we're looking at.
Yeah, I mean, I traded Cisco quite a bit. I don't have any positions on it right now. I actually have loaded up in here an Iron Condor with 7 days to go. That might be a little aggressive. I didn't talk about it in my 1 o'clock show. I did not have time to do Cisco, but I was just thinking, ahead of earnings. Earnings are coming out on August 12th. You don't really have much of a, thought one way or the other which way it might go. You could let me fiddle around with the strikes here. I may just, maybe like buy the 110 put, sell the 112s, sell the 120s, buy the 122s for a 75-cent credit. I think I'm going to wait on this until Monday. The markets don't look great in those options. I don't want to get screwed. But yeah, that's something that I would consider with like 5 days to go. Again, ultra short term. Anyway, Chris, what else do you have to clean up? I don't see any red on your screen.
Today's been actually a pretty good day over here. Bounce back.
Yeah, and what I mean is that the platform is really, really visual. If either I can look at Chris's positions, even though my eyes aren't good and I can't really see what they are. I can't really see what they are. I know that his in the money markers are amber, which means they're in the money, but he's got some time. They will show up as red if it's expiring. On the day of expiration, if he had anything going off this afternoon, like I have a bunch of red on my screen for my in the money short put spreads in Apple, my short call spreads in Amazon, they're just going to go out. They're just going to go through the exercise assignment, whatever. And those show up as red. So I can see immediately where I have either, something I got to think about or whatever.
So TP, along the lines of this, Liz and I were talking about Amazon earlier today because I had put on a Super Bowl earlier and it obviously wasn't working out for the past week or two, given the way that the stock was trading. But with the way that this has now moved, I do have a short put spread side of this that is sitting at the 230, 235. And right now, it's still sitting at 15 cents. I was hoping over the course of the day, maybe we'd get a little bit more run because it was up around 15% right near the open. It hasn't panned out. And so I was looking for maybe selling this off at 10 cents, but 15 is currently where it is. I see no reason to hold on to the short put spread side of this at all.
There is none. There is none.
Go ahead. Can you explain why it's for the audience?
No. So, Chris, there's none. And the reason is that would you sell, and maybe you would, but would you sell a 5-point put spread with 21 days to go for 15 cents? Would you put this on as a new trade? No. So and Chris, and if you're looking at this with your own positions, that 15 cents isn't going to help you very much if Amazon keeps rallying and starts threatening that short call side. Okay. Or the long call side. It's not going to help you. Okay. It's done. Exactly. It's done its job. Take it off and sell another put spread somewhere else.
What else can we do here, TP, at 21 days? Because we're just running through all the favorites right now. Western Digital, and then we're going to go to Google. Western Digital here has had a really nice rebound. It may have turned a corner. This is definitely something I'm interested in still trading on the long delta side. But after that big dip earlier last week and getting out, this is one of those better to be lucky than good, TP. I'm going to have to take this off at a small loss, even though we're 37 points above my short strike. Maybe I'll get filled here a little bit better. But you know what? It just got to go 21 days. It was a terrible ride. It was an awful ride. Don't recommend it. Made me feel
I got to tell you, and this is not a brag at all, Chris. This is just, what do you say? Better lucky than good or whatever it is. SanDisk was insane today. I sold the put spread yesterday in it. Stock was up, $100 to or whatever the heck it was. Oh my gosh, look at me. I'm actually profitable on SanDisk. I took the put spread off. Let me see what I actually did in there. I was short.
We did that yesterday on the show for a $1.10 credit, and I took it off for 20 cents.
I did it for $1.05 credit. So this was the 11.45, 11.50 put spread with 1 day to go. I sold mine for $1.05. I bought it back for 6 cents. You were a little bit more on top of it, Chris, and grabbed it at 10. I was probably asleep and got lucky. I bought it back for 6, and then it crashed. So what's SNDK now? SNDK 1282. So we'd still be profitable on the trade if we just held on to it. But I didn't want to take that risk. And knew SanDisk was going to drop. It was like, oh my gosh, I have a profit on SanDisk. Take it.
Yeah, and you have a profit with long deltas on SanDisk and a tape that's down 40% from the highs. Yeah, you take. But so that's I saw it shoot by the 50% threshold, and it's like, okay, I got to take the money and run it to zero DTE kind of thing, right?
100%. 100%.
Liz and I were talking about this earlier from Confirm and Send. The way that you approach the 50% threshold, when you're selling premium, it's 50% and then just move on. I was taking the view, because the question didn't ask about selling premium, is a 50% threshold kind of hard and fast? When you're on the call side, the answer is no, depending upon how much time you have left in the structure of your trade. If it's, if you have long enough in and you're at 50% 3 days into your trade with 100 days left to expiration, maybe the thing keeps running, keep it going. But selling premium, obviously, 50% is hard and fast rule.
Unless you have some other reason to hold on to the position. So, if you've done some analysis, if you have all this stuff and you think, my gosh, I think SanDisk is going to keep going higher. I think Western Digital is going to keep going higher. I think Amazon, Google, whatever, take your pick. If you think so, okay, hang on to some more profit. Just understand that, if you didn't know anything about it, which looking over my positions, I couldn't tell you boo about any one of those stocks. Okay. I couldn't say anything about them. So to me, it's just a trade. Take it off. I made 50% of max profit, take it and move on.
I'm reading Taiwanese semiconductor analyst notes and having Claude translate them for me. Look,
right.
So just totally different.
And
your way is healthier, is what I'm getting at.
Well, yeah, and so the point is, and Chris, you've done this for a long time. You know what you're doing. But my point is, what do you know that some analyst in Taiwan doesn't know? Right? Who already has a position in TSM. And maybe you can synthesize things a little bit differently. Maybe you can. Maybe you work the chart. I don't know. Maybe. But there's a point where if you believe that all the information, especially if it's a liquid option, especially if there's a lot of trading activity, is packed into the market already, just look at the options. Just look at the options. And, it's...
I'm glad you brought up TSM.
Yeah, well,
TSM, I'm at 21 days to expiration here, and I'm still above my short strike. And this is kind of like Western Digital, where 2 days ago I was staring down the barrel at a max loss. Now I could take it off for something smaller, more manageable, right? Instead of like a $600 loser, it's going to be $100. How do you approach something like this now? I know I took off Western Digital, and I'm inclined to do so again here. But
what do you have on?
400 is my short strike.
It's a 10 point for 405. I might hang on to that for another few days.
That's kind of how I'm feeling too, which is why I didn't jump to it with WDC at first. It feels a little bit different.
Only because, Chris, it's still 40% of the width of the strikes, $4. So I would consider selling that spread here. Right. I would consider hanging on to that. If you load right now, if you have it loaded up as that, right now you're making about $1. You have that in other words, what Chris has done is loaded in the buy order to buy it back. But that has, if you reverse all the numbers, it's generating $1.90 of positive theta. So he's making $1.90 in that put spread, just a one lot. That's not bad, over time. And yeah, I'd wait on that a few days if you're still bullish on TSM.
I am, and I do want to hold on to that, just like I still want to hold on to the call spread side of what's going on in Amazon. There are a few things that have kind of ish worked, not really. We had Procter & Gamble, which was a nice bounce. For me, you're, I think, a little bit better position, but I'm the 140, 145 short put spread here. It's a nice little day today. This floor, like under 140, seems like it's holding. So yes, it's at 21, but I'm inclined to hold on to it still for the foreseeable future. It being a $5 wide strike, it's still a 90. We could go in here for what, $1.94, I think, $1.93. It's decent. So there's some things that I'm cleaning up right now. There's other things that they're kind of right there. You and I, though, were together in Google, so let's go there, because this is the one that 2 weeks ago, a week and a half ago, we were both in trouble. And again, by the fortunes of the great winds of markets, the market gods, we now find ourselves back with a decent trade here. TP.
I took mine off. I'm sorry, Chris. I took my Google off. I bought that back I was short the 25.30. with 21 days. I bought it back for 77 cents.
And earlier today when I was first looking at this, I was weighing the considerations here. And when I first saw it trading, it was still trading in around $1.10. And I said, you know what? We went $5 wide. We went a third of the width of the strike. I think it went on for $1.80 or something. Maybe we can get a little bit more by the end of the day. We can do something on last call. It's now at 64 cents. So it's collapsed entirely. It's more than 50% now. So at 21 days to expiration.
Just take it off.
Take it off.
Just take it
find
off.
more opportunities next week.
Yeah, you're getting 13 cents better than I got. So think of it that way. I sold mine for $1.70. Anything under 85 cents is 50% for me. So I took mine off for 77. Done. You're getting even better. Awesome.
I'm going to just speed run the rest of these, if you don't mind. Then we'll go back to the broader markets. Novartis, that was a short put spread. That can be closed out here.
Yeah.
Take that off. We'll go back to Kimberly-Clark, which came in today, but it's still a few dollars in the pocket, so we'll see if that goes off. And then the last one, Merck. That's decent here, too. So some of these, like...
Merck. What do I have in Merck?
130.51. Maybe you joined me. We were looking at what?
I sold I'm short the 115, 120 put spread with 21 days.
As am I.
I'm going to hang on. I'm going to try to buy mine. Watch it crash over the weekend. I'm going to try to buy mine back on Monday. I want to see if I can get 50% on that thing.
Look, Merck still looks like a really nice chart from the way that I trade. Bottom left, top right, solid momentum, bouncing this week from its 1 month moving average. The short put spreads in some of these staple names, some of them have done a little bit better than others. But TP,
Yep.
I think that's the spring cleaning I want to do here for today. Some stuff that was between 0 and 21 days, stuff particularly that had bounced back over the past few sessions, right? The last 2 days have been an absolute gift. Just because you had your run, if you get to that other side of the decay curve and you get the gift that was the market the past 2 days, it's a bailout. It was a bailout, TP. I think most of those positions that we just ran through, which we were to close out here for small profits, decent sized profits, some of them closer to 80% of max profit, they were all at max loss.
Oh yeah,
on Wednesday afternoon.
Yeah.
So.
Yeah.
Didn't panic, stuck to the mechanics, wait till 21. Better to be lucky than good.
And so here's the point about trading a lot of the short-term stuff. And I have a mishmash of expirations on. But like I did over the past couple of days, trading the 1 days, yes, it's fun. Yes, it's addictive. Yeah, I'm a trading junkie. I get it. But it doesn't give you the duration. So what Chris can do, if he sells, let's say, a 40-day op spread, he can hang on to something and let the market come back to him. So that's what Chris just said is spot on. Yes, a lot of these things, the market overall sells off, and what does it do? Who knew? It blows up again, rises right up again. That took a lot of losing trades in my account and in Chris's account, turned them into small winners or significant winners. That's just the benefit of being able to hang on to positions. As long as you're not taking too much risk and you can hang on emotionally as well as financially, you'll be fine. But when you do 1 days, the payoffs are fast, but you don't have the flexibility of time. That's the trade-off.
And that's why I like peppering out these trades that are shorter term duration, which granted, I'm not really a shorter term trader. I'm getting back into it because I'm not scalping, but I'm certainly taking a look at it in a different methodology that I have in the past. And I'm finding some success with it. So I'm digging deeper into it as a tool in my toolkit here. But you have the 0 DT stuff. You have some of the 7 DT stuff. You're looking at the 45 days. You have some, like MES or MCL that's a little bit more directional. All of a sudden your portfolio, it's diversified across strategies, products, time assumptions, deltas, theta, right? And you are going to be able to survive when the market pulls back in the way that it did over the course of the past month, which we talk about this pullback over the past month here, TP. We got to keep an eye on this close for SPX, man. We may close the month in positive territory for the SPX. We closed last month at 74.99.36. We are above water at 74.05.
That's impressive.
That is an absolutely wild turn of events. Hey, guess what? July was a green month, folks. The seasonality worked.
But look at this. It hasn't gone anywhere. It's spent the past month just kind of trading in a range. And so, yeah, you can make some money on the short side. You have been able to, but we haven't seen an actual crash yet. And they come rallying right back. I have some bearish positions on in the NASDAQ. I've said that, before. I'm okay. I'll hang on to them. I'm short call spreads well above the market, but it's, I could see just selling the iron condors again. Just selling, the problem is, Chris, is with the low VIX, you're not getting rewarded for selling premium. Yes, you are. Okay, you pull your strikes in, I get it.
I actually found a decent spot for it today, what I felt like.
Well, yeah, and that's your call as a trader. That's your call as a trader. But when the volatility is low, it just makes it harder.
So the low for June was 72.92. The high up here was 76.93. So we can call it just on the other side of 73 and 77. Earlier today on Futures Power half hour, we went to the 72.50, 72.75, and then the 77.25, 50. We were looking at, and do I have this lined up correct? I don't know if that makes sense here. 1, 2, 3, 4. That looks much better. Okay, so 25 points wide, about $9 in credit received, which makes sense, a third of the width of the strike. It's also above the summer trading range. So if volatility comes in and the market starts rallying towards the top of the range, probably can take this off before it gets away from us. But that was the point, though. You mentioned, we really returned to going nowhere. We're at the midpoint of a multi-month range. To me, it's iron condor while there's a little bit of vol left in the market. Move on. Let's see what we can do with it.
As we look into August, I sold a put spread in the VIX with, what did I do? And I'm sorry, my brain isn't what it used to be. VIX, I sold the 18 days, I sold the 16-17 put spread for 35 cents, just betting that we might see a little bit of chaos in August. I don't know. What did crude oil? I didn't look at crude oil all day. So crude oil is up 1.5%, despite, I guess Trump is trying to work some deal with Hamas or whatever, and maybe who knows. But crude oil had a little bit of a rally today. I was short crude oil. I got out a few days ago when it sold off, but it's I'm going to look to trade crude oil next week. I sold an iron condor in gold in GLD, actually.
Well, TP, while we're on crude real quick, just more of that spring cleanup here, 17 days to expiration, the 62.63. This has got to go. Literally max profit. We'll see if we get filled.
You're done.
Not quite there, but 6 cents now on a dollar wide. Done.
That trade is done.
That trade is done. And then 48 days, 66.67, 94.95. I have an iron condor and a short call spread up here at 94.95. So just kind of a little bit tilt more to the downside. Keeping this, obviously. There's still a lot of time left, but more importantly, sitting dead set in the middle of a range.
Yeah. No, and people are, how much do you actually trade a day? Well, this is why the numbers get up. When you're closing positions, rolling positions, adjusting them, putting on new trades, you start to get into 20, 25, 30, 40 trades a day. It gets busy.
It does get busy. And speaking of getting busy, we're in the final 20 seconds of this trading day here. A little bit of weakness going into the close. So I guess technically we're going to finish for a red June here. We couldn't get back above 75.32 in the futures market, but it's a hell of a rebound here over the past 48 hours, TP. Where we were on Wednesday afternoon, it was a completely different world. The S&P is going to close 75. We'll call it 16, 75, 17 for this month of July. Your NASDAQ is 28,407, and that brings the VIX down to 1623 here at the close. We were near 21 2 days ago, TP. What an absolute vol crush. Hey, good news, bad news. Good news is I'm on first call on Sunday because my trip to Chicago was delayed by a few more weeks. So I will see everyone on Sunday for first call, 5:55 Eastern, 4:55 Central Time. So we're taking a brief, what do we call it, TP, around here? 49-hour, 55-minute break.
Something like that.
We can see our kids, our family. We can just go to sleep. We can watch some sports. Hey, TP, it's always a pleasure doing last call.
Thank you, Chris. And so I'm green in the day. I hope you are too. I hope everybody out there is also. And we'll see you next week.
We'll see everyone next week. Thanks for watching Tastylive this week. Thanks to the production team and, of course, you, the audience. Good luck trading. Hope you have a nice weekend. See you on Sunday.
What's up, Tasty Nation? Welcome to the show. Happy Friday. It is July 31st, almost August. Kind of crazy to say, but Amazon, oh my God. Oh my God. Happy Friday. Hope you're awake now. Amazon and Apple reported earnings after the close yesterday. Amazon is up and Apple is down. Microsoft and Meta had a divergence